Hey, hi guys, this is the Arpita Tulsyan here, and I hope you all are doing good. So, here we are with the super quick revision video for CA Final Law, Economic Laws, as well as Securities Law, where we are going to cover each and every chapter. These revision videos are specifically applicable for the November 22 examinations. Yes, specifically for November 22 examinations. And these videos I have taken from the 9th edition book, which is again applicable for the November 22 examinations. So yes, I have put the chapter wise stamps in between so that you can refer whichever chapter you want to refer as and when. And yes, if you want to refer these videos along with the book, and if you don't have the 9th edition book, you can still go with the same. You can go to our website arpitatulsyan.com and you can take the book there. Along with that, I've put the link in the description also. The link for book is available there. If you already have the book, well and good. Here are your revision videos. You are all good to go now. Try to use these videos in the best possible manner. Yes, I have tried my level best to make the content as crisp as possible. Okay. One-time sections I have told, like which sections are to be done once or once read, or which sections are not to be revised one day before the exams, which sections are important. I have tried to mark those things in the videos also. All I expect from you is use these videos to the fullest. Whatever is convenient for you. If you find it very slow, then maybe you can go at a speed of 1.5 or 2x, whatever is convenient for you. But yes, I have put all my heart into it, so just try to use it in the best possible manner. Do show some love, as you have been already doing and always doing, by commenting, by letting me know if these videos are useful for you or not. Just like you people need some motivation, even I need some motivation to bring out the best out of me for you guys. So yes, keep showering your love as you have been always doing. All the very best, and now you're good to go and you can start with your revision. Thank you so much. Okay, everyone. So let's start with the super quick revision of the chapter called as Prevention of Money Laundering Act 2002, which forms part of your economic laws. Let's start with that. Now, first of all, the name of the act is Prevention of Money Laundering. So let's try to understand the meaning of the term called as money laundering. And yes, we'll try our level best to cover maximum content of this particular chapter, so that very little things will be left for your self-study. If at all it is left, then very little things will be left for your self-study. Yes. Okay. So now going on to the meaning of the term called as money laundering. Money laundering is such an activity where we try to obtain some money illegally, and we try to show as if the money has been obtained from legal sources. Okay, we have actually obtained it from illegal sources, but we try to show as if we have obtained it from legal sources. Okay, that can be by way of illegal sources, can be anything. It can be by way of drug trafficking. It can be by way of murder, smuggling, attacks, terror attacks, etc. It can be any of those. By those means, you have earned the money, and you try to show as if the money has been earned from legal sources. This is called as money laundering. Okay, this is called as money laundering. Now, the motive of this particular act is to prevent such activities. That's why the name of the act is Prevention of Money Laundering Act 2002. Okay, so what this act is going to do, the act is going to prevent, it is going to stop, it will try to stop this money laundering. Okay, if someone has wrongfully acquired some property can be cash, it can be movable, immovable, anything. If someone has acquired, say for example, kidnapping was done, and by that person has got 50 lakh rupees of cash, or 10 lakh rupees of property, or whatever it is, then that will be confiscated by the law. confiscation of that will be provided, and then we are going to reduce, we will try to reduce or reduce the process by which money goes into these illegal activities. So overall we are trying to prevent this activity of money laundering, and we are going to take action against the person who is involved in the activities of money laundering. That can be by way of confiscation of the property also. Yes, okay. So now after that, now they say that from here basically you get into the process of the chapter. So they say that money laundering is a single process which has 3 stages in it. Okay, first one is placement, then comes layering, as you can see here on the board also, placement, layering and integration. Okay, placement is where the money comes into the picture. Okay, that crime money, that criminal money comes into the picture. That is, that person has done some illegal activity and he has earned the money. Okay, he has earned the money. Now after that, that money which he has earned from illegal sources, that is divided into small transaction, because generally a big amount transaction with a big amount comes into our eyes very soon, very early, very easily. But if a big amount is divided into small amounts, then they try to divide that big amount into small amounts, and the money is layered. Okay, the money is layered over various transactions in different accounts in different countries, in different places, etc. So that it becomes very difficult to trace the original money, that how much was the total criminal money. It becomes very difficult to trace because the amount has been divided into small things now. Okay, and then now that big amount, say for example it was 10 lakh rupees and it was divided into 10,000 rupees of 100 accounts, okay, or 100 places or different countries and different accounts, then it becomes very difficult to trace, okay, this 10,000 is criminal money, then where is the next 10,000, and so on. And ultimately your illegally obtained money has been divided into such small parts and has been put into the bank accounts. Now this money is mixed with your normal income. This money is now mixed with your normal bank receipts. So it totally loses its roots from the illegal thing, and now it will be treated as if this money is also earned from legal sources only. Say for example, in my bank account, if I put 10 lakh rupees, yes, the transaction is visible, 10 lakh rupees. But if I simply deposit 10,000 rupees in my bank account, generally no one, has a very immediate doubt that from where did you get this 10,000 as compared to 10 lakh rupees. So now when this 10,000 rupees has come into my bank account, this has been, converted from black money to white money. And now everyone has forgotten that, okay, this money was earned from the illegal sources. Okay, this money was earned from the illegal sources. That connection is totally lost. Right? So this way, first of all, the illegal money is earned. Then that is divided into small things, layered. And then after that, it gets mixed with my normal income. And now everyone forgets that this was the income which was earned from illegal sources. I hope I'm very, very clear with this. Yes. Okay. Okay, so now that was the basic part of your money laundering. Now let's take up a few important definitions which are important from your exam point of view also. So first of all, the definition of the main term, that is money laundering. So money laundering, we have already seen, it is one such thing by which you earn illegal money from criminal activities, etc. And then you try to portray as if the money has been earned from legal sources. Okay, that was the meaning of the term called as money laundering. But here now they have defined the term called as offense of money laundering. Okay, I'll just show it to you. See, here it is. They have defined the term called as offense of money laundering. Can you see this? Which is defined in section number 3. Right? Now, offense of money laundering, or we can say who is liable for the offense of money laundering. So, any person who tries to get involved in this, or any person who helps the other person to do this, or any person who is a part, who is one of the part of this particular transaction, or any person who is involved in this particular transaction, okay, which is connected with proceeds of crime. Okay, any such activity which is connected with proceeds of crime, where we are trying to hide, conceal, chupana, okay, where we are trying to hide this money, where we are possessing, हमारे पास है वो पैसा, or we are trying to acquire that money, or we are trying to use that money, and we are showing as if it is an untainted property, साफ सुथरा property, एकदम clean property, we are trying to show as if it is an untainted property, then such persons, okay, who are trying to help, who are involved in that, etc., these people will be guilty of the offense of money laundering. And हम उनको छोड़ने वाले नहीं, okay, those people, the people who are involved in this offense of money laundering, we are going to take necessary steps that we are going to study in the further part of the chapter. We are going to take steps against these people. Okay, which people, ma'am? These people, the people who are involved, the people who are assisting, the people who are a party of it, the people who are trying to help, and all those things, right? And what they are telling, they are telling that any person who is guilty of this offense of money laundering, who is doing all these things, that person will be liable till the time he uses the benefits out of this proceeds of crime. Meaning that, say for example, if I have earned a particular amount, okay, till the time that amount is utilized, okay, suppose if I have earned 10 lakh rupees and if I am utilizing 5,000 rupees, I will be liable till the time I enjoy the entire proceeds of crime. It's not that, okay, today I have done the crime, so I'll be liable only today. No, it's not that. I will be liable till the time. See, this is a continuous activity. So, I will be liable till the time that person is directly or indirectly enjoying the proceeds of crime. See, it's written here. And it continues till such time a person is directly or indirectly enjoying the proceeds of crime. I hope I am very, very clear till here, everyone. Yes? Okay. Now, this was about the offense of money laundering. From this, we got a term called as proceeds of crime. So, proceeds of crime, as the name suggests, okay, proceeds of crime is anything which is earned or any property, okay, any property that is earned from any criminal activity. Ma'am, now what is criminal activity? So, criminal activity is any such offense which is mentioned in the scheduled offense. Okay, any such offense which is mentioned in the scheduled offense, that particular activities, we can call it as a criminal activity. And if you are earning anything from criminal activity, that is called as your proceeds of crime. Very clear with this? See, just go by the name, proceeds of crime. Proceeds of crime is something that we have earned from the criminal activity. Very clear with this? Yes. Now listen, anything that we have earned from criminal activity is called as property, means any property that is earned. Now I had already told you, property can be anything. It can be cash, it can be movable property, immovable property, tangible, intangible, whatever it is, and wherever it is held, either it is located here in India or it is located outside India. Okay, that is the property. And if, say for very simple example I'm giving you, say for example, if I have someone has done kidnapping. Okay, then in that case, that person has done a criminal activity. But kidnapping will be considered as a criminal activity only if it is mentioned in the scheduled offense. Okay, so now that person has done kidnapping, and by doing kidnapping, that person has got 10 lakh rupees cash. So 10 lakh will be considered as a property. Okay, it is a property which is earned from criminal activity which is mentioned in the scheduled offense. So that will be known as proceeds of crime. And that person has earned proceeds of crime, so that person will be guilty of the offense of money laundering. I hope I am very, very clear with this. Yes, so from the definition of the term called as offense of money laundering, we got a term called as proceeds of crime. From proceeds of crime, we got two things. One is property and the other one is scheduled offense. Okay, scheduled offense is nothing but a schedule. That is the list. Okay, that is the list where name of the offenses are written. That if you do so and so offenses, it is a scheduled offense. And if it is a scheduled offense and if you have earned something from it, you will be guilty of the offense of money laundering. Very clear with this? Okay, so now scheduled offense means in the schedule they have bifurcated it in three parts: part A, part B, part C. Okay, in part A, all the offenses specified in part A of the schedule. Okay, whatever is given in the part A of the schedule, those are considered as scheduled offenses. Okay, whatever is given in part B of the schedule, if the value of offense, if the value involved in such offenses rupees 1 crore or more, then for part B, then it will be considered as a scheduled offense. Okay, say for example, a particular this thing is written. A particular offense is written in part B, then that will be coming under PMLA only if the amount involved in such offense is rupees 1 crore or more. And the last one is all the offenses as given in part C of the schedule. Okay, obviously we don't have to by heart. Okay, we don't have to by heart the name of the offenses which are given. Yes, so this was all about your offense of money laundering definition, proceeds of crime, property, and then the schedule offense. Here the major important definitions get over. Yes, you have other definitions also in the book, but these are the most important definitions. And yes, one more definition that you have to read on your own and do on your own is this one: person carrying on designated business or profession. I'll later tell you where this definition is going to be used, but just read this definition in addition. Yes. Now listen. Now any person who is guilty of this offense of money laundering, we have already seen the meaning of the term called as offense of money laundering. So if there is any particular person is guilty, what punishment that person is going to get? Okay, one punishment that we have already seen is that property will be liable for confiscation, right? That will be confiscated. That is one particular thing that we have already seen. Apart from confiscation, that person will also be liable for some punishment. Okay, that person's self will be, see, one is the property that he has earned, that will be confiscated, that is okay. But even he will be punished for that. Okay, what punishment that person is going to get? So normally, if any person is guilty of the offense of money laundering, that person will be punishable with rigorous imprisonment, which is going to be between 3 years, minimum 3 years, and which can go up to maximum 7 years. And additionally, additionally, that person will be liable for fine, and that fine can be of any amount. Okay, any amount that the authority determines. Okay, so imprisonment 3 years to 7 years, minimum 3 years, maximum 7 years, and fine of any amount. But if that person is involved in the offenses relating to Narcotic Drugs and Psychotropic Substances Act, then in that case, his imprisonment is going to be minimum 3 years, but it can go up to 10 years, maximum 10 years, and a fine of any amount. Okay, drugs thing is there, so it is a little more strict thing. So instead of 7 years maximum limit for this, it is going to be 10 years of maximum limit. Very clear with this? Yes. So if any person, see the words that they have used. Any person who commits the offense of money laundering under para 2, part A of the schedule. Remember, scheduled offenses had 3 parts, part A, part B, part C. So under part A, under some para 2, if it comes under Narcotic Drugs and Psychotropic Substances Act, then in that case, imprisonment 3 years to 10 years and a fine of any amount. Very, very clear with this? Yes. So that person will be liable with this particular punishment. Okay, this was one particular part, one basic part where we discussed about money laundering, which offense, offenses which were given under a scheduled offense, and what punishment will be applicable, what punishment will be given to that particular person who is guilty of the offense of money laundering. Now we are going to an altogether different part. This new part is something called as reporting entity. Okay, we are going to do some things about this reporting entity. Now, reporting entity means who all are covered in this reporting entity. You can take banks. Okay, banking companies are included in it. Financial institutions are included in it. Intermediaries are included in it. Person carrying on designated business or profession. One such definition which I told you that you have to do it on your own. Person carrying on designated business or profession. These people cumulatively are called as reporting entity for the purpose of this chapter. Okay, or we can say for the purpose of this particular act. Okay, now they say that, see, just try to imagine it in this way, that if some black money has to be converted into white money, ultimately it is going to be done through bank only, right? If I want to convert cash into my normal bank balance, okay, then in that case, that conversion can be done through a banking company only. Okay, one of the sources of doing this is banking company. So banking companies are vested with that, that responsibility that you have to be very careful. you have to be very careful when people do transaction through you, because ultimately, see the example which I had given you, 10 lakh rupees getting divided into 10,000 rupees. Then in that case, for banks also, they will say that why should I report this transaction of 10,000? This is a very small amount as compared to a one big amount of 10 lakh rupees. So they have told that reporting entities, banks, financial institutions, etc., they should be very careful when they are transacting with the clients. Okay, so we are going to do from their point of view now. Okay, see, yes, banks, etc., they are responsible under Banking Regulation Act also, etc. They have to be careful there also, but specifically your PMLA has told them to be careful. And whenever any client comes to them, whenever any client goes to the reporting entity, they have to do the KYC verification. You must have heard about it. Yes, verification of identity has to be done by the reporting entity, and that can be done by any of these four modes of verification. It can be done via Aadhaar authentication, that is OTP based thing, or biometric or retina scan or something like that. Authentication can be done by that method, or it can be done by way of offline verification under Aadhaar, where we submit the photocopy of your Aadhaar, right? Or you can use passports to verify the identity of your client, or you can use any other officially valid government document for doing the verification of the identity of that particular client. But reporting entity should make sure that they are compulsorily doing the verification of the identity, so that at least we come to know, we have all the details of that person available, and we know that that person is a genuine person. Right? Acha, normally this authentication under Aadhaar Act, that is OTP based, etc., generally this is used by the banking companies. Okay, see, they can use other methods also, but generally they say that banking companies should use this authentication under Aadhaar Act, that is OTP based or biometric or retina scan, etc., that method. And if other people, that is intermediaries, financial institution, person carrying on designated business or profession, if they want to use this method, then they should comply with the proper privacy standards and security under Aadhaar Act 2016, if they want to do authentication under the Aadhaar Act. And for rest 3 methods, anyway, it is going to be paper based only. It is not an online thing. So rest 3 methods can be used normally. Okay, so what they are trying to say is, if the first method is used by banks, then okay, banks should try to use the first method only. But if others are using this particular method, then in that case, they have to make sure that they comply with the privacy standards, because that Aadhaar information, that that OTP, that biometric scan, that retina scan should not be misutilized. So they have to meet the privacy standards. For banks, they assume that banks are going to meet with those standards. Very, very clear with this? Yes. So any reporting entity, whenever they are doing any type of authentication or verification, they have to use either of these methods. Very clear with this? Yes. Okay. Now listen. Now this is the next section which is coming up here is your section number 12, which talks about obligations of the reporting entity. Okay, obligations. See, why did I say reporting entity? Because this is cumulatively called as reporting entity only. Banking company, financial institution, intermediaries, person carrying on designated business or profession, etc. Obligation of reporting entity. Right? So now what is their obligation under PMLA? See, they will be responsible for different works under their respective acts, but what does PMLA has to say? Okay, so they have 3 duties. First one, they have to maintain record of all transactions. All transaction means they have listed those type of transaction under rule 3 below, which you can just refer it once. Okay, they have to maintain record of all these specific transactions for a period of 5 years from the date of transaction. Okay, for a period of 5 years from the date of transaction. Yes, this they have to maintain with themselves. The transaction between them and their client, they have to maintain record of those specific transactions. Okay, whenever they want to, whenever any PMLA official asks for the records, then they will have to furnish it. See, in the first point, they just maintained it, right? In the first point, they just maintained it. In the second point, if any PMLA authority, in PMLA, we'll see the authorities now. There is going to be an authority called as director. Director means not company's director, a government official. If director of PMLA asks for that information from the reporting entity should furnish it. Okay, reporting entity should be furnishing it. And okay, so this was the second one. And the third one is, it has to maintain record of some documents. Okay, in the first one, it was record of certain transaction which is happening. Here they have to maintain certain record of documents, the CIDR documents, etc., which shows the transaction between the reporting entity and its clients, and that it has to maintain. See, it will have to maintain when the transaction is going on, plus once the transaction is completed, it has to be maintained for a period of 5 years. Okay, it has to be maintained for a period of 5 years after the business relationship has ended or the account has been closed, whichever is later. Means when the transaction is going on between me and the bank has to maintain it. And even once the transaction is over, after that also, those documents should be maintained for a period of 5 years. Okay, ma'am, which documents? Documents which shows the identity of the clients. Example, whenever, say for example, I want to take a housing loan from bank, I have to give my ID documents also, identity documents also. I'll have to give my PAN, Aadhaar, ITR of 3 years, etc., whatever. So those documents the bank will have to maintain even after the transaction is done for a period of 5 years. Yes. So the difference between first one and third one is, in the first one you have to maintain the record of transaction which is happening for a period of 5 years from the date of transaction. In the third one you have to maintain the record of documents which shows the identity of the clients, and this has to be maintained even after the transaction is done for a period of 5 years. And whenever the director of PMLA comes to you and asks for certain information, then we have to furnish that information to them. Okay, ma'am, which record of transaction has to be maintained? So they have given that list under rule number 3, as you can see here. Under rule number 3, they have maintained. They have given it, so you can just read this once. Very, very clear with this, everyone? Okay. This responsibility is whose? This responsibility is of the reporting entity. Now, after that, the next section, that is section number 12A, this is a one-time read kind of a section. Now, the director of PMLA can call for the information from the reporting entity that we have already seen. If it calls for the information, what is the responsibility of the reporting entity? That it will have to furnish such information, and this information has to be kept confidential. Okay, it cannot be made public. It has to be kept confidential. Very clear with this? Yes. Acha, now in case of certain specific transaction, section number 12, that is obligation, was talking about general things. Okay, it was talking about general transaction. Now for certain specified transaction, reporting entity should exercise enhanced due diligence. Ma'am, what do you mean by the term called as enhanced due diligence? Means you have to be a little more केयरफुल. ठीक है, आपको थोड़ा ज्यादा ध्यान रखना पड़ेगा जब रिपोर्टिंग एंटिटी क्लाइंट के बिहाफ पे वो स्पेसिफाइड ट्रांजैक्शन कर रहा है. ठीक है, देखो नॉर्मल ट्रांजैक्शन के केस में तो ठीक है, जो कंप्लायंसेस बोला है वो सब तो करना ही करना है. But if the reporting entity is doing some specified transaction, then in that case the reporting entity has to be more careful, because the chances of issues increase there. The chances of problems increases there. Okay, so now before it enters into such specified transaction, first check the identity of the client by any of those 4 methods. Okay, check the ID of the clients. Okay, then after that, check the ownership and financial position of the client. Ownership and financial position of the client, that whether the client is financially stable or strong to do this specified transaction. Right? And then find the purpose behind doing this particular transaction. Means, see, till now we were just verifying the identity of the client. Now we are even going into the depth of the transaction and we are checking that. Okay, now if the reporting entity, after doing all these things, if it thinks that no, everything is okay, then it will allow the client to carry on that transaction. But if it thinks that no, something is suspicious, okay, or some issue is there, etc., then it will ask for some more information. If it asks for some information and now if it is satisfied, then okay, no problem, you can do that transaction. But if you're still not satisfied, then in that case, the reporting entity should not allow the client to enter into such a transaction if it still thinks that it is suspicious. Very, very clear with this? Yes. Now, ma'am, what do you mean by this specified transaction? So, specified transaction is cash deposit or cash withdrawal exceeding a certain amount. Forex transactions are there. High value transactions are there. Import transactions are there. Any transaction which may involve money laundering or which may lead to terror financing, those transactions are called as your specified transactions. So whenever the reporting entity is doing any specified transactions, okay, whenever the reporting entity is doing any specified transaction, the reporting on behalf of its client, then the reporting entity has to be very careful. It has to exercise, what is the legal word that you're going to use? It has to exercise enhanced due diligence. Very, very clear with this? Yes or no? Okay. Then after that, this was about the reporting entity thing. Now going on to the PMLA authority. Okay, going on to the PMLA authority, where we are going to discuss about the directors. Okay, where we are going to discuss about the director of the director is nothing but the government official who is there under the PMLA. So what powers this particular person has got? Three main powers that he has got. First one, he can conduct inquiry on reporting entity. See, he has got the rights on the reporting entity. Remember, if director asks for any information, reporting entity will have to furnish it. So he can conduct inquiry. Okay, that is one thing. It can tell the reporting entity, please get your accounts audited by a CA, even if it was done earlier. Doesn't matter. Okay, even if it was done earlier, doesn't matter. Please get your records audited. Okay, that is one thing. Acha, expenses for this audit will be borne by the central government. Okay, and another thing, if suppose the reporting entity or the officers of the reporting entity, that is directors and employees of the reporting entity, if they fail to comply with the obligations, then the director can give them warning. It can direct them to comply with the instructions. It can tell them to do periodic reporting, do me reporting on every weekly basis or something, so that we can have a control over you. Or it can impose penalty which can range between rupees 10,000 to 1 lakh for every one single mistake. Did you understand this? Yes. So three main powers of the director. First one, it can conduct inquiry. Second one, it can tell the reporting entity to get its records audited. And the last one, if they still fail to comply with the obligations, then the director may issue warning. It can tell them to comply with certain instructions. It can tell them to do periodic reporting, or it can even impose penalty which is going to range between 10,000 to rupees 1 lakh for each fail. Very, very clear with this, everyone? Yes. Okay. So these are whose powers? These are the powers of the director. Ma'am, which director? Director of the director under the PMLA. Okay. He is nothing but the government official. I hope I am very, very clear till here, everyone. Yes. So before that, we did about the definitions. Then we studied about the reporting entity, its obligations and all those things, how to verify the identity of the client and all that. Then after that, we came on to the directors. Very, very clear with this? Yes. Now going on to the next important part, that is attachment, adjudication and confiscation. Okay, attachment, adjudication and confiscation. We are again going on to the punishment of money laundering. You remember we had done under section number 4, punishment under money laundering was rigorous imprisonment and fine. Okay, that was one thing that will be applicable. Along with that, this attachment, adjudication and confiscation of the property under money laundering will also be done. Remember in the beginning of the chapter, we had seen that particular property which is involved in money laundering, that will be confiscated. This is what we had seen. So now how it is going to be confiscated? What are the steps that we are going to see here? Now the first thing which is going to happen here is something called as provisional attachment of the property. Okay, something called as provisional attachment means the property which is involved, on which we have a doubt that this is involved in money laundering, that will be provisionally, temporarily it will be attached. Okay, who has the power to do this provisional attachment? So till now we have seen an authority called as director. Remember, we have seen an authority called as director. So there should be a director not lower than the rank of deputy director. Okay, means he should be at least of the level of deputy director, who is authorized by the director. Director is the topmost person in the authorities, and then there should be a deputy director who is authorized by the director, that if you have reasons to believe that the property is involved in the offense of money laundering, then in that case this deputy director or any of the above officer, they will forward a report. Okay, they will prepare a report and they will give it to the magistrate of a court that I have a doubt, I have a strong doubt that the property is involved in the offense of money laundering and we need to do provisional attachment. Very clear with this? Yes. Acha, sometimes it may so happen that it is an emergency situation that we do not have time to forward a report to the magistrate or the court and we have to immediately do the attachment, provisional attachment. Then in that case, it can first do the provisional attachment and then it can go and submit the report to the magistrate or the court. Okay, by default the sequence is first you have to give the report to the magistrate and then you can do the provisional attachment. But suppose if it is such an situation where it is an emergency condition, then first you can submit the report, first you can do the provisional attachment and later you can go and submit the report. Okay, see here it is written. Therefore, in this emergency case, forwarding the report to magistrate or court is not a prerequisite requirement. Right? Achha, once the property is provisionally attached by this director not below the rank of deputy director, after that this provisional attachment will be valid for a period of 180 days. Okay, whenever the provisional attachment is done, it is going to be valid for a period of 180 days. And suppose if there is any stay in between by High Court, if any stay order was passed, then that extra time period you are going to get, means that stay period is going to be excluded, and plus just because stay was imposed, you will get some free extra 30 days also. By default, provisional attachment is valid for 180 days. Suppose if in between, say for example, my 45 days were wasted because of stay order, then I will get extra 45 days plus extra free 30 days. For that particular period, my provisional attachment is going to be valid. Okay, as soon as your provisional attachment is done, within 30 days of provisional attachment, a report will be submitted to the next level of authority called as adjudicating authority. Okay, adjudicating authority is the next level of authority to whom the who is going to come into this particular chapter. First level is your director, next level is going to be your adjudicating authority. So once the director has done the provisional attachment, from there within a period of 30 days, he is going to go and submit a report to the adjudicating authority that, sir, I have done this provisional attachment. Okay, now the ball is in the court of the adjudicating authority. Everything comes in the hands of adjudicating authority and the work of director gets over there for the time being. Okay, now the matter comes in the hands of adjudicating authority. Once the adjudicating authority receives the complaint from the director, and if adjudicating authority is of the opinion that yes, so and so person, okay, that accused person has some proceeds of crime, then the adjudicating authority will give a show cause notice to that person of 30 days. That is, that person has to reply within a time period of 30 days, and we will ask him, tell us from where did you earn this money. Okay, give all the evidences and why we should not confiscate your property. Give us the reason for that. Show cause why such property should not be considered as if it is involved in money laundering. Okay, so first director did everything. Okay, first director did everything. Director did the provisional attachment. Now director filed a complaint with the adjudicating authority that, sir, I have done provisional attachment according to me. Now you say whether we should do the attachment or not. Now the matter comes in the hands of adjudicating authority. Adjudicating authority gives a show cause notice to that accused person that why we should not consider as if this property is involved in money laundering. Okay, then after that that particular person is supposed to reply within a time period of 30 days. Suppose if he replies satisfactorily, then no problem, then that property will be released. Okay, if AA is satisfied, then the property will be released. But if that person does not reply or the reply is unsatisfactory reply, then in that case, AA will take the decision, adjudicating authority will take the decision, and it can confirm the provisional attachment. It can confirm the provisional attachment means it will say that, okay, provisional attachment is converted into actual attachment. Very clear with this? Yes. Acha. Now, once attachment order is passed, after that, see, first level was provisional attachment, second level is attachment, and the final level is going to be the confiscation order. Okay, confiscation order is passed by the special court. So once the attachment is done, after that, within a time period of 365 days, okay, within a time period of 365 days, special court will have to pass the confiscation order. Can just pass the attachment order. AA cannot pass the confiscation order. Okay, so special court will pass the confiscation order within a time period of 365 days. Suppose if there is any stay in between, then that extra time period of stay will be given, will be added for the special court. A year you are not going to get that free 30 days. Huh? That free 30 days was available only for provisional attachment. Here, whatever is the stay period, that much time period will be added. If special court is of the opinion that offense of money laundering is done, then the property will be confiscated and it will go in the possession of central government. If special court is of the opinion that no, money laundering is not at all there, then the property will be released. I hope I am very, very clear with this, everyone. Yes, so this way, there were 3 steps. First one is provisional attachment, second one is attachment, and the last one is confiscation. Provisional attachment is done by the director. Then the matter is handed over to the adjudicating authority. Adjudicating authority will give a show cause notice, etc., and it will take the final decision and whether attachment should be done or not, and it will give the matter in the hands of special court. Then finally, special court will take a time period of 365 days and it will identify whether confiscation should be done or not. If it says that yes, confiscation should be done, then in such a case, the confiscation will be done by the special court and the property will be handed over to the central court. I hope I am very, very clear with this. Yes, and now listen, whenever the property goes in the hands of central government, okay, whenever the property goes in the hands of central government, it goes free from all the encumbrances. Means whatever is the liability attached with the property, that does not go to the central government. Okay, suppose one of my asset goes to the central government and that asset was mortgaged with a bank for a bank loan. So central government won't take up my bank loan also. Okay, it will just take the benefits of the property. It will just take the property. It will leave all the liabilities with us only. Yes? Okay. And then this property will be managed by a person called as the administrator appointed by the central government. So the property has finally gone from our hands to the central government. Right? And now in central government, it is going to be handled or it is going to be looked after by a person called as administrator. I hope I am very, very clear till here, everyone. Yes, so now one more thing, one last thing which I have to tell you here is, suppose when we talk about provisional attachment, okay, in provisional attachment, it's just that the restriction is you cannot sell off the property. Okay, the property is still yours. You can use the property, but you cannot sell off the property. You cannot deal with the property. You can still use it. Okay, once attachment is done, you lose all the rights over the property. You cannot use it. Okay, you've lost the ownership of the property. The property is just kept with you. Okay, the property is just kept with you. The possession is with you, but you cannot do anything with it. But when confiscation happens, okay, in case of confiscation, the property goes from your possession also. Means you do not even have the possession of the property available with you now. You have lost the ownership, you have lost the possession, you have lost the right to use that particular property. Very, very clear with this? Yes. Okay, so now let's go ahead with the next part. Okay, first thing that we did was, see, let's try to connect with that. First we did was someone has done the offense of money laundering, so that person will be guilty of the offense of money laundering and he will be punishable. Okay, one thing is he will be punished under section 4, that is, he is going to be given that imprisonment and fine and all those things is going to happen. Okay, that we have already studied in section number 4. Then after that, that person was if any property he has earned, then that property will be confiscated. For that, the entire process we have just studied: provisional attachment, attachment and confiscation. Acha, now if we have already seen that that person will be imprisoned, okay, rigorous imprisonment, 3 years to 7 years, and in case of drugs it is going to be 3 years to 10 years. That thing was applicable. Right. So now, if we have to give imprisonment to that particular person, then in that case, can I say that person will have to be first arrested? Okay, he will be arrested, he will be taken into custody, he will be questioned, and then an imprisonment is going to be announced anywhere between 3 years to 7 years or 3 years to 10 years. So now who is going to go and arrest that particular person? So again, the director, okay, director or deputy director or any other officer as authorized by the central government, if they have that same reasons to believe in writing that so and so person is guilty under the offense of money laundering, then he can directly go and arrest such particular person. He will just inform him that we are arresting you under Money Laundering Act and no arrest warrant is required. Okay, no arrest warrant is required and we can directly go and arrest this particular person. Okay, director has the power that it can go and arrest that particular person. Reason, this order copy, etc. we will go and just forward it to the adjudicating authority. Director will just forward it to the adjudicating authority, informing that we have arrested so and so person. Once that person is arrested, he will be taken before the special court or the judicial magistrate or metropolitan magistrate within 24 hours of his arrest, excluding the travel time required. Okay, excluding the travel time, within 24 hours he should be presented before the special court or the judicial magistrate or metropolitan magistrate. Okay, this is how the arrest process happens, and once he is arrested, after that the entire trial of the case, etc., the proceeding of the case will be done by the special court. Very clear with this? Yes. Okay, now listen, this was one particular part where we discussed about punishment, confiscations and all those things, right? Now, suppose if someone is not happy with these orders, okay, someone is not happy with these orders. Say for example, you remember powers of the director. Director had the power to conduct inquiry. It can tell you to this, do this. Get your accounts audited, it can issue you warnings, it can tell you to do periodic reporting, etc. That order was passed by whom to whom? That order was passed by the reporting entity, by the director on the reporting entity. Can the reporting entity be not happy with that particular order? That is possible. So if reporting entity is aggrieved, okay, if reporting entity is aggrieved by an order of director, then it can go and file an appeal before the appellate tribunal. Okay, now we are going into the appeal procedure. So it can go and file an appeal before the appellate tribunal. Or if the director is not happy with the order of AA, when will director not be happy with the order of AA? Suppose director did provisional attachment and it expected the AA to do the attachment, but AA says no, let's release the property, no money laundering is there. Then director is not happy with the order of AA, then director can go to the appellate tribunal. Or if that accused person is not happy with the order of adjudicating authority, when will accused person not be happy with the order of AA? If AA says that yes, attachment should be done, then that accused person who might be involved in the offense of money laundering, that person can go and file an appeal before the appellate tribunal. Okay, only in these cases appeal is possible. Right? Only in these cases appeal is possible, and the first level of appeal is we can go and file an appeal before the appellate tribunal. Okay, now you can go and file an appeal within a time period of 45 days from the date of receipt of the order. Whenever you received this particular orders with which you are not happy, from that day within 45 days you can go and file an appeal. And suppose if there is any sufficient cause that you were not able to file it within 45 days, then no problem. If there is any sufficient reason, then AT can condone that delay. Okay, then the decision, now the ball is in the court of the appellate tribunal. AT will give ROBH, reasonable opportunity of being heard, to all the parties who are there, and then it can pass a final order. Either it can confirm the order, it can modify, it can set aside, and then the order will be communicated to all the parties. Very clear with this? And AT will try to dispose of the appeal. It will finish off this particular case. It has to try to dispose it off within a period of 6 months. See, we have to go and file the appeal within a time period of 45 days. Okay, then when the matter goes to the AT should try to dispose it off within a time period of 6 months. Right? So now AT has basically given its decision. AT is a tribunal. It is a bench which consists of at least 2 people. So there also the decision has to be taken by majority in case of AT. Suppose if there is a dispute between the members of AT itself, then either the chairperson of the AT will involve himself or one more person will be introduced in the AT and then they will take a revised majority. So AT is nothing but a bench, just like we say benches in the High Court, benches in the Supreme Court. Same way AT decision will also be taken by majority only. Okay, now say for example if we are not happy with the order of AT, okay, if we are not happy with the order of AT, then in that case we can go and file an appeal to the High Court. Any person who is not happy with the order of, who is aggrieved with the order of appellate tribunal, then you can go and file an appeal before the High Court on any question of law or question of fact. It can be anything. This appeal we can file within a time period of 60 days. Appeal can be accepted even after 60 days if there is a sufficient cause. Okay, and now PMLA cannot say that High Court should dispose of the appeal within so and so time, right? So within a time period of 60 days, within a time period of 60 days, you can go and file an appeal before High Court. And suppose if you were not able to file it within a period of 60 days, then the delay can be condoned, but by a maximum period of 60 days only. Okay, here there is a maximum period, that is you can go within 60 plus 60 days. When it was appellate tribunal, then it was 45 days plus any number of days. Here it is 60 plus 60 days, you can. Yes, so your appeal procedure gets over here. Okay, appellate tribunal was the first level and High Court is the second and the last level, where you can go and file an appeal. Very clear with this? Okay, appeal authority is altogether different. Now, do you recollect where did we have special courts coming into picture? When confiscation order was to be passed, that will be done by the special court. So for that we require a special court. Okay, now suppose if imprisonment and fine, punishment under section number 4 is to be given. Punishment under section 4 is to be given, even that will be determined by the special court only. Okay, so ma'am, what is the special court? What is the special court? Special court is nothing but your session courts. You must have heard about session courts, right? So special court is nothing but a session court which is just designated, okay, which is just designated as a special court. Okay, now special court will come into picture. It will do trial of the offences and it will give all the punishments and it will announce all the punishments. Okay, now this section number 45 is going to be an important section. Okay, you can just mark it as important. You can also see how we have given the reference of these question numbers and all those things. Now listen, whatever offences are done under PMLA, they say that all those offences are cognizable and non-bailable. All offences under PMLA are cognizable and non-bailable. Okay, cognizable means what? Cognizable means arrest without warrant. I had already told you this actually, where that particular person, whether director or deputy director or any officer authorized by the central government, that person can go and arrest any particular person without an arrest warrant. So this we already know. And after arrest, that person cannot be released. Okay, that person cannot be released on bail. This is another thing that we have seen here. Okay, so they say that by default, you can go and arrest without an arrest warrant, and that person can be released on, that person cannot be released on bail. Okay, now for this bail thing, there is an exception. See, arrest you can do without arrest warrant, no exceptions to that. That person cannot be released on bail. This was a normal process, but there is an exception. If that person has to be released on bail, then there is a legal process that is to be followed. We have to go and give an opportunity to the public prosecutor to oppose. Like, what is his opinion? Should this person be released on bail or not? Suppose if he says release that person on bail, then that person can be released. But if he says no, that person cannot be released on bail, but still the special court is of the opinion that we can release that person on bail, then we can release that person on bail. Okay, so we are just taking the opinion of the public prosecutor. Okay, we are not taking the decision of the public prosecutor. We are just taking an opinion of public prosecutor, that what is his opinion, should that person be released on bail or not. Once he gives his opinion, final decision will be anyway taken by the special court only, that if that person has been arrested, should we release him on bail or not. Okay, so if special court is of the opinion that he won't commit any new offense while he comes out on bail, then we will release him on bail. Okay, apart from that, if there is any person who is arrested, if he is under the age of 16 years, or that person is a woman, or that person is a sick or infirm person, or he is accused of this offense of money laundering for an amount less than rupees 1 crore. Okay, if he is accused for less than rupees 1 crore or less than 16 years, woman, sick, infirm, etc., then that person can be released on bail if the special court says so. Okay, exception. See, releasing on bail does not mean releasing them permanently. Releasing on bail means releasing them for a temporary period. Right? So see, why this section, ma'am? Basically, they say that person can be arrested without an arrest warrant. That is an established fact. And the other one is that person cannot be released on bail except in these few circumstances. Okay, these are certain legal procedures. Okay, till here basically the important part of your chapter is done. Okay, till here important part of your chapter gets over. Now certain procedural things are there which we'll just do an overview of. Now there are two definitions. One is definition of a contracting state. Contracting state means any country outside India or any place outside India with which Indian government has a treaty. You must have heard about double taxation avoidance agreement. We have DTAAs with different countries. Same way we have PMLA treaties also with the other country, by which we can help the other country also, and we can also get the help from other country. We can share information with them, we can prevent money laundering, and all those things can happen. Very, very clear with this? Yes. So, contracting state is any country outside India or any territory outside India with which Indian government has a treaty. Okay, contracting state. Now see, why are we studying about different country or other country in PMLA? Because it can so happen that we are involved in the offense of cross-border implication. Okay, we are involved in the offense of cross-border implication. Cross-border implication means what? Means where two countries are involved. India is also involved and some other country is also involved. Okay, means where some person, one circumstance can be someone has done the offense outside India. Example, murder has been done outside India. Murder has been done outside India, but the proceeds of crime has been transferred to India. Then yes, PMLA will be applicable. Even if the murder was done outside India, but the proceeds of crime has been transferred to India, PMLA will be applicable. Means Indian government can take steps. Acha, vice versa. Suppose if offense has been committed here in India, okay, then to gone. Then to you are definitely liable, even if you have transferred the proceeds of crime outside India or you have tried to transfer the proceeds of crime outside India. Doesn't matter. It is going to be constituting as an offense of money laundering, and it will be mainly considered as offense of cross-border implication. And if it is a cross-border implication, then PMLA will be applicable. Very, very clear with this? Yes? Acha. Now, we just discussed about this contracting state. Contracting state is nothing but what? Contracting state is nothing but the territory or the country outside India with which we have an agreement. So, if we have an agreement with foreign country, then what is the purpose of that? Okay, so that we can, make PMLA applicable outside India also, so that we can exchange information for various purposes with the other country. Okay, suppose if some offense has been done here in India, but some evidences are there outside India. Okay, then in that case, if we have this treaty, then we can gather the information. We can request for the information from the other country by submitting them a letter of request. Okay, we can give them a letter of request that, sir, we have a treaty, we can exchange information, we require certain help, so please provide us so and so information. Okay, similarly, even the other country can ask for help from us. So we will provide them the necessary assistance. Okay, we will provide them the necessary help, we will provide them the necessary information that they require for completing this case of money laundering. I hope I am very, very clear till here, everyone. Yes. Okay, then there are a few sections given here. Section number 58A, 58 series, 59 series. These are one-time read sections. You can just refer it once. You can just read it once. It is very, very simple. Okay, but let's not. I've decided not to cover that in the super quick revision. Otherwise, it becomes very lengthy. Another thing here is section number 62 and 63. Yes, these two sections you have to do. Basically, these two sections are talking about punishment. Before this, we have discussed about punishment under section number 4, right? Now, what they are telling us here is, say for example, if any authority is conducting any search, seizure in any particular premises, and if it is doing so without recording the reasons in writing, if any authority wants to do that, it has to mandatorily record the reasons in writing and then only it can do. But if it is doing without following the procedure, then that officer will be liable for imprisonment up to 2 years or fine up to 50,000 or both. That officer will be liable, and that is called as punishment for vexatious search. Search done for fun. Vexatious means टाइम पास के लिए सर्च किया हुआ है या फिर बिना प्रोसीजर फॉलो करके सर्च किया हुआ है, तो हम उस अथॉरिटी को ही पकड़ लेंगे और उसको ये पनिशमेंट दे देंगे. दिस इज इम्प्रिजनमेंट और फाइन और बोथ. तो अथॉरिटी को भी बहुत केयरफुल रहना पड़ेगा, राइट? अच्छा, सिमिलरली इफ समवन गिव्स अ फॉल्स इंफॉर्मेशन, okay, someone gives a false information about some XYZ person that he is involved in the offense of money laundering, go and punish him. Then that person who willfully does this, that person will also be liable for same imprisonment up to 2 years or fine up to 50,000 or both. Okay, so if someone is trying to falsely accuse me, then that person will be liable. If the officer is not doing a proper search, then that officer will also be liable. Very, very clear with this? Yes. And then another thing here which is to be done is this one, section number 69, recovery of fine or penalty. Whenever any fine or penalty is imposed under this particular law, that has to be paid by that accused person within a time period of 6 months. If not, then the directors or the authorities can recover it as per income tax provisions. Okay, they can recover it as per income tax provisions. That is to be kept in mind. Okay, and the next section, that is offenses by the companies. See, whenever PMLA offense is done by an individual person, then that individual person will be liable for imprisonment, he will be liable for fine, he will be liable for confiscation, etc. It is very simple. But what if it is done by a company? Then who will be liable? Then the person in charge of the company at that particular point of time, that person will be deemed to be guilty and he will be proceeded against. Okay, but if he says that he had exercised all the due diligence, it was done without his knowledge, then we can excuse him if the authority is satisfied. Otherwise, the person in charge of the company is going to be liable. Okay, ma'am, who person in charge? It can be director, manager, secretary of the company, whoever was involved in that particular thing during that particular time. Yes. Acha, suppose if some case was going on under PMLA and that person has passed away or that person has become insolvent, then they say that, suppose if that person has passed away, then the case will be continued against the appeal can be continued, the case can be continued by the legal representative in case of death. And if that person has been declared as insolvent, then the case can be continued by the official assignee or the receiver who is appointed in case of insolvency. Okay, so in case of death, it is going to be legal representative. In case of insolvency, it is going to be official assignee or receiver. Suppose if appeal was not filed by that original person, so even these people can proceed ahead and they can go and file the appeals. Very clear with this? Yes. Acha. Then the next thing, last thing that we have to see here is money laundering just siphoning of the funds? Siphoning of funds means misutilization of funds, using business funds for personal purpose and all those things. Okay, money laundering is even beyond siphoning of funds. In money laundering, the original source itself is illegal. The siphoning of funds is you have earned some activity from business and now you're using it for personal purpose. Okay, that is one issue. But money laundering is even beyond it. Money laundering says that I have earned the money, the source of the money itself is illegal. So money laundering is not just siphoning of funds. Money laundering is much more than the siphoning of funds. Very clear with this? Yes. And then at the end of this, I'm using the 9th edition book, and at the end of this, you have been given the time periods. See, 45 days appeal for 80, and 80 should try to dispose it off within 6 months. For High Court, it was 60 plus 60 days. Provisional attachment was valid for a period of 180 days. After attachment, the confiscation should be done within a time period of 365 days. So at the end of every chapter, the important time periods and the penalty, punishment, etc., those things have been given. Yes. So this was all about the important provisions. Okay, this was all about the important provisions of PMLA. Definitely, it is not possible to cover each and every detail and each and every section under the super quick revision. So for that purpose, also in your book at the end of the chapter, you have been given everything. Okay, like the summary notes, etc. are also given. So you can simply use that. And after doing this super quick revision with me, you can just go and read the textbook once. So you will be totally thorough. Yes. Okay. Okay, so let's start with the super quick revision of a new chapter, that is the Arbitration and Conciliation Act 1996. Very simple chapter, comparatively a smaller chapter. Let's try to revise all the important provisions or all the important contents of this particular chapter. Yes, so this particular act is going to talk about new methods of dispute resolution. Okay, new methods. See, now one thing we know is, if suppose there is a dispute between two or more persons, then to resolve that particular dispute, we go to the court. Okay, we go for litigation. But that is one of the traditional method of dispute resolution. New methods, okay, new methods of dispute resolution can be it can be arbitration, it can be conciliation, it can be mediation, it can be negotiation, and all these things. Okay, so these methods which I just mentioned, these are there in this particular act called as Arbitration and Conciliation Act 1996, and provisions relating to these are covered in this particular act. ठीक है, अभी जैसे झगड़ा हो गया तो हमको पता है कि लिटिगेशन में जाके वो झगड़ा सॉल्व हो जाएगा, लेकिन वो चीज हमको भी पता है कोर्ट केस है तो वो कितने लंबे टाइम तक चलने वाला है. ओके, सो फास्टर मेथड हो गया, ट्रेडिशनल मेथड बोलो, जो कुछ भी है वो इस एक्ट के अंदर अपन को दिया गया. Okay, now as the name suggests, arbitration and conciliation, let me tell you, the scope of conciliation in our syllabus is very less. Okay, we just have basics of conciliation in our syllabus, but yes, arbitration has been covered in a very decent manner, so we will get a whole idea of this particular thing. Okay, so this is the introduction which we can, yes, definitely skip in the super quick revision lectures, but don't worry, we are not going to skip on any concepts. So what coverage is there for our exam? See, everyone here, okay, provisions relating to arbitration, arbitration agreement, arbitration tribunal, and then about the conciliation proceeding. So from here also you will understand major things that we are going to study is about the arbitration only, and then we have got an overview. Okay, we have kind of got an overview of conciliation. Anyway, whatever is there in our syllabus, we are going to do that. Yes, acha. So now as I have already mentioned, these methods, arbitration ho gaya, conciliation ho gaya, these methods are an alternative method of dispute resolution. Now why alternative method? Because the basic method, okay, the normal method of dispute resolution is going to the ordinary court system. Okay, going to the normal court, that is the basic method of dispute resolution. And now we want faster methods, now we want modern methods of dispute resolution, and hence these methods, arbitration, mediation, conciliation, negotiation, these methods are being used. Okay, now this can be a MCQ type of a thing. Two most common methods of ADR are arbitration and mediation, and in that also we are going to mainly study about arbitration. Yes, now all these methods, arbitration, conciliation, mediation, negotiation, these look similar, okay, they look similar, but okay, but they are different. Little differences is going to be there between each of these methods. Okay, now ma'am, why these methods? Like we already had the litigation system, we already had the court system available with us, then why this alternative method? So now obviously for going to the court, okay, for going to the court, legal expenses were involved, lawyer expenses were involved, time cost was involved, and all those things were there. So here it takes comparatively it takes lesser time for dispute resolution. Okay, there is a high level of confidentiality. The matter is there only between the problem solver and the problem creators. Okay, matter is there only between them. Okay, here the cost involved is comparatively lesser. Okay, in case of arbitration, it is such a method we will study. Here, generally, okay, generally, not always, but generally, we get a situation or we get a conclusion where it is a win-win situation. Okay, where it is a win-win situation, that way. But yes, along with advantages, there come some disadvantages also. Okay, there should be, since there is no law kind of a thing involved here, since there is no court or legal thing involved here, so we need cooperation among the parties. Okay, so there are some disadvantages, but more weightages of the advantages only, and that's why nowadays people opt for arbitration instead of going to the court of law. Very, very clear with this? Yes, and these are the laws. Okay, these are the laws which comes along with your alternative method of dispute resolution. So the primary act which is there is the Arbitration and Conciliation Act, and then these acts are going to come into picture. Means we are going to take certain provisions for implementing the arbitration. Okay, ma'am, you have been telling so much about arbitration, but what is this arbitration? What is going to happen in this arbitration? So arbitration is, from here basically we are going to study everything only about arbitration. Huh? Okay, so now from here onwards, arbitration is such a method. Okay, arbitration is such a method of dispute resolution, problem solve. ठीक है, कुछ तो problem खड़ा हो गया, उसको solve करने का arbitration उसका method है. ये problem solving, this problem will be solved by whom? It will be solved by a third party who is a neutral person. ठीक है, जो इसको भी नहीं जानता, इसको भी नहीं जानता, who does not know either of the parties, he is a neutral person and who is going to give a final decision. Okay, that is, he is such a person who is going to give a final decision. So both the parties are there, they appoint a third party. That third party is called as what? That third party is called as arbitral tribunal. Okay, that third party is called as arbitral tribunal, or you can call that person as arbitrator. Okay, you can call that person as arbitrator. And then he is going to listen to both the parties, he is going to apply his brains, and then he is going to do the adjudication, that is problem solving, and he will give a final decision. Final and binding decision means it is going to be applicable on everyone, right? And this is called as what? This is called as, this final decision in this particular act, it is called as arbitral award. Okay, it is called as arbitral award. Okay, so both the parties are there who are into dispute. They appoint a third party called as arbitrator or arbitral tribunal, and then that arbitral tribunal is going to give a final decision which is called as arbitral award. Very clear with this? Okay, now going ahead, now there are going to be some particular things which we are going to study about arbitration, starting with basic features, characteristics of arbitration. So arbitration can happen only if there is an arbitration agreement. Okay, arbitration can happen only if there is an arbitration agreement between the parties which states that yes, both the parties are desirous of entering into an arbitration agreement. They are desirous to get their problems solved by way of arbitration. So they want to arbitrate their dispute, that is going to be written in the arbitration agreement. If there is no arbitration agreement, then you cannot go for arbitration. Yes, so first of all, agreement should be there, and then there should be an arbitrator. Arbitrator was a third person who is going to resolve the dispute. He is just like a court's judge. He is not a court judge, but he is just like that particular person. He should be neutral person, he should be an unbiased person, and he should be an independent person altogether. Very clear with this? Yes. And then comes, there is something called a seat of arbitration. Seat of arbitration means which legal system will apply when you go for arbitration. Okay, sometimes it so happens that, see, we know that arbitration is kind of a private method of problem solving. Okay, but there has to be some overview by the court also. Court also will keep an eye on us. Okay, so some legal procedure is going to come into picture, some law is going to come into picture. So which laws will apply? Indian laws will apply or foreign laws will apply? That we will have to check. So yes, if it is a domestic arbitration, if both the parties are of India only, then obviously Indian laws would apply. But if it is an international commercial arbitration, where one of the parties of outside India in the dispute, then in that case, Indian laws or foreign laws can help to solve this particular arbitration issues. Yes, then comes the party autonomy and procedure. Okay, there is something called as party autonomy and procedure. Party autonomy means freedom. Okay, henceforth you can just remember this point as freedom point. Party autonomy and procedure. Arbitration is such a process which gives the party the choice. You can choose which laws to apply. Example, we just saw above, seat of arbitration. Indian laws will be applicable in case of domestic arbitration. How are you going to solve this problem by way of arbitration? Like, are you going to do all oral arguments or are you going to do all written arguments? Where are you going to meet? Who is going to be your arbitrator? In court, we do not get the opportunity to decide who is going to be our judge, right? But here you have got all the freedoms and ultimately a problem is going to be solved. So that freedom is there in arbitration, which is not there in your litigation. So party autonomy is one of the most special feature of your arbitration. Very clear with this? Yes. Then comes the next one, that is finality of outcome. Finality of outcome is nothing but arbitral award, that is the final and binding decision. Okay, so now here, since the decision is given by the arbitrator and he has taken the decision after giving both the parties sufficient time to, provide their explanations, and generally, like I told you, the outcome is going to be a win-win situation only. So they say that usually appeal is not possible. Why we should not allow appeal? Because anyway decision has been taken in favor of all the parties. So they say, except in certain cases, they have given here exceptions, except in certain cases, appeal is not possible against the arbitration award or against the arbitral award. Okay, otherwise unnecessarily it will lead to more time, like the process will take a little more time. Very clear with this? Okay, then comes confidentiality. Yes, now if any particular case goes in the court, its outcome becomes a case law. We already know that its outcome become case law, right? But if anything goes for arbitration, it does not become a case law because their confidentiality is there, matter does not come out, and that leads to safeguard of goodwill. अरे अपना नाम खराब होते होते बच जाता है ना, दो पार्टनर्स के बीच में मानो अगर डिस्प्यूट है, ठीक है, या फिर कंपनी में दो पर्टिकुलर टीम्स के बीच में डिस्प्यूट है और अगर वो मैटर बाहर नहीं आता, अंदर ही अंदर सॉल्व हो जाता है अच्छे से विन विन सिचुएशन में, तो वो कॉन्फिडेंशियलिटी वाला फीचर कितना अच्छा, हमारा गुडविल अफेक्ट ही नहीं हुआ वहां पे, राइट? अरे देखो, आपको वॉलंटरीली बाहर जाके वो चीज अनाउंस करनी है, वो अलग बात हो जाती है, बट देन यू आर नॉट गोइंग योरसेल्फ, लाइक द लॉ इज नॉट फोर्सफुली टेकिंग यू आउटसाइड एंड इट इज डिस्क्लोजिंग इट. Very clear with this? Yes. Then the next thing is arbitral award, that you already know. It is nothing but the decision which is given by the arbitrator. And the last one is very, very simple. Enforcement. You can just write there if you want. Enforcement means making it applicable or making applicable or applying. Okay. So applying arbitral award means what? Applying arbitral award means once the arbitrator has given the decision, after that it should be made applicable on both the parties. Okay, with the same strictness as if it is a court's decision only. Okay, उसको भी you have to give same level of importance. ऐसा हल्के में नहीं लेना. You don't have to take it very lightly कि हाँ ठीक है ना, arbitration का award है ना तो चल जाएगा. No, you have to give it same importance. You have to give it same importance as you have given it for the court's decision. Very clear with this? Yes, so this was all about the basic features of arbitration. I have explained you the meaning of each and every point. Now you can just go and read, okay, after this particular chapter, you can just go and read. Now you'll find things very, very simple. Yes, okay. Now then comes altogether different part, that is arbitration authorities in India, which is very, very simple. Okay, arbitration authorities in India. Arbitration authorities have been bifurcated into three parts there. First one is judicial authority. next one is courts, and last one is Supreme Court or High Court. Okay, so judicial authority includes everyone. Okay, judicial authority includes your courts, it includes your tribunals, it includes your quasi-judicial authorities and everything. Okay, so every kind of an authority, every kind of a court will be included in a term called as judicial authority. Now, ma'am, which courts are you talking about? Which courts will come under this arbitration chapter? So they say there district court, high court and Supreme Court. Okay, I'm repeating, district court, high court and Supreme Court, they are going to be there. They are going to play some role in this particular act. Ma'am, what role? So now, suppose if, just like you had seen a point called as seat of arbitration, which laws will apply, Indian laws or foreign laws. Okay, whenever in arbitration, if we require the help of law, okay, if in arbitration, if we require the help of law, or if any court is going to supervise the process of arbitration, then for domestic arbitration, district court and high court will be there, and for international commercial arbitration, only high court is going to be there. Okay, suppose if a domestic arbitration is going on, then either a district court or a high court can supervise this process of arbitration. If international commercial arbitration is going on, then only high court can supervise this. Very clear with this? Yes. Acha. Similarly, suppose if the parties are not able to appoint the arbitrator, suppose if the situation is so bad that they are not even in a position that they can come together and they can appoint an arbitrator, so we can make a request to the courts to appoint the arbitrator for us. Okay, so in case of domestic arbitration, High Court will provide us with the arbitrator, and in case of international commercial arbitration, Supreme Court will provide us with the arbitrator, or it will help us in appointing the arbitrator. So the above point, these points were talking about where district court, high court came into picture, it was about supervision and all those things. And when high court and Supreme Court is coming into picture, it is for these courts are going to help you for appointment of arbitrators. Very clear with this, everyone? Yes. Okay. So this is all about the arbitration authorities in India, right? Now, going on to the next thing, that is your arbitration agreement. See, the first feature, if you remember, the first feature which was there in features of arbitration was about this only, your arbitration agreement. So now we are going to study about this arbitration agreement in detail, right? Now we're going to study about this in detail. This is very, very simple. Don't worry at all. So as we already know, arbitration is such a method which is a private method. We remember confidentiality point. It is not open for public. Like we have a dispute, public does not get to know about it. Okay, so it is a private method. Okay. It cannot happen without arbitration agreement, means both the parties, okay, both the parties will have to consent to it that yes, we are ready to submit our disputes for arbitration. दोनों जन हाँ बोलना चाहिए कि हमको arbitration के लिए जाने का, तो ही वो लोग arbitration के लिए जा सकता है, otherwise tie fish. समझ में आ रहा है इतना? अच्छा, तो consent बहुत ज़्यादा important हो जाता है. Consent becomes very, very important there. You require consent for getting into arbitration. Yes, and the document, okay, the paper where you record this consent, okay, the document where you record this consent is called as arbitration agreement. Okay, this document is called as arbitration agreement, and this is the proof that yes, you have agreed for arbitration. Very clear with this? Yes. Acha. Now, ma'am, is there any format for this, or how do we make this, etc., etc.? So yes, let me tell you this. There is no specific format of arbitration agreement. Okay, arbitration agreement can be in any particular format. Just like partnership deed, etc., we generally have got a particular format for it. But for arbitration, there is no such format. The important requirement there is it should be in writing. Okay, orally not valid. ओके फिर तो हम कुछ भी बोल के निकल जाएंगे, क्या फर्क पड़ता है. बट ओरल अग्रीमेंट्स देयर, ओरल डिस्कशंस एक्सेट्रा नॉट वैलिड. इट हैज टू बी इन राइटिंग. दैट arbitration agreement should be signed by both the parties. See, it can be exchanged over email, it can be made in on a paper format, etc. That is okay, but it has to be in writing. Very clear with this? Okay, that is very, very important. And there are two ways. Okay, there are two types of arbitration agreement. I'll just show it to you. See here. There are two types of arbitration agreement. One is arbitration clause and the other one is something called as submission agreement. Okay, this is very, very important. Just pay attention here. It is very simple also. Okay, now arbitration clause means what? Arbitration clause is such a process, is such a way by which you incorporate a point relating to arbitration in your main agreement. Okay, example, there is a partnership deed which is entered into between 5 partners, say for example. In the partnership deed, we have got different clauses like profit sharing clause, remuneration clause, interest clause, indemnity clause, etc. We have got such clauses in the partnership deed. Along with such clause, we put a point called as arbitration clause also. Even that is valid. No problem in that. Even that particular clause will be treated as a valid arbitration agreement. A deed will be called as partnership deed only, but the clause which is there, the paragraph which is there in the principal agreement, that will be considered, that will be called as, that will be treated as a valid arbitration agreement. Very clear with this? Okay, so this is one type of arbitration agreement, and the next one is called as your submission agreement. Okay, submission agreement means what? Submission agreement is nothing but a separate agreement which you attach along with the partnership deed, for example. Okay, instead of putting a clause in the partnership deed, if I plan that, okay, I will attach one more paper, just like we do it for supplementary deeds, etc. I will attach one more paper to the partnership deed. That will be called as my submission agreement, and even that is considered as a valid arbitration agreement. I hope I am very, very clear till here, everyone, and I hope you're conceptually clear with this. Okay, arbitration clause मतलब main agreement के अंदर आपने एक clause डाल दिया, वो हो गया आपका arbitration agreement. ठीक है, चलेगा, चल जाएगा, अलग से पेपर भी बनाने की जरूरत नहीं है. दूसरा होता है कि भाई ठीक है, हमारा पार्टनरशिप डीड बन गया था, अब हमको उसको चेंज नहीं करना, तो हमने उसको सप्लीमेंट कर दिया, तो वो जो एक्स्ट्रा में व्हाटएवर यू हैव पुट, दैट विल बी कॉल्ड एज सबमिशन अग्रीमेंट. वेरी क्लियर विद दिस एवरीवन? ओके, नाउ going on to the next part. Next one is very, very simple, something called as general principles of arbitration agreement. Okay, we are still talking about arbitration agreement only. So now, first of all, arbitration agreement will be considered as a contract. Okay, so all the requirements of a valid contracts, all requirements of a valid contract should be present. Indian Contract Act, that should be present. Okay. Next one, consent should be there, that we have already discussed about it. जब तक दोनों जन हाँ नहीं बोलता तब तक arbitration के लिए नहीं जा सकता. Same thing, consent is very, very important. Okay, and clear consent should be there. ऐसा घुमा फिरा के हाँ बोलना, घुमा फिरा के ना बोलना नहीं. Clear consent should be there. Okay. Now, since you have consented, you cannot go to the court unilaterally. ठीक है, once both the parties have decided that they are going to come for arbitration, now neither of the parties can unilaterally proceed to the court. ठीक है, two of them have gone for arbitration, one of them wants to go to the court, not allowed. Okay, if you want to cancel arbitration and go to the court, you both can do it together. But one party is going for arbitration, another party is going to the court. क्या time pass है ये? Okay, that is not allowed. So that is called as the ouster of jurisdiction. Okay, you cannot cross the law there. The next one, there is something called as doctrine of separability. Okay, now listen. We just studied about arbitration agreement. It can be in form of arbitration clause or it can be in form of a submission agreement. Then too, it is going to have its own validity and the principal contract is going to have its own validity. Ma'am, means what? Means even if your arbitration clause is contained in the main agreement, then to arbitration agreement will be considered separate and your principal contract is going to be considered separate. Okay, ma'am, means what? Means suppose if there is some violation of partnership agreement clause. Suppose if someone has violated any clause of partnership deed, then partnership deed becomes void. but your arbitration agreement is still valid because it is separate from the principal contract. Very clear with this? Yes. So even if it is just one para in the main agreement, then to that para will be considered as a separate arbitration agreement. Very clear with this? And similarly, connected is the last point. Arbitral tribunal, arbitrator has the capacity to rule on its own jurisdiction, even if it involves a question of validity of the main clause contract. Means arbitrator is not going to be dependent on the main contract. He is not going to be dependent on a partnership deed. He will work according to the arbitration agreement. वो अपने हिसाब से काम करेगा, वो पार्टनरशिप डीड के हिसाब से काम नहीं करेगा, वो आर्बिट्रेशन अग्रीमेंट के हिसाब से काम करेगा. Why? Because of the concept of doctrine of separability. I hope I am very clear till here, everyone. Yes. Okay. Then going on to the next one, something called as requirements of a valid arbitration agreement. So yes, there are some 7-8 points given up here which are very simple. First one, it should be in writing. We already know that. Ma'am, is there any format? Tell me. No, there is no particular format for your arbitration agreement. Clear consent should be there, that we have already discussed. हाँ ना इधर उधर ये वो or any uncertainty etc. That thing should not be there. There should be a proper consent. Clarity of consent should be there. Okay. Only legal cases can be submitted for arbitration. Only genuine cases can be not genuine, but yes, legal cases can be submitted for arbitration. Example, ma'am, he asked for bribe. Okay, he asked for bribe from me. Arey, the case itself is illegal. You cannot take it for arbitration. Okay, only legal cases can be taken for arbitration. Okay, final award, we already know final award, final and binding award will be given by whom? It will be given by the arbitrator and it will be full and final and binding upon everyone. Okay, specific words. What do you mean by this? Specific word means just using the words like arbitration or arbitrator etc. will not make that paper an arbitration agreement. Suppose if I write, you must have seen some partnership deed. Suppose if I write there, in partnership deed, have you seen the name of partners coming up there? Say for example, this deed is between Miss Arpita, Tulsyan and Mr. or XYZ. Okay, and if I write in the bracket Arpita, Tulsyan, chartered accountant and arbitrator, means what? Will this partnership deed become an arbitration agreement? No, their arbitrator defines my qualification. It defines my designation. So just using the word arbitration, just using the word arbitrator will not make it an arbitration agreement. You have to clearly specify that for any disputes we will go for arbitration. You have to clearly specify that. Very clear with this? Yes. Okay, then there is something called as dispute. Okay, because there will be some dispute or because there is some existing dispute, we will go for arbitration. Otherwise, there is no other reason for going for arbitration. Okay, arbitration is there only for disputes, and whatever disputes you are submitting for arbitration, that should be arbitrable. Means Arbitration and Conciliation Act should allow arbitration for those matters. Example, there are some criminal cases. Ma'am, murder ho gaya. There is some murder case. So you cannot take that. That matter will obviously go to the court only. You cannot say, okay, come, we'll solve it by way of arbitration. No, that cannot happen there. Okay, so the cases should be arbitrable by the law. And the last one is signature. Sign is required when wherever the by whatever way your arbitration agreement is made, signature is going to be required. Basically, that shows that yes, both the parties are agreeable to this particular thing. Yes. Okay. Now, there is something called as last two things about arbitration agreement. This one, arbitration agreement through reference. Okay, arbitration agreement through reference. This is one such method. Okay, this is one, we can say one more type of arbitration agreement. We can probably say that, where in a particular document, a reference is given to some method of problem solving. Example, I have written, suppose in my agreement copy. Okay, I have entered into an agreement with someone. In my agreement copy, I have written that if at all there is any dispute between me and the other person, we will go and refer so and so bylaws, or we will go and refer so and so other document for problem solving. Okay, now suppose if any dispute arises between us and we go and refer that particular document, some bylaws, and there it is written that problem will be solved by way of arbitration. Then yes, the problem will be solved by way of arbitration. Okay, indirectly, it is not directly written in my document that we will go for arbitration, but a reference has been made to some other document. Then even that is considered as a valid document. But yes, in that document, in that referred document, it should be clearly written that yes, if you have come to this document, if you are referring this document, then you have to resolve the dispute by way of arbitration. Clarity should be there. Very clear with this? Yes. See, an example is there. You will understand it very well. In the terms and condition of purchase order, it was written that terms and condition will be as per XYZ Association of India. Okay. And in terms of XYZ Association of India, it was mentioned that disputes are to be settled by way of arbitration. Means a reference was made to the terms and conditions of XYZ Association, and it clearly stated that yes, we will settle it by way of arbitration. So yes, definitely this will be considered as a valid arbitration agreement. Very, very clear with this. So you're basically referring it to a third document where clarity is given. Okay. Next one is, yes, next one is a good one. Termination of arbitral agreement. Okay, arbitral agreement. When can it be terminated? So when both the parties unilaterally, ouster of jurisdiction is not allowed. Unilaterally you cannot go. But with mutual consent of both the parties, the arbitration agreement can be terminated. Very clear with this? Yes. Next one. There is something called as, suppose if the principal contract gets over. It does not become void, but if it gets over, example, we decide to close the partnership, then what is the use of the arbitration agreement? Even that gets terminated. If partnership becomes void, then arbitration agreement will be valid. But if partnership is over, then even the arbitration agreement is over. Very clear with this? Yes. Okay. Then the next one is death of the parties. This is an exceptional point. By death of parties, arbitration does not come to an end. Rather, it gets continued by the legal representative, or the legal representatives will continue it. But by death of parties, arbitration will not come to an end. Okay. Next one, last one is operation of law. Operation of law means, suppose if by chance, if law says that this is such a matter which cannot be taken up for arbitration. Earlier it was allowed, now it is not allowed. Then we cannot do anything over and above the law. If law says dog is cat, then dog is cat. Okay, then in that case, arbitration agreement has to be cancelled. Okay, so basically these are the three methods: mutual consent, termination of principal contract, and operation of law. These are the three cases, we can say, where your arbitration agreement will come to an end. Very clear with this? Yes? Okay. Now, till now, whatever things we were doing, we were doing everything about the arbitration agreement. Now we are going to study about arbitral tribunal. Okay, till now we did about arbitration agreement. Now we are going to do about arbitral tribunal, then the arbitral award, and arbitration part will get over. Okay, now about arbitral tribunal, you already know. I'll just give an overview of this. This is just an introduction thing. Arbitral tribunal is what? Arbitral tribunal is nothing but the arbitrator. Okay, arbitrator is the person who is that third person, who is a neutral person, who is an unbiased person, who is going to resolve the disputes. And yes, you can use the words interchangeably. Arbitrator bhi use kar sakte ho, arbitral tribunal bhi use kar sakte ho, no problem. Acha, best part in arbitration is you can choose your own arbitrator. In court, you cannot say he is going to be my judge, but in arbitration, you can say, you can mutually decide that yes, this person is going to be our arbitrator. Very clear with this? Yes, but we expect that this person should stay neutral, he should be unbiased, he should be fair to all the parties and all those things. right? Acha, ma'am, who can be an arbitrator? Okay, so any person who is capable of contracting, again, any person who is capable of contracting, that person can become an arbitrator. He should have that, he should have that craving that yes, I have to solve. He should be a problem solver, not problem creator. Okay, and then certain qualification, experience and norms will be required that will be specified by the law from time to time. Okay, so basically he should be a person who is capable of contracting. He has agreed for arbitrating that particular matter. He should be having that mindset that yes, I have to solve this particular problem. Right? Acha. Now, as you already know, we have the freedom to choose our arbitrator. So, ma'am, how do we choose? How do we choose the arbitrator? How many arbitrators should be there for our case, ma'am? So yes, let me tell you, first of all, we have got the freedom to choose our arbitrator, and that too, any number of arbitrators. Okay, if you want to keep one arbitrator, 2, 5, 10, whatever, this is what they say initially, that you can keep any number of arbitrators, and then they say that, but make sure that number shall not be an even number. Means 2, 4, 6, 8, 10, 12 and so on, these many arbitrators cannot be there. You can have 1, 3, 5, 7, 9 that way. Okay, very simple reason why even number is not allowed and why odd number is allowed, because the chances of dispute between arbitrators would be there, whereas in case of odd number of arbitrators you can anytime have a majority. Okay, for this even number of arbitrators there was a case law for deciding the law itself. It was not related to a particular case, but for determining the law, this particular case was there. You can just refer it once. That was about your even number. So as of now, we know that as per the law, you can have any number of arbitrator, but that number should not be an even number. Yes. Suppose if you are not able to decide that how many arbitrators should we keep, okay, then just keep one arbitrator. Your problem will be simple. Acha ma'am, what is the use? Like, how do you decide how many number of arbitrators should be there? So see, both has its own pros and cons. Suppose if I have lesser number of arbitrators, then in that case, lesser time will be taken for resolution. Cost will be less, right? Disputes will be less. But again, if I have more number of arbitrators, then in that case, I will have more expertise. Right? I will get a better decision, maybe, right? If it is a complex thing. Then by balancing, law does not say that if this case is there, then you'll have to keep 3. If this case is there, then you'll have to keep 9. Law does not say that. So depending upon your case, you have to decide. Okay, you have to decide that what is to be done. Very clear with this? Yes? Okay. Now listen, how do we appoint the arbitrator? This is very, very important. Okay, first thing is both the parties, everyone concentrate here. Okay, look here. Suppose first thing is both the parties will come together, they will decide, they will agree upon a sole arbitrator. Okay, they will agree upon a sole arbitrator, and that person will be appointed as an arbitrator. Okay, that is one thing. Another thing, one party will send a list of arbitrator to the other party. Okay, he will choose amongst these. That is one possibility. Another one, suppose if second party does not like the arbitrators from this list, he will give his list to the first party, and the first party will choose from that list. And this will continue till the time, this list, exchange of list will continue till the time they don't agree upon a single arbitrator. Correct? So finally they have agreed upon a common arbitrator. Acha, another thing, one party will appoint his arbitrator, like his choice, another party will appoint his arbitrator, then these two will appoint the final arbitrator, the third arbitrator. That is one way, that is another way of appointing the arbitrator. Acha, if nothing works, then what? If nothing works, we have already studied in authorities, go to the court. In case of domestic arbitration, go to the High Court. In case of international commercial arbitration, go to the Supreme Court. They will help you in appointing the arbitrators. Very clear with this? All these things are written here. Okay? All these things are written in this particular page. I hope you are very, very clear with this. Yes? Acha, another thing. Requirements of an arbitrator. Again, only 3 simple points, very, very simple thing. Requirement of arbitrator. Okay, everyone here. Now, he can be of any nationality, doesn't matter. Okay, but generally, if it is a domestic arbitration, we will keep an Indian arbitrator. Things will be simple for us also and for him also. But if it is an international commercial arbitration, he can be of any nationality, either Indian or foreign. He can be from other countries also. Right? He should be capable of contracting. We have already seen that. And he should be a neutral person. He should be an unbiased person. He should remain independent, and he should give an impartial decision every time. Then only the purpose of arbitration is going to be solved. Very clear with this? Okay. Then the next one, grounds for challenge. Okay, grounds for challenge. When can we have a doubt that this particular arbitrator is a biased one? When can we have a doubt that he is not giving a fair decision, is not giving a neutral decision, etc. Okay, so suppose that we had any relationship, either of the parties had any past, present relationship with this particular arbitrator, or he had some interest in any of the parties. Okay, we had some financial transactions with him, or he had some with any of either with me or with my family members. Then there is a doubt that he might give some partial decision. Okay, or if he is not able to give sufficient time to our case, and he shows his inability to solve the problem within 12 months. Okay, if he has that problem, or if he shows that that he will not be able to solve this problem within 12 months, then in such cases we can have a doubt and we can change our arbitrator. Very clear with this, because if suppose there is biasedness, if there is non-neutralness, etc., then there is no point keeping an arbitrator. Then better you go to the court and whatever time it takes to solve that problem there. Right? Acha. Okay. So these are the pointers which gives doubts to biasness. Suppose if he was the lawyer, or he is the lawyer of either of the parties, if he is an employee of either of the parties, if he is relative of either of the parties, if he is legal representative of either of the parties, if he is having any financial interest in either of the parties, then obviously he is linked to one of the party, and you cannot expect that he will still be a fair person. Right? Okay. Then the next one, that is duties and liabilities of arbitrator. Okay, what are the duties? Very, very simple. What are the duties and liabilities of arbitrator? First, why is he appointed? Obviously, he is appointed for solving the problem without any delays. So, he should complete the case without any delay, and he should give an arbitral award by remaining impartial at all the times. Okay, another very important thing in this arbitration is confidentiality. The matter should be only between the parties and the arbitrator. It cannot go out. Okay, it's not optional. It cannot go out at all. Okay, whatever award he gives, that award is called as what? That award is called as an arbitral award, right? That award is called as an arbitral award, and that arbitral award should be a reasoned one, that should be deliberate, that should be in detail, that why the arbitrator has given such an award. Okay, we already know that he should be neutral, he should be unbiased, etc. So, to make sure that he is neutral, that arbitrator has to make sure that he is not undergoing unilateral communication with one party. One-sided communication is happening, that should not happen. Okay, एक ही जन से बात किए जा रहा है, एक ही जन से डिस्कस किए जा रहा है, obviously the other party is going to have a doubt. Okay, whatever documents, whatever information you are receiving from one party should be communicated to the other party, so that everyone is there in that loop, right? So that everyone is there in that loop. Acha, whatever award he gives, that award should be a legal award. He cannot give a award, go and kill him. Okay, so it should be a legal award. And yes, legal is one thing. Suppose if he gives a legal award, but that should be a possible award. He cannot say to the other party, hey, go and bring stars for him. This is a legal award, but it cannot be implemented. Right? It cannot be implemented. So, give a proper award. That is a responsibility, that is a duty, responsibility, liability, whatever you want to call, of the arbitrator. Acha, can this arbitrator leave? Definitely yes, he can leave, and that too he need not give the reasons that why is he leaving. He can directly say tata bye-bye without even giving the reasons for it. He is not required to disclose the reasons. Acha, another thing, suppose can we remove him? Yes, definitely we can remove him. When can we remove him? If suppose we feel that he is not able to solve the problem, he is not able to give proper time, he is not having that expertise to solve the problem. Acha, can there be a possibility that beyond our control, there are certain reasons that we are not able to, that the arbitrator is not able to continue? Yes, suppose if there is a continuing, prolonged illness is there, and he won't be able to take up the case for a very long time. So we can remove that arbitrator, or that arbitrator himself can also resign. Or if the parties decide, let's go to the court only, then the process automatically ends. The arbitration process automatically ends. Yes, that is another way, that is another time or circumstance when the arbitrator can be removed. Okay. Acha, one thing that you have to read here in this particular thing is this point where the arbitration process comes to an end. This last point, section 32, 29A, 25 reference that is coming now. This you have to read it once. This is a little important. Very clear with this? So these are certain cases when the arbitrator can be removed. Okay, arbitrator can be removed, or he can leave, or he can resign, whatever it is. Acha, what if suppose the case is going on but the arbitrator is no more there in this case, suppose due to illness or whatever, because of less expertise, etc. What if the arbitrator is not there? Then a new arbitrator can be appointed. Same way, both the parties can mutually appoint, or whatever ways we had studied there, using the same ways we can appoint a new arbitrator also. There is no issues in that. Okay, suppose if we are not able to appoint, then which court to approach? You can approach the High Court or the Supreme Court for the same. Very clear with this? Yes. Okay, so this was all about your arbitrator. Okay, this was all about the person who was solving this problem of arbitration. Yes. Now going on to the last part, that is the arbitral award. Arbitral award is what? Arbitral award was nothing but the final and the binding decision which was given by the arbitrator. This shows like an end of arbitration. Right? Acha, we had already seen that generally, can the arbitration award be challenged? Generally, it cannot be challenged except in certain circumstances. Suppose if there was some biasness, suppose if there was some fraud or corruption coming up in the award, etc. In such cases, it can be challenged, but otherwise it cannot be. Acha ma'am, where to go and challenge? Then it can be challenged before the district court or before the High Court within a time period of 3 months from the date when the award was received, and can be extended by maximum 30 days. So within 3 months you can go, plus extension of 30 days. Very clear with this? Acha, what kind of awards can be given by the arbitrator? So one basic type of award is your final award. Final award means it marks the end of your arbitration. Okay, it marks the end of your arbitration, and your decision, the final decision which comes out, that will be known as the final award. Okay, suppose if till the time the final award came out, before that, if arbitrator had given some interim decisions, that will be termed as the interim award. Okay, that will be termed as interim award. That does not mark the end of arbitration. Okay, suppose if there were multiple matters, 1111 is going on solving in that particular case, that will be considered as an interim award. Right? Next one is something called a settlement award. Settlement award is the case where the case has come for arbitration, but both the parties have themselves taken the decision and it is just supervised by the arbitrator. Then it is called as a settlement award. Parties themselves say, arbitrator sir, you sit and you just observe us. We will take the decision. We are so cooperative that we will take the decision. You just see that if we are doing everything legally or not. Such an award is not given by the arbitrator, that is just supervised by the arbitrator. So such award will be called as settlement award. Okay, such an award will be called as settlement award. Very clear with this? And then the last one, that is the additional award. Okay, in case of additional award, suppose if the final award was given, suppose the arbitrator says that I have given the final award, Arbitrator says, "मेरा काम हो गया, I have given." But now either of the parties say that there is some left out matters. Please solve that also relating to that particular case. Then the award which is to be given on those left out issues will be called as additional award. Okay, that will be called as what? That will be called as additional award. Very clear with this? Yes. So, and yes, that you can make a request to the arbitrator within 30 days of the final award that, sir, these are the left out issues, please give a decision on that. The decision given on the left out matters will be called as additional award. Very, very clear with this? Yes. Acha. How the award should be? So, award should be a decision by majority arbitrator. Remember 1, 3, 5, 7, 9, 11 that way. So, it should be a decision by majority. Even the award should be in writing, it should be signed and it should be dated. Acha. Now, there is a possibility that suppose if there are 3 arbitrators, 2 of them agree, 1 of them does not agree with the award. Then too, if it is signed by 2 of them, that is okay. But the third one, the one who is not agreeing, should state there that why he has not agreed to that particular award. Award will be valid, but reason should be mentioned there. Okay, majority should sign, and the one who is not signing, the reason for that should be stated. Very clear with this? Yes, and yes, we have already seen the award should be a clear-cut award. It should be a reasoned award, a deliberate award. Okay, a deliberate award means what? That you have to give proper reasons that why this award has been given. It should be capable of being performed. Bring stars from the sky is not capable of being performed. It should be legal. Go and kill him is not a legal award. Very, very clear with this. So, these are the requirements. These are the requirements of an arbitral award. Yes. Okay. Then the last one, that is challenging an award. When can you challenge an award? First of all, in normal circumstances, you cannot challenge an award because it is basically a win-win situation decision. So, why to challenge it? Right? But in certain circumstances, it can be challenged. Okay. Suppose if later we come to know that either of the party, one of the party is a minor, then the entire agreement, etc., everything becomes void. Right? Or if the arbitration agreement is altogether invalid, then again the entire arbitration procedure becomes void. Disputes are not allowed for arbitration. It is such a dispute which is not allowed for arbitration. It becomes void. And in such cases, suppose if the award was given, then the award can be challenged. Because right from beginning your arbitration becomes invalid. Okay, it can happen in case of international commercial arbitration. The award which was given is against India's public policy. Then it is void. Then it can be challenged, basically. The award can be challenged. Very, very clear with this. So, these are certain circumstances where we can go and challenge the award. We can go and challenge the award before whom? Before the district court or before the high court. Acha, what will happen once we go and challenge? They will take the decision. What decisions can be taken by the district court or the high court? They can set aside. Okay, they can set aside the decision of the arbitrator that this decision is nonsense. Set it aside, redo the case. Or it can confirm the award. It will say that whatever arbitrator has done is correct. Or it will modify. The court will do some modification. Or it will give the matter back to the arbitrator and it will tell the arbitrator to rectify. A minute difference between modify and remit back to the tribunal. Modification here is done by the arbitrator only. And remitting back to the tribunal means your district court or high court is giving the matter back to the arbitrator and telling the arbitrator, please rectify so and so mistakes. Yes, and whatever award is given, that award should be properly enforced as if it is a court's order, and enforcement will happen as per the code of civil procedure. As if a court has given a decision, that way we have to implement the decision. Okay, we don't have to take it very, very leniently, very easily that this is an arbitration award, so it is not important to implement. No, that thing should not happen. Yes. Okay, then the next one, the last part of the chapter, that is your conciliation. Okay, let's go to the last part of the chapter. Whatever we have done till here, okay, whatever we have done till here non-stop, that was all about your arbitration. Now let's go to conciliation. Okay. So now, as we had seen in the heading of the chapter also, it was Arbitration and Conciliation Act, right? So we have studied basic things about arbitration. Now let's get an overview of conciliation also. So ma'am, what is conciliation first of all? So conciliation is also one of the alternative method of dispute resolution, okay, where both the parties come together, there is a common dispute, they solve it by way of a confidential discussion. Okay, here also there is a person called as conciliator who is going to solve the problem. So ma'am, what is the difference? What is the difference between arbitration and conciliation? So let me tell you that. Okay, again, conciliation is also a voluntary process. If both the parties agree to go for conciliation, then they will go, otherwise no. Okay, acha, major difference between arbitration and conciliation. Under conciliation, it is a non-adversarial method. Means here the parties are more sophisticated. Here they do not compete against each other to prove themselves as correct and others as wrong. They cannot do that. They cannot, but they don't do that. Okay, they understand each other's point and they try to come to the best solution which suits both of them. In arbitration, I am trying to say I am correct, you are trying to say you are correct. Arbitrator comes and applies his brain and he gives a win-win decision. In conciliation, we anyway tell to the conciliator, sir, you sit. We will try to solve the problem. You supervise, just like your settlement award. Just like your settlement award. But here you have gone for conciliation. Okay, so conciliator just is present there to help the parties to come to a conclusion. He is not doing the main work. Okay, he is not doing the main work. Okay, acha, here also the matter remains confidential and the final outcome will be coming and that will be binding on all the parties. Very, very clear with this? Yes. Acha, conciliation here in India, it will be governed by this Arbitration and Conciliation Act and Code of Civil Procedure. For enforcement of award, we use the Code of Civil Procedure. Very, very clear with this? Acha. Then the next one, this is a little important, commencement of conciliation proceedings. What happens here? How the process happens? So one of the party who wants to enter into conciliation will send a return invitation to the other party that let's conciliate this particular dispute. Okay, the other party will accept the invitation and the conciliation will start. If the other party rejects, then there cannot be any conciliation because consent should be there. Okay, so one of the party, the other, suppose if I am sending you an invite that let's conciliate. Okay, you have to reply me back within a time period of 30 days. Okay, 30 days from the date on which I send you an invitation or any other time which is written in the invitation. Okay, within that 30 days or whatever time is written, within that much time, the reply should be received from the other party. If no reply is received, then that should be treated as if the other party is not interested for going for conciliation. Very clear with this? Acha. In case of conciliation, another difference is here the number of conciliators can range only between 1 to 3, whatever. It can be even number also, but it can be anything between 1 to 3. Okay. Now listen. In case of arbitration, we were allowed to appoint any number of arbitrators, but not an even number. In case of conciliation, why lesser numbers here? Because here the parties themselves are already matured enough to take their own decision. We just require someone to assist us. Okay, so you can decide upon any number. It can be 1, 2 or 3, whatever it is. Okay, and in this way your conciliators are appointed. Suppose if you are not able to decide upon the number of arbitrators, simply appoint not arbitrator, conciliator, simply appoint one conciliator. Okay, again here the conciliators are appointed by the parties. You can again go and take the help of High Court or Supreme Court for appointment of conciliation. You submit all the documents, evidence, etc. before the conciliator. You take the decision. Conciliator will check whether everything is legal or not, and then the final and binding award will be given. Very clear with this? Acha, when can conciliation come to an end? If suppose they come to the conclusion only, that is called as settlement agreement. If they come to an final award, final decision, settlement agreement, then the conciliation proceedings are terminated. Or if suppose they feel that conciliation is no longer required, then also conciliation can come to an end. Okay. Then suppose if they voluntarily decide that we don't want to go for conciliation, then conciliation proceedings will come to an end. So these are some of the methods. These are some of the methods by which conciliation proceedings can come to an end. Acha, in arbitration, the final award was called as what? In case of arbitration, the final award was called as arbitral award. Okay, in this case, it will be called as settlement agreement or memorandum of conciliation. Either it will be called as settlement agreement or memorandum of conciliation. That has to be signed by the conciliator. It should be a legal one. It will be full and final, and it will be binding on everyone. Enforcement will be done as per which law? As per Code of Civil Procedure 1908. Very clear with this. You remember the 4 types of awards under arbitration? Final award, interim award, settlement award, and additional award. Here it is called as settlement agreement or memorandum of conciliation. Okay, Acha, just like arbitration, here also all the things have to be kept confidential. Everything has to be kept confidential. It cannot become a case law. Yes, and then the last definition that is given here, that is international commercial arbitration, where at least one of the parties of outside India. It can be a company incorporated outside India, it can be a national of other country, it can be a government of other country, it can be an association of other country, but at least one of the parties is of outside India. Very clear with this. And yes, then at the end of the chapter, I have given you certain distinguishes and some references of case laws have been given. So you can just, read it once. And then again, as usual, as always, as just like other chapters, your summary of the provisions have been given in these tables. Yes, I hope you are very clear with the concepts and the things now. You must have observed many things are repetitive in the chapter. Like if characteristics is there, features is there, principle is there, many of the points are getting repeated. Please don't try to by heart each and everything. Okay, just try to understand the chapter just like we did it now, and then just read the provisions once and you should be clear. Once you go and try the question answers, you will understand, it is more about application than remembering the provisions. Yes, okay. Okay, so let's start with the super quick revision of the new chapter, that is Foreign Contribution Regulation Act 2010. We are going to study the amended chapter here. So your amendments, etc., whatever was there of this attempt, past attempt, etc., everything gets covered till now. So first of all, what is the purpose of this particular act? Foreign Contribution Regulation Act. They are telling that whatever contributions you are receiving from the foreign source. Okay, foreign contribution can be in multiple types. We'll see the exact definition. So their purpose is whatever foreign contribution you are receiving from the foreign source, or whatever contribution you are receiving from outside India, that particular contribution is properly regulated. Okay, so that it does not create a negative impact in our country. Either it can be prohibited by the law or it will be regulated by the law. Okay, anything that we are receiving from the other country without consideration, that is going to be either prohibited by our law or that will be regulated by our law. Okay, so now what they are telling us here is purpose of the law. First of all, purpose of the law is whatever foreign contribution. Okay, two things will be there. First of all, one thing is foreign contribution and the other thing is something called as foreign hospitality. Okay, if you are receiving foreign contribution, then it will be regulated How to regulate it? The provisions are given in this particular act, Foreign Contribution Regulation Act. And similarly, for foreign hospitality, that is if you are getting any service, okay, if you are getting any service, then in such case also, either you will be allowed to avail that service from outside India without contribution, like you're receiving some service without paying anything for it. So the Indian government can even, Indian laws can even prohibit it, or it can regulate it. Very, very clear with this. Okay, so two things in the chapter. One is foreign contribution and the other one is your foreign hospitality. These can be either prohibited, means the government can say no, you cannot receive it, or it will regulate. It will regulate means it will keep a check on you, that how are you utilizing, from whom you have got, why you have got, and all those things. Very, very clear with this. Yes, the most important thing in this particular chapter is whatever you're receiving, be it foreign contribution, be it foreign hospitality, whatever it is, you are receiving it for free. You are receiving it without any consideration. Yes, and that's why the doubt gets created. Why someone is paying you from the other country? Why someone is providing you that hospitality from the other country? There comes the doubt. Are you clear with this, everyone? Yes? Okay. Then after that, now which all provisions will be applicable? Okay, now when we talk about foreign contribution, then in that case, Foreign Contribution Regulation Act, as you can see here, Foreign Contribution Regulation Act 2010, that will be applicable. Foreign Contribution Regulation Rules 2011 are there, those will be applicable, and notification which are released by the central government from time to time, that will be applicable. Okay, so we are going to study the provisions from various places and we will try to get an overview of the entire chapter. Okay, now the first definition which we are supposed to study here is of foreign contribution. Remember, I had told you there are two things here. One is foreign contribution and the other one is your foreign hospitality. Okay, everyone with me. Now, foreign contribution means they say anything. First of all, one thing to be remembered is you are receiving it for free, फुकट, बिना पैसे दिए आपको मिल रहा है. Means that donation, delivery or transfer made by any foreign source. ठीक है, outside India से someone has given it to you. That outside India से thing is called as what? That is called as foreign source. What you can get? Either you can get any article, or you can get currency. It can be Indian currency or foreign currency, or you can get any securities also, including your foreign security, means either Indian security or foreign security that you are getting from the other country. Okay, this you are getting it from the other country without any consideration. Okay, it can be any particular thing, it can be currency, it can be security that you're getting it from the foreign source. Okay, but now here, one of the exception, this exception is very, very important. If I receive any article, okay, the first point, if I receive any article for personal use, okay, and if its market value in India as on the date of receipt of the gift is not more than rupees 1 lakh on that particular date, then that will be excluded from the definition of foreign contribution. A only article, and that too article received as gift, and obviously you have received it for gift, as gift, because you have not paid anything for it, for personal use, and if its market value does not exceed rupees 1 lakh, then that will not be counted under the definition of foreign contribution. Don't confuse, it is not applicable for currency and security, it is applicable only for the article. Okay, and yes, one more thing that you have to remember, here you are not sending anything to the foreign source. Whatever we are going to study in this particular chapter, you have just received something from the foreign source, and that too without any consideration. Very, very clear with this? Acha, another thing. Suppose if I have received, I have received something from the foreign source. Okay, I have received something from the foreign source, and if I transfer it to some other person, we will study it further also in detail in the chapter. Suppose if I have transferred it to the other person, for other person also it will be considered as a foreign contribution only. Okay, I have received foreign contribution from foreign source, I give it to some other person, means he has indirectly received it from the foreign source, even that will be deemed to be a foreign contribution only. Very clear with this? Achha, suppose if you have something, suppose if you have foreign contribution with you, okay, and suppose if you have something in form of currency with you, and you get some interest amount on it, or some income is accreted on it, then even that accreted income will be called as a foreign contribution. Okay, but if you have received something from the foreign source, but you are going to provide some service in lieu of that. Example, some foreign students wants to study in Indian universities, for example. Then in that case, we will receive fees from them, but we are going to provide them education. So this won't be considered as a foreign contribution. If you are receiving something for absolutely free, then in that case, then only it will be considered as a foreign contribution. Very clear with this? Okay, another important thing that is to be understood here is foreign hospitality. Okay, there were two things, right? One was foreign contribution and the other one was your foreign hospitality. So foreign hospitality means I have received some service. Okay, I have received some kind of service, maybe in cash or in kind, where the other person who is sitting in the foreign source, okay, that person is telling me that I will bear your traveling cost. You come to the foreign country, I will bear your foreign cost. Okay, or you come to my country and I will bear your medical treatment cost. You come to our country and we will bear your staying cost, lodging boarding cost. So this is what? This is nothing but your foreign hospitality. Okay, someone is calling and he's not even taking the money from me. That is nothing but your foreign hospitality. Very clear with this. Yes, so there are two things. One is your foreign contribution and other one is your foreign hospitality. Yes, everyone, are you clear till here? Yes. Okay. Now, we are receiving this foreign contribution, foreign hospitality from whom? Okay, we are receiving this from a foreign source. Just like I mentioned, we have received it from a foreign source. Right, ma'am, what do you mean by foreign source? So, foreign source can be government of the other country. It can be any foreign company. It can be any foreign national. It can be any MNC, right? It can be any international agency. It can be any citizen of a foreign country. It can be any corporation which is established outside India. It can be any trust. It can be any association. It can be anything. Okay, it can be anything outside India. Okay, it can be anything which is outside India. Okay, but there is a important exception here, exclusion, which is written in red in the definition, except, see, international agencies whose main work is funding, example, World Bank, okay, International Monetary Fund or United Nations, etc. These agencies' main work is to fund, right, is to provide the help, is to do donations, etc. So these are excluded from the term called as foreign source. Okay, so if you're receiving from persons other than these, then those persons will be termed as what? Then those persons will be termed as a foreign source. Okay, so just remember this exception. This exception is specifically very important. Yes? Okay. Acha, another thing that you have to read on your own here is this, citizens of foreign country. Okay, citizen of foreign country, just read this note. It is just a clarificatory note. Okay, so just read this once. Make sure that you read this one. Okay, so till here your important definitions were there. Mainly three definitions we had to do. One is foreign contribution, next one is foreign hospitality, and the third one is your foreign source. Yes, now listen, let's study about provisions of this. Like, what if we receive foreign contribution? What if we receive foreign hospitality? Let's study about this. Okay, now listen, first of all, we are going to discuss about foreign contribution. Okay, then we will go to foreign hospitality. So first, whatever we are doing, that is going to discuss about the foreign contribution. Okay, just try to understand. Now they say that, remember in the beginning only I had told you, either these foreign contribution, foreign hospitality, either it can be prohibited or it will be regulated. Okay, means either the government will totally say no, it will say that no, so and so people cannot accept foreign contribution at all. So let's study that list now, which is given in section number 3. Following persons are prohibited without any exceptions. These people are prohibited in section number 3. Okay, now listen, who all are prohibited? The list is very self-explanatory actually. Okay, any election candidate, he cannot accept foreign contribution. That can affect the politics in India, that can affect the laws in India, etc. Okay, so election candidate, he cannot accept foreign contribution. Any person who is associated with newspapers, example, owner of a newspaper company, publisher, cartoonist, columnist, correspondent, who can publish news and who can create disharmony, maybe, right? Those people are totally prohibited from accepting the foreign hospitality. Right. Then after that, public servant, any public servant as per Indian Penal Code, judges, government servants, etc. They cannot accept. Okay. Member of legislature, political party or its office bearer, any organization which is of a political nature, whose intention is to do political activities. Okay. That will be considered as organization of a political nature, or who has that agenda of politics. Those organizations cannot accept foreign contribution. Okay, any company or any person who is associated with distribution of news in other manner, like newspaper we already discussed, same way it can be TV channels also, similarly it can be radio FMs, etc. also. Right, if you want you can write the example. Here it can be TV, it can be news channels, TV news channels, or it can be radio FM companies, etc. So any persons who are associated with them, okay, that company as well as the persons associated with them, these people are totally prohibited from accepting the foreign contribution. I hope you are understanding why these people are prohibited. Did you understand this? Why these people are prohibited? Because if these people are receiving some kind of funding from the other country, right, then these people are somewhere related to the government, these people are somewhere related to law, these people are somewhere related to, news, etc., who have a big impact, who have a big social media, etc., who have a big impact here, and that can lead to troubles in the country. Very, very clear with this? Yes. Acha. Similarly, what some more prohibitions that they have given us here is, these people, the above persons are totally prohibited. If they cannot accept it indirectly also. Like say for example, I am not associated with any of those people, so I am allowed to accept the foreign contribution, right? I am totally allowed to accept the foreign contribution. Now listen, just try to understand. If I am allowed, I will accept the foreign contribution and I will deliver it to a political party. Allowed or not allowed? Not allowed, because those political party cannot indirectly also accept the foreign contribution. It cannot accept, that is one thing. I should also not do on their behalf. Why I should not do on their behalf? Because those are the prohibited persons. What is the point in prohibiting them then? I hope you are very, very clear with this. Yes, so we should not accept it on behalf of political parties or the persons referred above. We should not help them in receiving the foreign contributions. Yes, so prohibited persons cannot directly or indirectly accept the foreign contribution. Okay, chalo. Then after that, section 5 is a one-time read section. If you want, you can just read it once. It is talking about procedure to notify an organization of a political nature. Remember, there was a point above, organization of a political nature. So anyone who is having, or anyone who is associated, or whose ideologies are, linked to this political activities, those kind of organization will be considered as organization of a political nature. Not really very important. You can just read it once. Okay, then you have got, similarly, for that thing only, for that thing, organization of a political nature, for that thing only, they have given you certain guidelines. Okay, that which organizations will be considered as organization of a political nature. Now, political objectives were there of that particular thing, or who participates in political activities, or you must have heard about youth wing of this political party. Even they will be considered as organization of a political nature. Okay, farmers organization, students organization, workers organization. Okay, but their interest is totally political. Okay, they are having whatever interest they are having is their political interest. So anyone who is participating actively or passively in political activities, those will be deemed to be the organization of political nature. Very, very clear with this? Yes. So please don't by heart that. That's section number 5 along with your rule number 3. Please do not by heart it. Now, going on to the next section, section number 4 is important. Okay, after section number 3, your section number 4 becomes important. In section number 3, we studied about the persons who are totally prohibited from accepting the contributions, from accepting the foreign contributions. Those list of persons were given there. Okay, that list of person was given there. Section number 4 is going to be ulta. Okay, section number 4 is going to be the reverse thing. It is going to talk about certain exceptions, but just try to understand what those exceptions are. Okay, just try to understand that. Now they are telling that nothing contained in section number 3 shall apply to acceptance of any foreign contribution where such contribution is accepted by them. Now what are they trying to say? See, first read this. The point to be noted is that where foreign contribution is accepted for any of the above purposes, in any of the above circumstances, such contribution is exempted even if it is received by a person prohibited under section number 3. Means they are telling that persons who were mentioned under section number 3, if they receive because of these reasons, then they are exempted. Then it will not be considered as what? Then it will not be considered as a foreign contribution. Yes, now listen, there is a reason for that why this won't be considered as a foreign contribution or why they will be exempted, etc. The reason is very, very clear. See, what are they telling? If they are receiving anything by way of salary, wages, remuneration from foreign source, if they are receiving anything from foreign source by the name of salary, wages, etc. First of all, can I say, conceptually, this won't be considered as a foreign contribution at all. Because if I am receiving some salary, wages, etc., then in such cases, it won't be, you would have rendered some service for it. And if you have rendered certain service for it, then obviously that you have not received it for free. So they are just telling that, suppose if office bearer of a political party receives something from the other source, from the outside source, no problem, you can do if it is received in ordinary course of business. Same way, if you have engaged yourself in doing any international trade, commerce, business, etc., if you have received something, no problem. Okay, if you have received something as an agent of a foreign source, if you're working on behalf of a foreign source here in India, and for that if you're receiving any payment, no problem, you can receive. Okay, even those prohibited persons can receive. Okay, if you are receiving something through official channels, okay, no problem, you can receive. If you are receiving anything in form of stipend, if you are receiving anything in form of scholarship, you can receive, no problem. I agree, scholarship comes for free, but can I say scholarship has got its own reasons? Yes, reasons are attached to it, it is conditional, and hence you can receive it. Okay, similarly, if you are an Indian delegate, for example, if you are representing India outside and you have received something in form of gift or present, obviously it is free, but then that is allowed if it is as per CG rules. Okay, if it is as per CG rules, then it is allowed. This is important. Another thing, this point is again important. If you are receiving anything from your relatives, then you can receive it, no problem. If persons who were prohibited under section number 3, if they have received anything from their relatives, it is okay. Just one small reporting is required, and that is, if you have received FC, foreign contribution, in excess of rupees 1 lakh in a particular year from any of your relatives, then you will have to inform the central government in form number FC1, which you can file it online, electronically. Okay, but you can, the main thing here is you can still receive. Okay, so anything that you are receiving for any service that you have provided, for the work that you have done, no problem, receive it. If you are receiving it as an Indian delegate, any gift or present, no problem, receive it. If you have received anything from your relatives, no problem, receive it. Just that in case it exceeds rupees 1 lakh in a year, then in that case just inform the central government. I hope I am very, very clear with this, everyone. Okay, so section number 3 and section number 4, you have to do it together. Section number 3 is talking about what? It is talking about the prohibitions, that so and so persons cannot receive the foreign contributions at all. That was told by section number 3. Section number 4 says that so and so persons, the persons who were there under section number 3, those can receive the foreign contribution, no worries in that, for so and so purposes. I hope I am very, very clear with this. Yes, okay. Now going on to the next section, going on to the next part of the chapter, that is your section number 6. Okay, section number 6 is going to talk about foreign hospitality. Remember, there were two things in the chapter. One was foreign contribution and other one was your foreign hospitality. In case of foreign contribution, we studied mainly two sections, that is section number 3 and section number 4. For foreign hospitality, we just have one section, that is your section number 6. Okay, it is very, very simple. First of all, ma'am, what was foreign hospitality? Foreign hospitality was where we have received any service, where we have received any offer from the foreign source that they are going to bear my travel expenses, they are going to bear my medical expenses, they are going to bear my stay, lodging, boarding expenses, then in such cases, it was considered as your foreign hospitality. Right? So see, I have written here, section number 3 was foreign contribution, section number 6 is foreign hospitality. So they say here is, see here they have not put a direct restriction, they have not put a full restriction. Here they say that for following categories of persons, okay, following categories of persons, if they want to receive foreign hospitality, then they have to take the prior approval from the central government. Okay, ma'am, in central government, from whom should we take the approval? So we have to take the approval from Ministry of Home Affairs, MHA. You have to take the prior approval from them. Okay. Ma'am, what about other persons? Now here they have just given you 5 points. Ma'am, what about other persons? For other persons, there is no restriction. Okay, and for these people also there is no direct restriction. They are telling that no problem. If you want to accept foreign hospitality, then in such a case, take the prior approval from Ministry of Home Affairs and then you can accept foreign hospitality. Okay, who are these persons? Your member of legislature is there, office bearer of political party is there, judges is there, government servant is there, government employees is there. Okay, your organizations are not covered because they cannot go outside India and they can stay. Living person can go outside India, right? You cannot. So, ma'am, why political party is not covered here? Political party becomes an association, but office bearer of a political party is covered here. Yes. So these people, they require prior approval of Ministry of Home Affairs before they accept foreign hospitality. Yes. Now, important thing here is, say for example, if these people have taken some permission from the Ministry of Home Affairs, say for example, they got the benefit of traveling expenses. Someone met their traveling expenses and they got the approval from the central government. They went outside India. These people, persons who are mentioned in section number 6. Okay, they went outside India and after going outside India, there was some emergency medical treatment that was required. Now, foreign source is ready to bear your emergency medical treatment also. Then in that case, you need not take the prior approval of central government and you can directly accept that medical treatment expenditure, but you just have to intimate it to the central government within 1 month of the receipt, the full details of it, if it is more than rupees 1 lakh. Okay, if the benefit that you have got from the other foreign source, if that is like more than rupees 1 lakh, then you can accept the medical treatment expenditure first, like whatever they are paying you, you can accept that first and then you can intimate to the central government within a time period of 1 month. Very, very clear with this? Yes. So now, see, this is what they are telling us here. Now listen, let's do the entire procedure here. What they are telling us here. First of all, the persons who are mentioned above, the persons who should be accepting this foreign hospitality, these persons will have to make an application to the central government. That application will be done in form number FC2 electronically. Okay, and along with that application, they will have to attach the invitation letter that they have received from the foreign source. उन लोग ने अगर बुलाया होगा, if they would have called us, okay, or if they are inviting us, if they are bearing our expenses, they would have sent us some letter, etc. Right? तो जो भी वो letter है, attach it along with the application. This application, etc., that should reach the MHA at least 2 weeks before your date of leaving India. Okay, and once the MHA is satisfied, then in that case you can travel, you can go to the other country, you can avail the foreign hospitality. Basically, you can avail the foreign hospitality. After going there, suppose if there was some emergency medical aid that was required, no problem, avail that, and after that intimate it to the central government within a time period of 1 month. But that intimation is also required only if the value exceeds rupees 1 lakh. No intimation if it is up to rupees 1 lakh. Very, very clear with this? Yes, so this was, so foreign hospitality is comparatively quite open as compared to section number 3. In section number 3, those people were altogether restricted. They were altogether prohibited. Here they are not prohibited. Here they are telling that you can take the prior approval of MHA and you can still avail the foreign hospitality. Yes. Now going further. Okay, now going further, there are some there is some guidelines which is given here, not to be by-hearted, just to be read once. Everyone, just pay attention here. Here they have given you a list of cases, okay, or a list of circumstances where you go outside India, where someone is bearing your expenses. Basically, you are receiving some foreign hospitality, but you are going outside India for some government work only, okay, or for some legal purpose only. Then in such a case, okay, maybe you are going for some treaty discussion thing, or maybe you are going on behalf of some ministry, or whenever your transaction is approved by the ministry, okay, or your expenditure is partially borne by the government, or it is borne by the other country under some agreement. Then whenever you are going because of such cases, because of government work, etc., then in such cases you need not take the prior approval of the Ministry of Home Affairs. Yes, that is given in these guidelines. Okay, then going on to the next section, section number 7. This is very, very important because this was amended some time back. Section number 7 talks about prohibition to transfer FC to other person. Okay, now see, if foreign hospitality cannot be transferred, but at least foreign contribution can be transferred. Whatever you have received it from the other country, that you can transfer it to some other person. So section number 7 says that you cannot transfer your foreign contribution to any other person under any circumstances. Okay, under any circumstances you cannot transfer it, so that there is no issues of misutilization. Okay, earlier there were some conditions which were given here. You were allowed to transfer some, you were, and all those things, but now no, this thing is not at all allowed. Okay, if that person either after obtaining permission, without obtaining permission, that person cannot transfer the foreign contribution to any other person. Okay, see how are you supposed to read it? Many students face this problem in interpretation. They will say, ma'am, you've written it wrong in the book. Shall transfer such foreign contribution. Array, read this. No person shall transfer such foreign contribution to any other person. Okay, just try to understand, read. Then only you will be able to use such words in your exam. Right? So earlier, yes, it was allowed to be transferred. Suppose if I am an allowed person. If I have received foreign contribution from the foreign source, I was allowed to transfer it to some other persons on certain conditions. But now they have put a blanket prohibition. They say that no, nothing doing. If Arpita has received the foreign contribution, Arpita only will have to use it. Okay, Arpita only will have to use it. She cannot transfer it to any other person. Very, very clear with this? Acha, section number 8. Section number 8 also you have to read it fully. I'll tell you what is there under section number 8. Section number 8 says that, now say for example, if you have received the foreign contribution, you are going to utilize it for certain purposes here. Example, if I have accepted foreign contribution from the other country because I want to do certain activities here in India. Maybe for example, if I want to do certain welfare activities here in India. Right, then in such a case, I can use that amount for doing I will have to use that amount for doing the welfare activities here in India. Right, now listen, now they say that, okay, if you have received the foreign contribution, try to use foreign contribution mainly for the purpose for which you have received it. Don't waste money too much into administrative activities. See, otherwise my admin expenses will be so high that I won't be able to use the amount for the main purpose for which I have received it. Right? So try to use it for a maximum for the main activity rather than the administrative activity. Okay, and second thing is, do not use it for speculative business at all. That is not at all allowed. Using it for speculative business is not at all allowed. Okay, for administrative activities, they say don't use more than 20% of the FC for admin activities. Okay, if at all by chance if the admin expenses exceed 20%, then take the prior approval of CG. Up to 20%, no approval required. More than 20%, take the prior approval of the central government. Very, very clear with this? Yes. Acha, now then they have given you the definition of admin expenses, what are covered. Mainly all your running expenses, salary, wages, traveling expenses, then your remuneration expenses, accounting expenses, maintenance expenses, your legal professional charges, rent expenses, all these are covered in your administrative expenses. Very, very clear with this? Acha, but now listen, just try to understand. If you talk about schools, okay, if you talk about hospitals, then the salary paid to doctors, salary paid to teachers, that won't be counted as admin expenses because that becomes your direct expense, right? That becomes your direct expense. So that will not be counted as admin expense, means that can be done to whatever level you want to do. Okay, very logical. Achha, speculation is not at all allowed because if there is a chance that the money will be increased or the fund gets increased by doing the speculative activities, there is an equivalent chance that you can lose this money also, right? So you have received foreign contribution for free for doing some activities here in India, so don't waste that money. So that's why foreign contribution cannot be used for any speculative activities at all. Very, very clear with this? Okay. Then after that, next one, that is your section number 9. Okay, section number 9 is talking about what? Section number 9 is talking about central government can prohibit receipt of FC in certain cases. Now, this is very, very general, not to be by-hearted. This is very, very general. See, for foreign contribution, they had already told you that you cannot, some people cannot receive the foreign contribution under section number 3. Remember that? Some people cannot receive foreign contribution in section number 3, that was already told to you. Acha, some people had to take the prior permission from the Ministry of Home Affairs under section number 6 for availing foreign hospitality. That prohibition was already there. Acha, some exception was given in section number 4, that we already know. Okay, so now what are they telling us here? Apart from whatever is given in the respective sections, apart from that also, can CG still prohibit you? Suppose if I am not covered in section number 3, means I can accept foreign contribution, but can central government still put a restriction on me that you can not accept the foreign contribution? Definitely yes, it has got the sole power under the act. So whenever sovereignty and integrity of our country is affected, okay, whenever it is required to be declared in public interest, okay, for fairness to the election process, for maintaining friendly relations with other country, to maintain that harmony between religions, between castes, between societies. If for that purpose, if central government thinks that Arpita should not accept foreign contribution, central government can put that restriction on me under section 9 and it can prohibit me from accepting the foreign contribution or foreign hospitality, as the case may be, whatever it is. To safeguard these things, these are very, very important. These 5 pointers relating to sovereignty, public interest, etc. These are super duper important. To protect this, this is an etc. kind of a point. See, you were already restricted under section number 3, some leniency was provided in section number 4, again some restrictions was put in section number 6, but apart from that also CG has got the power that it can still prohibit you from accepting the foreign contribution or foreign hospitality. Yes? Acha. Now, say for example, if you have contravened the act, and you have accepted the foreign contribution, then in that case, CG will now put a restriction on you. It will tell you, you cannot deal with that. Means you cannot transfer it to any other person, you cannot use it, you cannot sell it, etc. You cannot do anything with it. A prohibition order will be put on that particular person, and then he will be sent to the section number 7 of the Unlawful Activities Prevention Act 1967. Okay, means that person will be prosecuted under this particular section as if he is carrying on some unlawful activities. Ma'am, why unlawful? Because he was prohibited, he was not allowed to accept it, then too he accepted. That's why he is getting that punishment. Very, very clear with this? Yes. Okay, then after that, the next one is your the rule which is coming up. The rule which is coming up here is it is just talking about the previous section only, where we just discussed that central government will issue a prohibitory order. Remember that prohibitory order was issued on that person who has accepted the foreign contribution in prohibition. So either central government will send a person to your office, or he will send it by way of registered post with acknowledgement due, or speed post to his whatever the known address of that particular person is. It will be sent to that particular address. Either it will be sent to his residence address, or it will be sent to his place of business, or wherever he was operating, that particular address that it will be sent. Okay, acha, suppose if it cannot be served, suppose if that person is not available, we did not get any acknowledgement, etc., then we will stick that order outside the premises, either outside his residential premises or outside his place of business. We'll stick that prohibitory order that you are going to be convicted under Unlawful Activities Prevention Act 1960. So this is how basically the action is being taken under the Foreign Contribution Regulation Act. Are you understanding this, everyone? Yes? Okay. Now going on to the next section, section number 11. Okay, section number 11. This is basically from here basically your procedure starts. Okay, from here your procedure starts, which is very simple. Now, what are they telling? Now, whenever you want to come under FCRA, whenever you want to accept, whenever you want to accept foreign contributions, etc., then in such cases, you have to get yourself registered with the central government. Okay, you have to get yourself registered with the central government. Then only you will be called as an authorized person to accept the foreign contribution. Achha, so now they say that any person who is having a cultural background, economical reasons, educational reasons, for religious purposes, for conducting social programs, if you want to accept foreign contribution for any of these purposes, you can accept foreign contribution, but only after obtaining a registration certificate from the central government. Okay, means suppose if I want to conduct some educational activities here in India, and for that particular purpose, I want to accept the foreign contribution. No problem, Arpita, accepted, but you need to have what? You need to have the certificate of registration from the central government, unless something else is provided in the act. This is what section 11 says. Okay, acha. But if someone is registered, if someone is registered under some section number 6 or granted permission under the old FCRA Act, then that person need not take the certificate, etc., for a period of 5 years. See, means that was a transitional phase when the old act was removed and the new act became applicable. If you were registered under the old act, then you can continue in the new act for a period of 5 years. But this section 6, don't confuse it with foreign hospitality. This is of the old act. Acha. Now say for example, if that person is not registered, if that person is not, he has not obtained that certificate of registration from the central government, then that person, if that person still wants to accept the foreign contribution, he can do it only after obtaining prior permission of the central government. Okay, so there are two ways basically of, accepting the foreign contribution. One is either you have to obtain a certificate of registration, or you have to take the prior permission of the central government. Okay, see, what is the difference between the two? Certificate of registration is kind of a permanent thing. It will be valid for some number of years. But if I take prior permission, then that is going to be valid only for, the purpose for which you have received it. Means that is going to be a one-time thing kind of. Right? Okay. So this way, there are these two ways. Okay, there are these two ways of accepting the foreign contribution. Now, when you talk about certificate of registration, that certificate of registration, for that you will have to pay a fees of, for obtaining that you will have to pay a fees of rupees 10,000. You have to submit the application in form number FC3A along with the required documents. If you want to go with the prior permission thing, prior permission thing, it got cut by me. If you're going for prior permission thing, then in that case, you will have to go and submit form number FC3B along with a fees of rupees 5,000. Okay, so this way you can go and make an application to the central government. But before making an application, make sure that you have opened a FCRA account, bank account, because if you want to receive, it is going to be received only in one account, that is your FCRA account. Right? Then the central government, if it wants to gather any information about you, or if it wants to conduct any inquiry, etc., and if it feels that maybe you can contravene any provisions or etc., then in that case central government can take required actions upon you. Right? So in this section number 11, mainly what we studied was, if you want to accept foreign contributions, then in that case obtain the certificate of registration. If you were not able to obtain the certificate of registration, then in that case you can go for the prior permission thing. For certificate of registration, form number FC3A along with fees of 10,000. For prior permission, form number FC3B along with fees of rupees 5,000. Right? That was 10,000. This is 5,000. Very clear with this? Yes. Acha, even people like you and me, individuals, HUF, etc., even we can accept the foreign contribution, no problem in that. Private limited company, partnership firm, etc., if they want to do some charitable activities, even they can accept the foreign contribution, right? Acha, even CG institutions, SG organizations, etc., even they are required to accept obtain the permission. It's not that we come under CG only, so we don't need to take the permission. No, it's not that. Even they have to obtain the permissions or certificate, etc., from the central government. But yes, the bodies which are required to be audited by the CAG, okay, they are exempted from the provisions of FCRA. Okay, the bodies which are established under act, under some act of parliament, under central or state act, and whose accounts have to be compulsorily audited by the CAG, they are exempted from the provisions of FCRA. But otherwise, everyone is required to take the prior permissions, obtain certificates from the central government, and then only they can go ahead. Very clear with this? Yes. Acha, similarly, say for example, now let's get into the detail. Okay, now let's get into the detail. Now we are talking about the certificate of registration, of which we made an application under FC3A. For that, let's do it in detail here. Now they are telling that, suppose if any person who wants to obtain the certificate of registration, that person will have to make an application to central government, that we already know. But before making an application, he will be required to open which account? He will be required to open a FCRA account, and he will have to mention all the details, that why he wants to receive FC, for what purpose he is going to be utilizing it, from whom he is going to receive, and all those things. Then depending upon your application, central government will decide whether to accept your application or to reject it. Okay, if suppose we make an application to the central government, then in that case, after that central government will check your application, and it will generally within 90 days it will grant you the certificate or grant you the prior permission. Okay, generally it is done within a period of 90 days. If it does not grant, then in that case central government will have to communicate us the reasons that why it has not granted. Okay, that is one thing. And another thing is, suppose if a person is not eligible, if he should not be getting that certificate or he should not be getting the prior permission, then in that case central government will totally reject it. Very clear with this? Yes. Okay. Acha, now listen. Now, once all these things are clear, we come to know that finally come to know that whether the central government is going to grant us the certificate, grant us this authorization or not. Okay. Achha, there are certain other conditions also. Suppose if that person is a fictitious person, suppose if that person is a benami person, if he has been prosecuted or convicted, if suppose he has been found guilty of misutilization of funds, etc., or if that person is engaged into some wrongful activities, or he has some other propaganda, or if he wants to achieve some personal gains out of it, or he was already prohibited from accepting foreign contribution, if he is already in that negative zone, then in that case that person won't be granted any certificate of registration also, and that person won't be granted a prior permission also. Right? And acha, along with that person should be, he should have undertaken some reasonable activity in his chosen field for benefit of the society. It should not happen that, acha, today I decide let's do some welfare thing and I will go and accept directly foreign contribution. You can raise money from India also. Okay, so that person should be ideally, before this also, that person would have done some activities relating to this welfare, etc. He has done something for benefit of society. He should not have been convicted or prosecuted under any law. No cases should be pending against him. He should be a clean person with the intention of doing the charitable activities, welfare activities, and in the past also if he has done that. By seeing all these things, the central government will decide whether permission should be granted to such person or not. Acha, along with that, if central government is thinking it is not in the sovereignty or integrity of the country to provide him the registration, or it will affect the election process, or it will, same thing, same pointers, or if it will lead to some communal disharmony, then central government can decide not to provide him with that. Very, very clear with this. Yes, if central government suppose says, no, I am not going to provide you the certificate or prior permission, etc., central government will record the reasons for doing so, and it will give a copy to the applicant that no, we cannot provide you. Okay, central government will just have to just record the reasons with itself, and it will provide the rejection thing to the applicant, but central government is not bound to communicate the reasons for refusal. Okay, that person can get the information, that applicant can get the reasons by making an application to the RTI, but central government is not required to provide the reasons for the same. Acha, suppose if certificate is granted, okay, then in that case that certificate is going to be valid for a period of 5 years. Suppose if prior permission is granted, then that permission will be applicable, will be valid for that particular specified purpose. Acha, suppose if today my application got rejected, I cannot make a new application for a time period of 6 months. Today I applied, okay, it got rejected, I cannot make a new application for a time period of 6 months. Yes. Then after that, going on to the next one, this was again a new thing which had come. This rule number 9A, if value of foreign contribution on the date of final disposal of an application for obtaining permission is over rupees 1 crore, the FC that you're going to receive, central government can allow you to receive the foreign contribution in installments. Okay, provided that the second and subsequent installment shall be released after submission of proof of utilization of 75% of the FC received in the previous installment. Whatever amount you're receiving in the first installment, okay, that amount into 75%, its utilizations proof you will have to submit it. Okay, you will have to submit, then only your further installments will be released. Okay, they will come and check it. They will come and check the utilization, and then only the subsequent amounts will be released. But this is applicable only when the FC amount is above rupees 1 crore. Acha, once you've got the certificate, I told you that certificate is going to be valid for how much time? That is going to be valid for a period of 5 years from the date of its issue. Acha, before that, if central government wants to cancel it, it can do that. If it wants to suspend, it can do that. But normally, if everything goes good, its validity is going to be of 5 years, and after that, it can be renewed. Okay, whenever the central government is going to provide you with the certificate or prior permission, it will ask for your identification proof also. Okay, for identification proof, Aadhaar can be used. Just like you must have studied in your PMLA chapter also for verifying the KYC, remember, copy of passport and all those things. The same way, normally they say that we can use Aadhaar number for that. And suppose if that person does not have Aadhaar, or that person is not required to have Aadhaar, then the copy of passport can be used. Okay, now listen, once you have got the certificate, after that, if everything goes good, no problem. But if, say for example, if some grounds are attracted, if some grounds, means if some problem arises, maybe if you have violated some terms and conditions, or if you have misutilized, etc., then in that case, central government will first suspend your certificate. Okay, it may suspend your certificate for a time period of 180 days, plus can be extended by another 180 days. Okay, so 180 plus 180 days, for this particular time period, your certificate can be suspended. Okay. Now, once it is suspended, then during that time, inquiry will be going on. Right? Central government will try to find out what to do now. Should we cancel it? If suspension is temporary, so central government will try to find out now whether should it cancel it or should it continue the certificate. Acha, what will happen to our FC during this period of suspension? So we cannot receive any new FC during this period of suspension of certificate. Okay, you cannot receive, but if you want to receive, take prior approval of CG. Okay, and another thing is you cannot utilize, they say that you cannot utilize the FC during this particular period, but there is an exception here. Suppose when the certificate is suspended, then you can spend up to 25% of the unutilized amount, but with the prior approval of central government. Okay, whatever amount is kept with you, into 25%, maximum up to this amount you can spend with the approval of central government. Balance 75% you cannot do anything about it till the time your suspension is revoked. Till the time government lifts that suspension, till that particular time you cannot do anything with it. Okay, so 25, see, first they told you cannot receive, you cannot utilize, but then in the exceptions they are telling you, okay, up to 25% you can utilize for some particular objectives, but only after obtaining the prior approval of the central government. Yes, acha, now what things will the government check, or what can lead to suspension, or what can lead to cancellation of your certificate? So say for example, if we have made a wrong statement, false statement, not wrong, if we have made a false statement knowing it to be false, or if we have violated any terms and conditions, or if we are not engaged in the activity which we told that we are going to do. Okay, if we have violated the provisions of the law, if one is violating the terms and conditions of certificate, another thing is violating the provisions of the law itself, or if it is in the public interest to cancel your certificate. In such cases, central government will give you a ROBH, reasonable opportunity of being heard, and after doing that, central government can cancel your certificate of registration. And once it is cancelled, there is a lock-in period on you, or there is a cooling period on you for a period of 3 years. You cannot come back into FCRA. Okay, if once your application for certificate was rejected, you were not allowed to make a new application for a time period of 6 months. Here you were granted the certificate, you did some activities, then you led to any of these pointers relating to cancellation, and then after that, once your certificate is cancelled, you cannot work under FCRA for a time period of 3 years, and whatever amount is lying unutilized with you, now that will vest with the prescribed authority. Means now you do not have any control over that foreign contribution. You will lose all the control. Okay, so we studied about suspension, we studied about cancellation. Can it be surrendered? Can we voluntarily surrender it? Yes, now say for example, if we have completed all the activities properly, we received FC, we utilized it, everything is over in good faith, can we voluntarily surrender it? Definitely you can surrender it by making an application in form number FC7 for surrender of certificate. Or if we have lost interest in doing such activities and I want to surrender everything to the central government, I can do this surrender of certificate. Very clear with this? Maybe you do not have adequate funds for doing this activity. Maybe you have lost interest in it. Then in such cases, the entire matter and the FC, etc., everything will now vest in the banking authority, in a prescribed banking authority, till the time central government gives any further instructions. So you absolutely lose control over. Okay, so 3 things we studied. One was about suspension, other thing was about cancellation, and last one was about surrender of your certificate. Okay, next thing that comes into picture is renewal of certificate. Now our certificate of registration was valid for a period of 5 years. Now what if I want to renew it? Then in that case I have to get it renewed 6 months before the expiry, that is in advance. Okay, your renewal will be applicable from the last day only, but you can just complete the procedure 6 months in advance. Okay, but yes, central government will check. Again, you are not a benami person, you are not a fictitious person. It will check everything, and then you can make a renewal application, which will be done in form number FC3C. Okay, FC3C, you will have to do it. Very, very clear with this? Yes, acha. For renewal, you will have to make a fee payment of rupees 5,000. Once an application is done to the central government will ordinarily renew it within a time period of 90 days. Again, it will be renewed for a period of 5 years. If it is not renewed within 90 days, then CG will just communicate the reasons to the applicant. And if everything is proper, then central government will provide you the renewal. Very clear with this? Yes. Acha, suppose if I forget to do the the renewal within 6 months before the expiry, then in that case you can still do it. A late application can be filed along with a late fee of rupees 5,000, but not later than 1 year after the expiry of original certificate. Suppose if you fail to do it in the last 6 months, no problem, chalo theek hai. Uske baad mein bhi, after that also you can do within a time period of 1 year along with the late fee. Even that will be counted as renewal only. Okay, but what if you do even after that 1 year? Then your certificate is gone, then you'll have to start afresh. Okay, then you will have to start afresh. Very clear with this, everyone? Okay, then going on to the next part of the chapter, which talks about accounts, audit and all those things. As we had already studied that before obtaining the prior permission, before obtaining the certificate of registration, etc., we were required to open an account called as FCRA, remember? FCRA that will be opened in a branch of State Bank of India at New Delhi. That is mandatory. Okay. And now that one FCRA account that you open, that is for receiving. Okay, that is for receiving of foreign contributions. Just remember one thing, whatever FCs you receive from the other country, that can be received only in one bank account. Okay, that is going to be this SBI New Delhi, any branch. Okay, designated branch, there you have to. Achha, but now if I want to utilize my FC, if I want to spend this FC, for that purpose, I can open another FCRA account. Okay, I can open another FCRA account in any other scheduled bank. Then SBI is not mandatory. But first account that you open for receiving the FCRA, for receiving the foreign contribution, that is going to be the SBI New Delhi branch FCRA account. Very clear with this? Yes, for utilization, you can open multiple account, that can be in any scheduled bank. Okay. Achha, if you don't want to open FCRA account, if you want to open one or more account in one or more scheduled banks, no problem, but that is going to be only for utilization, but not for receipt. Okay. Now, this money, this foreign contribution that you are receiving, that cannot be mixed with your other incomes. Okay, that cannot be mixed. This has to be kept altogether separate. For this, the books of accounts will also be maintained separately. Audit will also be done and all those things. But this cannot be mixed. Okay, this cannot be mixed with your normal income. Achha, another thing is, you see, you will have to do time to time reporting to the central government about receipt of FC and utilization of FC. Along with you, even the banks will report to the central government as soon as you receive FC or as soon as you utilize FC within 48 hours of any transaction. So central government is going to get the data from you also, and central government is going to get the data from banks also. Very clear with this? Yes. Achha, suppose if there is any change in your bank details, suppose if there is any change in the office bearers of your association, suppose if there is any change in your name, suppose if there is any change in your nature of activities, please inform it to the central government within 15 days of the date of change. And that will be applicable, means every change in your certificate, etc., will be reflected only after it is approved by the central government. Very clear with this? Okay. And another thing that I already told you, when bank is going to inform to the central government within a time period of 48 hours. Okay, it will inform you within a time period of 48 hours. Even we are supposed to intimate to the central government what amount is received by us, from where we have received it, how we are going to utilize it, etc. Yes, so banks are also supposed to intimate to central government, and even we are supposed to intimate it to the central government. Okay, which all forms and when and etc. we are supposed to intimate, that is given in the next regulation number 17. You can just read it once. Okay, then going on to the next part, that is maintenance of accounts. So we already know that every authorized person means who has got a prior permission or who has got a certificate of registration, that person will have to maintain all the details of the FC received by him. Okay, and how FC is to be has been utilized by him, he has to maintain the full accounting details of that particular thing. Separate sets of books of accounts, as I already told you, that has to be maintained about the FC received and FC utilized. Audit of this can be done. Okay, if suppose the authorized person fails to provide any information to the central government, or if central government thinks that we need to do certain inquiries into this, then central government can issue any general or special order, and it can order for any surprise audit of books of accounts. Means that officer can enter into your premises at reasonable hours, means after sunrise and before sunset, for auditing the books of accounts, and yes, audit can be done. Very clear with this. Acha, now say for example, this is a different section altogether. Section number 21. Every election candidate who has received any foreign contribution at time 180 days immediately preceding the date when he was nominated as election candidate. Suppose if today he is an election candidate, but before 180 days, before that, if he was not an election candidate and if he had received any foreign contribution during that time, then he will just have to intimate it to the central government that when I had received that FC, I was not an election candidate. As an election candidate, you cannot receive it. But if earlier you were an election candidate, then you were allowed to receive. So you just intimate the central government how much amount was received, from where it was received, how it was utilized. Then you can become an election candidate, no problem in that. Okay, and that you have to intimate within 45 days from the date on which he is now nominated as an election candidate. Right? Okay. Acha, now listen, when you talk about your foreign contribution, okay, say for example, if someone has accepted foreign contribution and if that person has now ceased to exist, or that person has become defunct, etc., then in that case, his entire FC along with accreted income on FC along with assets created out of FC, that will now be disposed of under law. That person has ceased to exist, or that person has become defunct, he has become inoperative, etc., then everything will vest in the central government, and central government will see how it is supposed to dispose of the foreign contribution. Right? Then going on to the next part, the last part, that is adjudication. Okay, this is kind of important. Last important thing that we have to do here, adjudication. Now they say that suppose if FC is seized, means article, currency, security which was obtained in contravention, then only it will be seized, then only it will be confiscated. If it is seized, then it will be liable for confiscation. Okay, adjudication will start, means the authorities will first try to find out whether seizure should happen or not, whether confiscation should happen or not. So it will be adjudged by whom? That is important. So it will be adjudged by the session court. Okay, it will be adjudged by the session courts within local limits of whose jurisdiction the seizure was made. Okay, and one more authority who is going to be there here is any officer not below the rank of assistant session judge. Any officer not below the rank of assistant session judge if the value does not exceed rupees 10 lakh. Okay, means basically for small cases the matter will be taken up by the officer not below the rank of assistant session judge. For any particular matter, session court can come into picture. It will adjudge whether this FC is legal or not, whether it should be confiscated or not, etc. That adjudication will be done by these people, and after that it will decide whether confiscation should happen or not. Right? Acha, confiscation can be done only after giving reasonable opportunity of being heard. This is your principles of natural justice. Now, if someone is aggrieved that confiscation should not have happened, then that particular person can go and file an appeal within 1 month from the date of communication of order, and extension of 1 more month can be provided. Okay, who were the two officers who can pass the confiscation order? Either the session court or the officer not below the rank of assistant session judge. If the order was passed by session court, then you can go and file an appeal before high court. If the order was passed by officer not below the rank of assistant session judge, then the appeal can be done before the session court. So the rank is assistant session judge, then session court, and then the high court. Acha, if we are aggrieved in the entire act, if we are aggrieved by any other order, then you can directly go and make an appeal before the high court within 60 days. If you are aggrieved by the confiscation order, then the above thing will be applicable. If you are aggrieved by any other order, say for example, if we are aggrieved by, if prohibited persons of FC, if they are aggrieved by the CG's order, etc., then they can directly go and appeal before the high court within a time period of 60 days. Confiscation appeal time period was 1 month plus 1 month. This time period is within a time period of 60 days. Very clear with this? Yes. Achha. Then after that, suppose this was appeal, means if someone is aggrieved, then that person can go and file an appeal. Okay, now say for example, if central government is of the opinion that order passed by it needs to be revised, then central government can do it suo moto, or if someone has made an application to the central government that I don't want to go for an appeal but I request you to do a revision in your order, then in that case central government can do so, but central government cannot do it suo moto after 1 year from the date of order. If it wants to do it suo moto, it has to be done within a time period of 1 year. Very clear with this? Yes. So revision is one thing, appeal is another thing. Appeal is means we are challenging that order, and revision is we are just requesting the central government that please revise this particular order, maybe because it has so and so deficiencies in it. Achha, offenses and penalties, please do not by heart it. Offenses by companies, you must have studied same thing in your money laundering chapter also, that if offense is done by a company, then the person in charge at that point of time when the offense was committed, that person will be guilty unless he proves that he had exercised due diligence and he had tried to prevent such type of offenses. Right? Achha, another thing here is compounding. Another concept coming up here is compounding of certain offenses. Suppose if there is some offense done under FCRA, see obviously we do not have the entire act in our syllabus, but if you have done any offense under the act where you have got certain punishment of maybe say imprisonment or fine or kind of thing, means where imprisonment is not mandatory. So if got any such punishment, then in that case you can go and make an application before the authorities that sir please compound it. Please compound it means please reduce it. Compounding means kam karna, to reduce it. Okay, but if you have done, suppose once you have done an offense, you got the compounding. Again within a time period of 3 years, you again do a similar offense, fresh offense. Then you will not get the compounding for the second one. Yeah, otherwise, though we will do the offense, we'll ask for compounding. We'll do the offense, we'll ask for compounding. That won't do. Okay, so if you do a new offense within 3 years, then no compounding for the second offense. But what if we do it after 3 years? Then it will be considered as a fresh offense. Then compounding will be available. Very clear with this? Yes. Achha, then you have got certain miscellaneous provisions, not at all important from exam point of view here. If suppose during this confiscation, before confiscation or maybe before adjudication, etc., if central government requires any information, then central government can appoint inspection officers and it can ask for information, call for information from any person, require any person to produce any documents, deliver any documents, etc. And that person, that investigating officer is going to have all the powers of a police in charge, and he can do the inspection, inquiry, investigation, etc. He can do that. Okay, central government is going to have the sole power under the act. Central government can issue directions to any of its officers, etc. to do anything. It can delegate the work also to its officers except one work. Okay, one work cannot be delegated, that is to make rules. If we have to make rules under this FCRA or FCRR to be very specific, then in that case that rules can be made only by the central government. Rest every work can be delegated by the central government. If central government wants to provide certain exemptions under the law, central government can do that also, no problem. It just needs to release an notification for that, and it will present it before both the houses of parliament, and it can exempt certain things. Okay, if suppose any transaction takes place between two countries' government of India, government of US, etc., then in that case FCRA is not applicable. Okay, if I am receiving from government of other country, FCRA applicable. But if government of India is receiving from government of other country, then FCRA is not applicable. I hope you are very clear with this. Yes, I hope you're very, very clear with this and the entire chapter is clear to you. Yes, appeal time period summary is given up here. Offenses and penalties I have not given because it is really not important. And then the summary tables are given. Yes, so just break the chapter. If you find it very lengthy, just break the chapter and study it accordingly. It is very, very simple. Yes. Okay, so let's start with the super quick revision of the next chapter, that is SEBI Act 1992. Yes, so yes, there are two parts in this particular chapter. One is the SEBI Act, which we are going to start with, and another part of this particular chapter is the SEBI LODR regulations, right? So first, let's take up the Act here. Now, what is the purpose of this particular Act? What things are we going to study in this particular Act, and what are the objectives? What is the purpose of this Act? As you already know, since it is talking about your SEBI Act, so it is going to talk about the securities market, it is going to talk about the investors in the securities market, it is going to talk about the stock exchanges, persons associated with the securities market like the merchant bankers, mutual funds, etc. We are going to study about all those things and the operations, how SEBI operates, and all those things are going to be there here. So basically, what are the objects of this act? Three very important objects in this particular act is, first one is to protect the interest of investors who are there in this particular securities market, people like us, to protect the interest of us, to promote the development of the securities market, and to regulate the securities market. Okay, now dealings are happening, trades are happening in the securities market, so that it is going on properly, it has to be regulated by an authority. So SEBI is that particular authority which is going to regulate the stock exchanges, etc. And then we are going to, since our ultimate motive is to develop the securities market, so we are going to take steps to promote the development of securities market, and we are the ultimate people who are there in the securities market, that is the investors. So our interest is going to be like, they are going to take efforts to protect the interest of the investors. Okay, some other things are also there, just like your brokers are there, merchant bankers are there, mutual fund companies are there, they also actively participate in this thing, securities market. So even the activities done by them will be monitored, we are going to regulate them, and we are going to develop a code of conduct for them, right? Standards will be set for them. So all these things are handled by the SEBI. So now how is SEBI incorporated? SEBI is just like a body corporate, okay, just like a company, it is just like a body corporate which is having a perpetual succession and may have a common seal. It can hold property in its own name, it can purchase the property in its own name, it can sell the property, means it is having a separate legal entity, and it can sue any person or it can be sued by any other person. Very clear with this? So normal body corporate features are there. Now, when we talk about a company, okay, then we know that company has a management within it, right? Company has a management within it. So now, how is SEBI constituted? Let's try to understand that. So SEBI is going to have, first of all, you have to remember it in this way, 1215. Okay, remember it in this way, 1215. Okay, ma'am, why should we remember in this particular way? So it is going to have one chairperson. Okay, it is going to have one chairman who is going to be nominated by the CG. It is going to have two members from the Ministry of Central Government. Then it is going to have one member from the officials of RBI, and then it is going to have 5 other members, out of whom at least 3 should be whole-time members. So 1215. Okay, this way these people are going to sit in the management of the SEBI. Now listen, so 1, 2, 1, 5, 3, 4 and 9, total 9 people are there here. Okay, at least 9 people should be there in the management of SEBI. That does not mean that SEBI is just going to be run by these 9 people only. Okay, it does not mean that SEBI is going to be run by these 9 people only. These are the people who are sitting in the topmost management, and now within that we are going to have other members, other employees, staff, etc. will be there, who is going to assist the top management to cover up the objectives of the SEBI. Very clear with this? Okay, now let's talk about the tenure, etc. of these people, of the chairperson and the members. Now when we talk about the chairperson and the whole-time members, okay, chairperson and the whole-time members, they say that once they come into SEBI, their tenure is going to be for a period of 5 years, maximum up to 65 years of age. maximum up to 65 years of age, they can act and they can be reappointed by the central government. Okay, and these are those people, this chairperson and whole time member should be such people who are totally independent from the SEBI, means they are not having any kind of interest, be it financial interest, be it non-financial interest. They should not be having any interest in the SEBI, otherwise it is going to affect their functions. Very clear with this? Acha, along with that, the chairperson, the first 1215 mein, jo pehla wala, the first chairperson and the last line, 5 other members who were there. Okay, chairperson and these members, they should be having that ability, integrity, knowledge, experience in the fields of LAFA, law, accounts, finance, economic, administration, etc. They should be having a proper adequate knowledge in these particular, or they should be having proper experience in these particular fields. Okay, now if these people are appointed by the SEBI, they can be, if these people are appointed by the CG, they can be terminated by the CG as well. Okay, the chairperson, first one, chairperson and those 5 other members, they can be terminated by the central government before their tenure gets over. Terminated means that they can be removed from service even before their tenure gets over. Either you can remove them immediately by paying the next 3 months salary and allowances, or you can give them 3 months time that you are going to be, or 3 months notice kind of a thing, that you will be removed after a period of 3 months. Very clear with this? Yes, and suppose this was about the removal. So CG can remove these people. CG can either remove the chairperson or it can remove those 5 members. Now, any particular person from the topmost management of the SEBI, those people can even resign. They can relinquish their office anytime before their tenure gets over by giving 3 months notice in writing to the central government. Very, very clear with this? Yes, so resignation can be given by any particular person. It can be given by chairperson, it can be given by 2 members, it can be given by that one RBI official, it can be given by those 5 people. Okay, but they have to give 3 months notice in writing to the central government. In this, they cannot say that you pay us 3 months salary and allowances and we want to resign it from today. No. In case of resignation, you just have one option. You can resign by giving 3 months notice in writing. I hope I am very, very clear till here. Yes, so here basically we studied about the tenure. Okay, with chairperson and whole time members, the tenure is going to be 5 years, maximum up to 65 years of age. They can relinquish their office or they can even be terminated by the central government. Very clear? So basically, who has got the powers to relinquish the office of these particular persons? Central government. Central government has got the powers to remove these people. Okay, when central government is removing, there should be some reason for removal, right? You cannot simply remove someone. So if central government is removing any members or those the chairperson or those members, then in such cases, either that person is adjudged as an insolvent, or that person is of unsound mind, or he has committed some offense of involving moral turpitude, or he has abused his position. That person has abused his position. Then in such cases, central government can remove these members, but only after giving a reasonable opportunity of being heard. Okay, so insolvency, unsound mind, offense involving moral turpitude, or if that person has abused his position, then he can be removed. Okay, so now SEBI is the topmost management people are sitting there. Meetings will be conducted under SEBI from time to time to discuss about the matters, and if any particular person, if that person is a director of any particular company, and if that person is having some direct or indirect interest, okay, maybe financial interest or non-financial interest in any matter which is going to be discussed in the SEBI meeting, then such member cannot participate in the meeting, because ultimately it is going to affect the interest. Okay, suppose if there is any temporary vacancy in the SEBI, then decisions can be taken by remaining members. Okay, then decisions can be taken by remaining members. The decision taken by remaining members will still be treated as valid. Okay, decision taken by remaining members will still be treated as valid. It will not invalidate any proceedings. It will not invalidate any decision. See, there can be temporary vacancies in the SEBI, right? Someone has passed away, someone has been removed, etc. Then there can be a temporary vacancy in the SEBI. So till that time, till the time the vacancy is filled, the remaining members can take the decisions. Very clear with this? Okay, similarly, now going on to the next section, that is section number 11. You can mark this section as important. So section number 11 basically talks about powers and functions. Okay, it talks about powers and functions of the SEBI. So what are the duties of the SEBI? It is same as the three important objectives which I had told you: to protect the interest of investors, to regulate the securities market, and to promote the development of the securities market. Okay, one thing is that. Another thing, some more powers that only SEBI has got. It will regulate the business of stock exchanges. It will control the intermediaries who are there into business, who are there into the securities market thing. It will promote investors' education. Okay, it will take steps to educate the investors. It will prohibit insider trading. It can call for information. It will levy charges. Maybe when it is providing the recognition to the stock exchanges, etc., it will levy fees on them. It will levy charges on them. All those things can happen. Right? Acha, SEBI also has got the powers. It can do inspection of books of accounts or any registers or any documents of a listed company or a proposed to be listed company if it has reason to believe that these companies might be indulging in insider trading or unfair trade practices. Okay, apart from this reason they cannot go for inspection. अगर listed company या to be listed company को हाथ लगाना है तो ये वाला reasons होना ही चाहिए. ठीक है, inspection के लिए ये वाला reason होना ही चाहिए that we have got a doubt that you might be involved in insider trading and fraudulent and unfair trade practices. Very clear with this? Okay, another thing is SEBI has got all those powers as vested in a civil court. Okay, we have studied this before also, even you would have studied this before. So SEBI has got all the powers as vested in a civil court. Like civil court has got the powers that it can call for any information, it can summon any person, it can examine any person on oath, etc. Same powers are there with the SEBI also. Okay, now when SEBI is conducting the inspection, inquiry, etc., and now if SEBI is of the opinion, okay, if SEBI is of the, or maybe during investigation, if SEBI is of the opinion that we should suspend the trading in stock markets, or we should suspend any office bearer of any stock exchanges, if we should stop any person from accessing the securities market, like he should be banned, etc., then all these steps can be taken by the SEBI. And one important point here is SEBI also has got the power to attach bank accounts for a period of maximum 90 days of any person who is involved in this issue. Right? So that is one important thing that is to be studied there. And whatever amount SEBI impounds, okay, if SEBI is impounding any particular amount, SEBI is doing some disgorgement, then that amount will be credited to the IEPF, Investor Education Protection Fund. It will be credited to this particular account. Okay, say for example, if I am dealing into any securities and I have wrongfully earned some profit, then those profits can be seized, that can be disgorged, then that will be credited to the IEPF, and that will be utilized by SEBI for the specific reasons only. Right? So these were some of the powers. Okay, these were some of the powers and functions of the SEBI under the SEBI Act. Okay, now here they have given you some additional functions of SEBI under the SCRA. Earlier we used to have SCRA in our syllabus also. Now that has been removed from our syllabus. So these are the extra powers which are available with the SEBI. SEBI can call for some information from the stock exchanges. It can call for some periodical returns from the stock exchanges. Okay, it will approve the bylaws of the stock exchanges. It can amend the bylaws of the stock exchanges. It will provide licensing to the dealers in securities market. In case of listing of securities, SEBI has got the powers. Right? So these are some extra powers which are available with the SEBI, but those are there under the SCRA. Very clear with this? Yes? Okay. Now similarly, when we discuss about prospectus, okay, SEBI has got the powers to prohibit the issue of prospectus. It can regulate how a prospectus is to be issued. When a company is coming up with an issue, at that time it advertises, right, that we are going to come up with an issue, it issues prospectus, etc. So SEBI has got the powers. SEBI can specify by way of regulations what things should be disclosed in the prospectus mandatorily. Okay, SEBI has got the power to decide the content of the prospectus. That is applicable for each and every company, but for some companies, for some specific companies, SEBI can also specify that, okay, if say for example, if a telecom company is coming up with an issue, then these are the extra pointers that you have to specify in the prospectus. Okay, prospectus you must be knowing, right? So contents of the prospectus can be decided by the SEBI, or it can be, extra, this thing can be given, extra directions can be given by the SEBI. See, normally Companies Act has already told that what all things should come in the prospectus. That is okay. Apart from that, if SEBI wants something else also to come into prospectus, then it can be specified. Right? That can be specified by the SEBI. Now, similarly, there is now another concept here coming up, that is section number 11AA, which is talking about the collective investment scheme. Okay, it is basically it is any particular scheme. It is any particular scheme where contributions is made by the investors. Okay, or the money is pooled by the investors. Few investors gather together, they pool their resources. So now this becomes a big amount. Now they invest. Okay, now this collective investment scheme invests this amount so that they can earn some income over it, so that it can earn some profits over it, so that it can, purchase some property out of it, and maybe by way of rentals it can earn some income. And it is such an arrangement. Where they form this big corpus, they earn some returns over it, and then they share the returns. Okay, but the thing here is the investors who are putting their money, they are not controlling the money. Okay, they cannot interfere in the day-to-day activities of the collective investment scheme. Basically, a different management altogether will be formed of this collective investment scheme, and then they are going to, investors are just going to put their money. Management is going to see how we are supposed to earn the returns. Okay, so this is one particular concept called as your collective investment scheme. Okay, if you have suppose if you have not given the name of collective investment scheme, but few investors have come together and they have pooled 100 crore rupees or more. Okay, then it will be deemed to be a collective investment scheme. Okay, even if they have not registered with the SEBI themselves as collective investment scheme, but if they have pooled 100 crore rupees or more, then it will be deemed to be a collective investment scheme. Very, very clear with this? Yes. Okay. Now, but ma'am, so if you say like this, suppose if there is a cooperative society, will it be a collective investment scheme? Answer is no, because cooperative society is already registered under some other law. Okay, it is already registered under the Cooperative Societies Act, so it will not be considered as a collective investment scheme. So anything apart from your cooperative society, anything apart from deposits which are gathered by the NBFCs, NBFCs can also pool together 100 crore rupees or more, but that won't be called as a collective investment scheme. Okay, or if say for example insurance companies collecting insurance premiums etc., it will not be called as a collective investment scheme. Pension funds, they pool money from people like suppose if there is some salaried person, provident funds etc., the money is pooled in the fund, right? But that won't be called as a collective investment scheme. Any deposits which the company accepts, public deposits, that won't be considered as a collective investment scheme. Any deposit which is collected by Nidhi company, that won't be called. Any deposit which is collected by chit fund company, that won't be called as a collective. So anything apart from the existing law, okay, any collections apart from the existing law, that can be considered, that can be called as a collective investment scheme. Okay, and if you have pooled together 100 crore rupees or more, but you have not registered yourself with SEBI as a collective investment scheme, then you will be deemed to be a collective investment scheme. Very, very clear with this? Yes. Acha. Similarly, section number 11B. Section number 11B talks about power to issue directions and levy penalty. Okay, power to issue directions and levy penalty. SEBI has basically got this particular power. If SEBI thinks that it is in the interest of the investors, it is necessary to do in the interest of the investors, or to prevent detrimental affairs being carried on in the RSC, recognized stock exchanges, if something wrong is happening in the stock exchanges and if we need to prevent that particular thing or to make sure that the management of the stock exchange is going on properly, for that particular thing, SEBI has got the power that it can issue directions on the recognized stock exchange. Okay, it can issue the directions, it can give directions to the either to the recognized stock exchange or any person who is associated with the securities market. Example, it can be brokers, it can be any other intermediaries. Directions can even be given to a listed company or to a proposed listed company, because even suppose if something wrong is done by them, then SEBI can even issue directions to them. So you can just imagine SEBI is sitting at the top. Okay, you can just imagine SEBI is sitting at the top and SEBI is giving the instructions. Right? SEBI is giving, it can give instructions to stock exchanges, it can give instruction to any other intermediaries, it can give instructions to listed company or a proposed listed company. At the same time, you cannot even stop SEBI from recovering any wrongful profit that you have made. Suppose if you have done something wrong and you have earned some wrongful profits, or if you have tried to avoid some loss by doing something wrong, then that can be recovered by the SEBI. That power also the SEBI has got. And along with that, for doing anything wrong, SEBI also has got the power to levy the penalties. Okay, SEBI has got the power to levy the penalties. Very, very clear with this? Yes. Okay. Then after that, going on to the next one, that is section number 11C, which is talking about power of SEBI to order investigation. Okay, this is the last big section of the chapter. Okay, last big section of the chapter. Section number 11C is important also. Okay, you can mark it as important also. See, we have already studied in the section number 11, that is powers of the SEBI, that SEBI has got the power to do inspection. Remember, a point pada tha of listed company or proposed to be listed company, if we have a doubt that it is involved in insider trading or unfair trade practices. Right, now inspection can even lead to investigation. Okay, in case of investigation, we check up a particular matter in detail. Right, we check up a particular matter in detail. So investigation can be done by the SEBI. Okay, for that particular thing, if SEBI has the reasons to believe that some transactions were done in a wrongful manner, detrimental manner, or any particular intermediary, etc., has violated any provisions of the law, okay, then in that case, SEBI can appoint an authority called as investigating authority, and SEBI can get that matter investigated. Okay, during investigation, whenever any investigating authority comes to our premises, it is our duty, it is the duty of every manager, MD, officer, employee, etc., to provide the necessary help to that investigating authority, to provide the books of accounts, documents, whatever he asks for it. Okay, and for the purpose of doing investigation, that authority can keep the books, records, documents in his custody for a period of 6 months. For the purpose of investigation, he is not seizing it. He is just taking with himself for the purpose of doing the investigation. Okay, and we have to listen to the investigating authority. If we do not listen to the investigating authority, we can be punished with imprisonment or with fine or both. Okay, we can be punished in that particular manner. Very clear with this? Yes. Acha, when the investigating authority is doing the investigation, he can take down the notes in writing. After the investigation is done, he will read out whatever he has written and he will get it signed from the other person, and that can be used as evidence in the court of law. ओके, बेस्ट हो गया, जो भी सुना वो सब लिख लेने का, वो वापस से उसको पढ़ के सुना दो और फिर उसके बाद में उसका साइन ले लो, एंड देन वो जो भी आपने लिखा हुआ है, जो भी आपने नोट्स लिए हुए, दैट कैन बी यूज्ड इन द कोर्ट ऑफ लॉ. Very, very clear with this. Acha, now suppose if investigating authority is of the opinion that we cannot leave the books of accounts, records, registers, etc. with that particular company or with that particular person whose investigation is going on. Maybe that person can alter the books, falsify, mutilate, secrete the books, etc. Then in such cases, investigating authority will go and make an application to the magistrate or the judge of a particular court for the seizure order. It will take the seizure order from the court and it will seize the books of accounts of that particular person if we are of the opinion that if we keep the books of accounts or if we leave the books of accounts with that same person, then he can alter it, falsify it, mutilate it, secret it, etc. Then in such cases, once he has got the order from the court, he can enter the premises, he can seize the books of accounts. There's a difference. On the previous page, we had done custody of 6 months. Custody of 6 months was for the purpose of investigation. But here, we do not want to leave our books with that person. So we are seizing the books and we can return it after the end of investigation. Means you can keep it with yourself till the end of investigation. Very, very clear with this, everyone? Very, very clear with this? Okay. So there's a difference. Just catch that difference. That is very, very important. अगर suppose investigating authority को सिर्फ investigation करने के लिए अपने पास में लेकर आना है, तो उसको बोलते हैं अपने custody में रखना for a period of 6 months. अगर investigating authority को लगता है अरे यार ये stock exchange के पास में या फिर ये broker के पास में ये books छोड़ दिया ना, तो वो उसके अंदर कुछ घपला कर देगा, वो उसको ऑल्टर कर देगा, वो उसको मैनिपुलेट कर देगा, कुछ चेंजेस कर देगा, गलत कर देगा, तो हम उसको जाके सीज करके लेकर आ सकते हैं. ठीक है, देयर इज गोइंग टू बी अ डिफरेंस, देयर इज अ डिफरेंस, जस्ट रिमेंबर दैट. Yes, very, very clear with this, everyone. Yes. Okay. Now, going on to the next one, there's something called as cease and desist. Okay, cease and desist. Cease means to stop. Okay, cease means to stop and desist means not to do it again, not to repeat it again. So, if SEBI is of the opinion, okay, if SEBI is of the opinion that any particular person who is associated with the stock market, if that person has violated any provisions, or if that person is likely to violate any provisions of the SEBI Act, any rules, any regulations, etc., then SEBI will simply conduct an inquiry and it will pass an order on that particular person that please stop doing this violation. Okay, cease, stop doing that particular violation and please do not commit this violation again. That is nothing but cease and desist proceedings. Okay, but again, SEBI cannot do this. SEBI cannot do this against any listed company or proposed to be listed company unless it has got a reason that it is involved in insider trading or market manipulation. Okay, means you cannot touch the listed company or proposed to be listed company unless this reason is there. You cannot pass the cease and desist order on this listed company or proposed to be listed company unless it has got this reason. Very, very clear with this? Yes. Okay. Going on to the next one, that is your registration certificate. Okay, section number 12, registration certificate. This is very, very simple. Now, whenever anyone comes under the securities market or if anyone wishes to come under the securities market, example, recognized stock exchange is there, stock brokers are there, sub brokers are there, merchant bankers are there, underwriters are there, portfolio advisors are there, investment bankers, investment advisors are there, etc. Whenever these people want to act under this capacity, they have to get themselves authorized from the SEBI. That is mandatory. Okay, unless SEBI notifies you, you cannot deal into security. Okay, same thing is applicable to depositories, same thing is applicable to credit rating agencies, any particular intermediaries, mutual fund companies are there, venture capital funds are there, collective investment schemes are there. So they have to obtain a certificate from the SEBI and then only they can operate as such. I hope I am very, very clear. So anyone who wants to come under the purview of securities market, that person has to get himself registered. Okay, that person has to get himself registered with the SEBI. Okay, application will be made to the SEBI along with the necessary fees. Okay, forms are different, fees is different for different persons, and then you come under the control of SEBI. SEBI can exercise all the powers on you. SEBI can even suspend your certificate or it can even cancel your certificate if there is any kind of violation. Obviously, now SEBI has become your boss. right? Acha, now similarly, this is just a preventive section, section number 12A, where they say that no person should involve himself into any manipulative device or into any insider trading or into any fraudulent activities, or he should not deal into any securities on the basis of any non-public information and all those things, right? So you should, this is basically a section which is saying that please don't do anything wrong. Okay, because further when we are going to go in the chapter, they are going to specify as the penalty of insider trading, that insider trading is prohibited. For example, so there can be a question which can arise that, ma'am, where is it written that insider trading is prohibited? So yes, it is written in section number 12A that insider trading is prohibited. If done, then it can lead to its own punishments. Very, very clear with this, everyone? Yes. Chalo, then going on to the next part of the chapter, which is going to talk about the procedures, penalties, etc. Those things. So next section, section number 13, 14, 15. These three sections are going to talk about the audit part, maintenance of accounts part, etc. of the SEBI. So as we already know, SEBI was in the form of a body corporate. So how do we manage the finances of the SEBI? So SEBI is going to establish a fund called as SEBI General Fund. Okay, it is going to establish a fund called as SEBI General Fund, from where, in this particular fund, you are going to receive the money. Okay, the most important income of the SEBI is going to be in the form of grants from the central government, as mentioned in section number 13. Okay, that is going to be the major income of the SEBI. Then it is also going to collect fees. It is also going to levy charges. Suppose if SEBI is going to provide some registration, etc., if it is going to provide some permissions, etc., it is going to charge some fees for that. That is going to be one income of the SEBI, or any other income which is received from other sources. That is going to be the income part of the SEBI General Fund. And this money is going to be used for meeting the expenses of the SEBI. That is for meeting the objects of the act, for meeting the expenses of the SEBI, to pay the salary allowances, all these kind of expenses for the SEBI. Okay, so money comes in the SEBI General Fund and it is going to be used for meeting the expenses. Okay, accounts have to be properly maintained by the SEBI. SEBI will prepare the proper accounts, and it is going to be, in what form the accounts is to be prepared, that will be specified by the central government after consulting the CAG. CAG is going to do the audit. Expenses will be obviously borne by us only, that is by the SEBI only, and CAG, Comptroller and Auditor General, has got the same powers while doing the audit as it has got in case of government companies. CAG is going to prepare the report. The accounts will be submitted by certified by the CAG, and then that will be laid down before both the houses of parliament, just like it happens in case of government companies. Very clear with this? Okay, then starting from section number 15A to section number 15HB. Okay, from section number 15A to section number 15HB, you have got all your penalties which are coming up into picture. So I will just mark the important penalties from you. This you just have to learn. Also at the end of the chapter, I have given you the summary of very important penalties. Okay, so if you want, you can just mark here. Section number 15A is important, section 15B is important, 15C is important. Don't worry. Whatever penalty is there in 15A, same is applicable for 15B as well as 15C. Then after that, very, very important is 15F. I have written there also, in your book also, it is an important section. Okay, I have written there, it is an important section. And then the next one is your section number 15G. Right, next one is your section number 15G, that is your penalty for insider trading. Okay, these penalties are specifically very, very important penalties. One more penalty which you can do is 15HA. Okay, 15HA. This is one more penalty that you can do along with it. Okay, so this is one particular part which you have to do it on your own. This is the penalty. Just see the heading, that is when is that particular penalty leviable, means when are we supposed to levy that particular penalty, and how much is the amount of penalty that is going to be levied there. Okay, moving ahead, going on to the next section, that is section number 15I, which talks about power to adjudicate. Okay, it talks about power to adjudicate. Now, whatever penalties we have studied, right, from section number 15A to section number 15HB. Okay, from 15A to 15HB. Whenever SEBI wants to levy any amount of penalty, SEBI is going to appoint an officer called as adjudicating officer, AO. Okay, who is going to inquire in that particular contravention, and then after that it is going to conduct inquiry. It will give a reasonable opportunity of being heard, and after that, if required, it is going to impose the penalty. For that particular matter, it can summon any person, it can call any person, it can call that person with the required evidence, etc. And after that it can levy the penalty. Okay, SEBI cannot reduce the penalty which is told by the AO, but SEBI has the power to enhance the penalty up to certain number of months. But SEBI cannot reduce. Okay, SEBI has the power to enhance the penalty, but it cannot reduce the penalty. Okay, now when you will study the penalties, you will come to know at some places there is a range of penalty that is given, like maximum this amount, minimum this amount, etc. So it can be anything between that particular range. So whenever you are deciding upon the final amount of penalty, you have to consider certain factors. Okay, you have to consider certain factors while determining the amount of penalty. Means, should the penalty be levied on the lower side, should the penalty be levied on the higher side, etc. That will be decided by this particular adjudicating officer after considering certain factors. It will see, like, is this the first default, or is there a repetitive nature of default? How much is the amount, how much is the loss caused to the investors? Okay, then what is the amount of gain that has been earned by that particular person, or how much amount of loss has been avoided by such person. Okay, how much loss has been caused to the investors, etc. So by considering these particular factors, AO is going to determine the amount of penalty. Very clear with this? Yes. Acha, whatever penalty is collected, okay, whatever penalty is collected by the adjudicating officer from the defaulting person, that will be credited to a fund called as Consolidated Fund of India. Just remember, penalties will always go to Consolidated Fund of India. Any discharged amount, any seized amount will go to the IEPF, as we have already studied. Okay, acha, suppose if any kind of proceedings, okay, if suppose any kind of proceedings are initiated, okay, any kind of proceedings are initiated by the SEBI against any particular person, then in that case, the accused person can go and make an application to the SEBI proposing for settlement. Okay, it can make an application to the SEBI proposing for settlement. It can say that SEBI, please settle, please reduce the punishments that you have given us. Okay, SEBI can agree, SEBI can disagree depending upon the gravity of the default done, the nature of the default done, and it will take certain amount. It will not completely waive off, but it will kind of reduce the amount which is to be paid by the defaulter. Okay, and whatever is the settled penalty that you are collecting from the defaulter person, whatever is the reduced penalty that you are collecting from the defaulting person, that will be credited to again to the fund called as Consolidated Fund of India. See, penalties will also go to Consolidated Fund of India, and reduced penalties will also go to Consolidated Fund of India. Obviously, the settled amount will also go to Consolidated Fund of India. Okay, now listen, now going on to the appeal provisions. Okay, now going on to the appeal provisions. For that particular matter, you have got an authority called as Securities Appellate Tribunal. You have got an authority called as SAT. Okay, Securities Appellate Tribunal. So SAT is established by the central government. SAT is going to consist of a presiding officer, a main head. Then it is going to have some judicial members, it is going to have some technical members within it. Okay, why do we require an appellate tribunal? We require an appellate tribunal because if someone is aggrieved by the decisions taken by the SEBI, then in that case you can go and file an appeal before the SAT, and then the appeal procedure is going to start. So whenever a matter is to be decided by the SAT, a bench is formed and then that bench takes the decision. Right, a bench is going to consist of one technical member, one judicial member. Generally it is this way. Okay, generally it is this way. Sometimes we have single member benches also, and whatever decisions are taken in this bench, that will be taken by majority. Okay, that decision will be taken by majority. Then yes, section number 15M is one such section that you have to mandatorily cover. It talks about the qualification of the members of the SAT. We had 3 members under SAT, right? We had presiding officer, judicial member and technical member. So it is going to talk about their qualification. So when we talk about the presiding officer, then in such case that person should be a judge of Supreme Court or Chief Justice of High Court or a judge of High Court for a period of 7 years. 7 years point is applicable just for judge of High Court. Alternatively, he can be a judge of Supreme Court, he can be a Chief Justice of High Court, or if he is a judge of High Court, then he should be there for at least a period of 7 years. Then he is eligible to be appointed as a presiding officer. Achha, when we go to judicial member, then in that case, if he is a judge of High Court for a period of 5 years, okay, for a period of 5 years, then in such case, he can be appointed as a judicial member. And in case of a technical member, if he has been a secretary, additional secretary in the ministry or department of central government or equivalent post in government department, secretary or additional secretary in any particular ministry or equivalent post in the government, then that person can be appointed as a technical member. Or if that person is having at least 15 years of experience, special knowledge, if he is a person of proven ability, integrity, standing, etc., in the securities market, if he is having that, in pension funds, etc., if he has managed that for a period of at least 15 years, then he can be appointed as a technical member. Right? So these are the qualifications. These are the qualifications of your members of SAT, right? And these people are appointed by the central government in a particular manner, and whenever these people come, okay, they are going to have a tenure. It is given in section number 15N. These people are going to have a tenure of 5 years, and they can be reappointed again for a period of 5 years, and they can work up to 70 years of age. Like for chairperson and other members, we had seen it was 5 years up to 65 years of age. Here it is 5 years plus reappointment of 5 years, maximum up to 70 years of age. Right? Again, if there is any vacancy in the SAT, okay, suppose if there is any vacancy in the SAT, no problem, the remaining members can take the decision. Okay, suppose if there is any vacancy in the place of presiding officer, then temporarily the senior most judicial member can act as the presiding officer. No worries in that. Okay, and these judicial member, technical member and presiding officer, these are the people who are sitting in the topmost position of the SAT. Apart from that, definitely we are going to have other employees, officers, etc. And all these people taken together, they will be paid the prescribed salaries and allowance. Very, very clear with this. And yes, for vacancy I have already mentioned. Suppose if there is any vacancy in the office of presiding officer, in the office of judicial member, technical member, then that will be filled. That vacancy will be filled by the central government. Okay, and suppose if there is any vacancy temporarily in the place of presiding officer, till the time a new person comes, the senior most member from the SAT, from the senior most judicial member will be acting as the presiding officer. Okay, just like we had seen for SEBI members, even the SAT members, either they can resign or they can be removed by the central government. Okay, suppose if they want to resign, then yes, they can give their return resignation to the central government. They have to give 3 months notice in writing. Only after that they can resign. Or if a successor enters upon the office, or if the tenure is getting over early, whichever is earlier, that person can resign. Okay, that person can resign. Achha, can these people be removed? Yes, definitely these people can be removed. They can be removed by the central government, but only after an inquiry is made. Just mark this as important. Only after an inquiry is made by the judge of Supreme Court. Again, reason for removal will be similar. If they are adjudged as insolvent, if they are mentally, physically incapable, if they are convicted of any offense involving moral turpitude, if they have abused their position, if they have acquired some interest, then yes, definitely these people can be these members of SAT or presiding officer of SAT. They can be removed by the central government after an inquiry has been conducted by the judge of Supreme Court. right? But yes, before removing, they will be given a reasonable opportunity of being heard. Very, very clear with this? Yes. And okay, after that you can directly go to section number 15T. Section number 15T is important. 15T talks about appeal to the SAT. Okay, section number 15T talks about appeal to the SAT. It says that if I am aggrieved by the order of SEBI, if I am aggrieved by the order of adjudicating officer who was appointed for the purpose of penalty, etc., then I can go and file an appeal before the SAT whom we just constituted. We can go to the SAT within a time period of 45 days from the date of receipt of the order. We'll pay the prescribed fees. We'll go and make an application to the SAT. SAT will now listen to all the parties. It will give ROBH to everyone and then it will take the decision. Okay, generally we are supposed to go within a time period of 45 days, but the delay can be condoned if there is any sufficient cause. SAT can confirm the order, it can modify, it can set aside the order of the SEBI or the adjudicating authority, and SEBI should try to dispose of the appeal as soon as possible and should try to complete it off within a time period of 6 months. Okay, within a time period of 6 months from the date of receipt of the appeal. So we go within 45 days and SAT has to do it within a time period of 6 months. It should try to do it within a time period of 6 months. Right? Now, SAT was established by whom? SAT was also established by the central government. SAT also has all the powers as vested in civil court. Okay, whatever decision is taken in SAT, that will be taken by majority. Suppose if there are two people only and both of them are giving different opinion, then either the presiding officer, the third person, will go into picture, or a third member will be appointed in the SAT, and then we are going to take a revised majority. Suppose if I, as one of the party in the SAT proceedings, I do not know how to represent before SAT, I can appoint a legal representative to go on my behalf and represent in the SAT. Very clear with this? Achha, now SAT tried to dispose of the appeal within a time period of 6 months. Suppose if I am now aggrieved by the order of SAT also. If I am aggrieved by the order of SAT, then in such a case, after that we can go and directly file an appeal to the Supreme Court. Okay, we can go and file an appeal to the Supreme Court within 60 days from the date of communication of the aggrieved order on any question of law only. If you remember in PMLA, it was question of High Court. Before High Court, it was question of law or question of fact. But now whenever, just remember this, whenever it is Supreme Court, then in such case, it is going to be question of law. You can go to the Supreme Court within 60 days. This delay can be condoned by another maximum period of 60 days. Means within 60 plus 60 days maximum you can go and file an appeal before the Supreme Court, but only on question of law. Very, very clear with this? So your appeal procedure totally gets over here. Then next section that we have to do is section number 17, where they say that central government can anytime supersede the SEBI. Means if SEBI is unable to discharge its functions properly, if it is failing in complying with the CG's direction, then CG will come, it will supersede, it will take all the powers of the SEBI, all the officers of the SEBI will have to vacate their offices, everything will now come under the control of the central government. If SEBI is not working properly, then obviously CG will come into picture. Very, very clear with this? Okay, then these are some miscellaneous sections which you can simply do a one-time read. Section number 18, 20, 28, 22, 23, etc. These are some very, very simple and one-time read sections, not very important from exam point of view also. So you can we can at least directly skip it for the super quick revision. Then after that, going on to the next section, that is section number 24, which talks about the offences. From section 15A series, 15A to 15HAA, we had seen about all the penalties. Now here we are seeing about the offences. Now, whatever penalty was given by the adjudicating authority in that 15 series section, apart from that, without affecting that, if any person contravenes or any person tries to contravene any provision of this act or any rules regulation, then he will be, apart from that, he will be liable for imprisonment up to 10 years or fine up to 25 crores or both. So that person will also be liable for prosecution and basically offense, that will be considered as an offense, and this is the punishment that he is going to get. And suppose if whatever penalty was levied there by the AO or by the SEBI, if he fails to pay that, okay, then this is the punishment that will come on him. Very clear with this? So this is in addition to section number 15A to 15HAA. Very clear with this? Achha. Now there is another section, section number 24B, which is important, which you have to do, power to grant immunity. Now say for example, if someone has violated any provisions of the act, rules, etc., and if some penalty was levied on that particular person, okay, some penalty was levied on that particular person by the SEBI or by the AO, then in such case, we can go and make an application to the SEBI that, sir, please reduce this, please provide some immunity from this, okay, and this immunity can be provided only by the CG. Okay, this immunity can be provided only by the CG. Just remember that CG can do so on recommendation by the SEBI. It can grant immunity from prosecution, means from offences of section 24 also, and even from the penalty which was levied on that particular person. Okay, if suppose proceedings have already started in the court of law, then immunity cannot be granted by the CG. But if we are yet to start the proceedings and if application was made for providing this immunity, providing immunity means to reduce it, okay, to reduce it, then in such cases, SEBI can go and make a recommendation to the CG that, sir, this person has disclosed all his facts, he has guaranteed that he won't do it again, etc. Then in such cases, that person can be granted some amount of immunity. Okay, now for the purpose of prosecution, suppose whenever imprisonment etc. comes into picture, whenever fine comes into picture, then in such cases, special court is going to come into picture, just like PMLA. Okay, session courts will be designated as special courts, and they are going to do the speedy trial of offences. See, when penalty comes into picture, that will be done by the adjudicating officer. Okay, that will be done by the adjudicating officer. But when offences come into picture, at that time we require the special court. Say for example, for the purpose of giving the imprisonment, for the purpose of giving the fines, etc., for that thing we require the special court. Right? And for special court, same provisions will apply. Code of criminal procedure is going to apply. Who is going to be the prosecutor in the special court? So advocate practicing since a period of for a period of at least 7 years. Special court will be deemed to be a session court only, right? So same thing, whatever we had studied in PMLA about the special court, same thing is going to be there here also. Then going on to section number 27, same thing we have already studied. What if contravention is done by the companies? So if contravention is being done by the companies, then in such cases, the person in charge of the company who was there at the time when that particular contravention was done, that person will be liable for the contravention which is done by the companies, but he won't be liable if he proves that he had exercised due diligence while doing that to prevent that particular offense, right? Acha, next section, section number 28A, this is important. Section number 28A is important. You can mark this section as important. 28A and 28B, both the sections are important. Now, what is section number 28A talking about? 28A says that suppose if some person is there and on that particular person, penalty was imposed under the act, but that person has failed to pay the penalty, then there is an officer called as the recovery officer who comes into picture. He is going to issue a recovery certificate to the officer, and it will be written in the recovery certificate how much amount will be recovered from that particular person. Now we told that particular person, please pay the penalty, but he is not paying. So now we are going to recover it. Okay, ma'am, how do we recover it? So by selling that person's movable property, immovable property, bank account, or you can even detain that person into prison. Right? You will try to manage his property. You will try to appoint a person who is going to manage his property so that we can recover from his property. Okay, so we will try to recover that penalty from that person's assets. Okay, but this is important. Suppose before, say for example, just before the recovery proceedings could start, I transferred all my movable property, immovable property, my bank balances, etc. I have transferred without consideration or for inadequate consideration. I have transferred it to my spouse, I have transferred it to my minor child, I have transferred it to my son's wife, or I have transferred it to son's minor child. Okay, either my spouse or my minor child, or to my son's wife or son's minor child, but for no consideration or for inadequate consideration. Means, why did I transfer it for free? Just because I did not want it to get recovered by the officers. So it can be recovered from them also. Okay, if I have given it to my spouse that you keep it with yourself for some time and then we will see what are we supposed to do with it ahead. Okay, I don't want it to be recovered under the SEBI Act. But now since you have transferred it for inadequate consideration, it means that you have purposely transferred so that you can save yourself from the recovery, and hence in such case it can be recovered from that person also. Very, very clear with this? Yes. Okay. तो यहाँ पे क्या किया बेसिकली पता है उन लोग ऐसा बोलने की कोशिश करे, अगर आपने ये चार, फिलहाल खाली ये लोग इंक्लूडेड है, स्पाउस हो गया, माइनर चाइल्ड हो गया, सन्स वाइफ हो गया, सन्स माइनर चाइल्ड हो गया, फिलहाल तक यही चार लोग को अगर आपने दिया एंड फ्री में आपने उसको आपका प्रॉपर्टी दे दिया, आपका बैंक बैलेंस दे दिया, सो दैट आपके ऊपर ये रिकवरी प्रोसीजर्स ना हो, मतलब वो लोग जब रिकवरी के लिए आएंगे तब आपके पास में कुछ रहेगा ही नहीं, तो वो लोग पागल नहीं है, वो लोग इनके पास में जाके, रिकवरी ऑफिसर इनके पास में भी जाके रिकवरी कर सकता है. I hope I am very, very clear with this. Yes. Next section, section number 28B. Even this section is important. 28B is talking about continuance of proceedings. Okay, it talks about continuance of proceedings. Now, what is this continuance of proceedings? Now, they say that suppose if a particular person passes away on whom the SEBI proceedings were going on, okay, then his legal representative will be liable on behalf of the deceased person. Okay, but he will be liable for the penalty only if penalty was imposed before the death of that person. If penalty is imposed later on, then this legal representative won't be liable. Means when that person was alive, if at that time the penalty was imposed and if it is unpaid, then it is going to be paid by the legal representative. Very, very clear with this. Achha, apart from that, when we talk about disgorgement, suppose if we want to seize any assets, then all the assets of the deceased person can be seized. The legal representative won't be personally liable. मुझे अपने पॉकेट से निकाल के कुछ नहीं देना, जितना मुझे legal representative से मिला है, whatever amount I have inherited from the deceased person, that much can be seized, but I won't be personally liable. So my liability will be limited. Okay, my liability will be limited to the estate of the deceased person. ठीक है, मेरे को अपने पॉकेट से निकाल के कुछ भी पे नहीं करना. I hope I am very, very clear with this. Yes. Okay. Now when we talk about rules, when we talk about regulations, they say that whatever rules are to be made under SEBI, all rules will be made by the CG. CG will note it down in the it will note it down. Then it will lay down before both the houses of parliament, and then the rules will be notified in the official gazette. This is how the SEBI rules are made. Okay. Similarly, regulations are made by the SEBI. Rules are made by the CG. Regulations are made by the SEBI. And same way, it is laid down before both the houses of parliament, and then only it is published in the official gazette. And both will be, as we already discussed, both rules and regulations, both will be laid down before the houses of parliament. Very, very clear with this, everyone. Yes, if whichever sections we have not done, okay, all these sections, all these kind of sections are your one-time read sections. Just read it once. No need to do it one day before the exam. You can do it now, but no need to do it one day before the exam. Right? So this was all about your SEBI Act. So this chapter is actually very, very simple. If you divide, first part of the chapter was mostly about the persons, their powers of SEBI, etc. Second part of the chapter started with your accounts, audit, penalties, appeal procedure, etc. That was it. So if you simply divide the chapter becomes very, very simple. Yes. Okay, so we are done with the SEBI Act. Okay, so let's start with the next part, that is, let's do the super quick revision of SEBI LODR regulations 2015 as amended by the or till the SEBI LODR 4th amendment regulations 2022 as applicable for your examinations. Now there were many small changes in every previous attempt, so whatever we are doing here, this is yes, properly amended for your examinations, so don't worry about it at all. Directly going upon the applicability, now these SEBI LODR regulations, these will be applicable to every listed entity as the name suggests, listing obligation and disclosure requirements. That is the full form of your SEBI LODR. That is the full form of your LODR, we can say. So yes, it is going to be applicable to every listed entity, right? It is going to be applicable to every listed entity for any of the type of securities which are tradable and which are listed on the recognized stock exchanges. It can be securities, it can be IDRs, it can be any secure debt instruments, it can be units issued by the mutual funds, it can be for any particular securities which are listed on the recognized stock exchanges. Right now, directly going on to the relevant part, since we are doing the super quick revision, we are going to do it totally from the exam point of view. So here we have got 3 regulations first of all coming: regulation number 6, regulation number 7 and regulation number 24. So regulation number 6 is talking about the compliance officer and their obligations, his or her obligations. Right. So in as per your SEBI LODR regulation, compliance officer is nothing but the qualified company secretary for that particular listed entity who is responsible for all the compliances. Ma'am, what? Can you please name it? So he is going to make sure, he or she, whatever it is, okay. I may generally refer as he, but it can be he or she, whoever is that compliance officer. That person will ensure conformity with the regular compliance. They will make sure whether we are complying with all the things that or all the laws which are applicable to us or not. Then they are going to coordinate and do the reporting to the board. They are going to make sure whether correct procedures have been followed by us or not while filing the information with the whenever we are filing information with any particular authority, whether we are following the correct procedures. And another thing is, suppose if now in case of listed entities, we have something called as grievance redressal division, means which is going to solve the grievances, problems. So it is going to address, or it is going to monitor the email address. Okay, it is going to monitor the email address of the grievance redressal division. Okay, that whether whatever complaints we are receiving, whatever grievances we are receiving, whether those are monitored or not. This is whose responsibility. This is the responsibility of the compliance officer. Very clear with this? This is applicable to the compliance officer of a listed entity as per the SEBI LODR regulations. Right, then going on to the next one, that is regulation number 7, which talks about the share transfer agent. So in case of companies, in case of listed entities, they are required to have a share transfer agent. Either it can be managed in-house by a company, means it can establish, we can say, a kind of department kind of a thing, it can establish that, and or otherwise, that is one option, otherwise it can simply outsource it. Right, but it should have a share transfer agent. Okay, then going on to the next one, regulation number 24 is important. Okay, regulation number 24 is important, which is talking about the corporate governance requirement with respect to subsidiary of a listed entity. See, we already know that SEBI LODR is applicable to every listed entity. So SEBI LODR is applicable to listed entity, but what about the subsidiary, which is an unlisted subsidiary? So with respect to that unlisted subsidiary, there are some requirements which are to be fulfilled, that is specified here. Okay, so now what are the requirements, or when is that listed entity supposed to comply with those requirements? Okay, now first of all, at least one independent director on the board of the listed entity. Okay, at least one independent director, that will be mandatory because it is a listed entity. At least one person who is there here on the board of that listed entity should also be a director on the board of unlisted material subsidiary. Okay, it can be whether incorporated in India or not, that subsidiary whether it is incorporated in India or not. So the person who is an independent director on the board of that listed entity, he should be a director on the board of unlisted material subsidiary. Okay, ma'am, material subsidiary means what? In audit there is something else, in laws it is something else. So see what they are telling, or maybe in some other regulation the meaning of material subsidiary is different. Here the meaning is this only. For the purpose of paper 4 law, you have to follow this definition only. It means such subsidiary whose income or whose net worth is exceeding 20%. It is more than 20% of the total consolidated income or consolidated net worth respectively of the listed entity and its subsidiaries. Whose consolidation is to be done? Listed entity plus its subsidiary, total nikalo, total into 20%. So if that particular subsidiary is contributing for more than 20% of the consolidated income or consolidated net worth, then that particular subsidiary becomes a material subsidiary. Okay, that is one thing. Another thing is the audit committee of the main company, that is of the listed company. It will review the financial statements. See this, it will review the financial statements, mainly the investments done by the subsidiary company. Okay, this is whose responsibility. Basically, LODR can tell about the responsibility of listed entity only. So it is telling about the responsibility of the listed entity with respect to the subsidiary of a listed entity. Okay, similarly, whenever board meetings will happen in the subsidiary, okay, whenever board meetings, its minutes will be placed at the meeting of the board, at the board meeting of the listed entity. Means even the listed entity should be aware about the things which are happening in the unlisted subsidiary, right? Similarly, another thing, management of the unlisted subsidiary should bring to the notice of the management of the listed entity about whatever important transaction, whatever significant transactions and arrangement it has entered into, right? And here is the meaning given for the significant transactions. You can just read that once. Okay, another thing. See, now if a particular company is being called as a subsidiary, okay, if a particular company is being called as a subsidiary of that listed entity, because it is being called as a subsidiary of a listed entity because of some percentage of holding which is there by the listed entity into the subsidiary. So the listed entity should not sell off the shares in its material subsidiary because of which the holding goes to less than or equal to 50%. Okay, means listed entity should not dilute its holding in the material subsidiary to less than or equal to 50%, or it should not stop exercising the control over the subsidiary. If it wants to do so, please pass a special resolution in the general meeting. Okay, please pass a special resolution in the general meeting if it is due to some divestment scheme, or where this particular transaction or where this particular transaction is approved by the court or tribunal, or if it is done under IBC. So if you want to do this, you have to either pass special resolution in the general meeting. This has to be done by the listed entity. Either pass special resolution in the general meeting, or it can be done if it is done due to a scheme of divestment, or it can be done if an order has been passed by court or tribunal, or it can be done if it is done under some IBC, Insolvency and Bankruptcy Code plan. Okay, so if the shareholding is getting reduced to less than or equal to 50%, then first of all they are telling that you cannot do it without passing SR in the general meeting, except in case of divestment, court or tribunal or IBC. Similarly, if a material subsidiary wants to sell more than 20% of its assets, then yes, definitely it creates a doubt, and it can lead to doubt of going concern. If I'm selling more than 20% of my assets, okay, during a particular financial year, then in that case also the listed holding company will have to pass a special resolution in the general meeting. But otherwise it can be done if it is approved by court or tribunal, or if it is done under IBC. Very clear with this? Okay, court or tribunal, just like in the previous point, we had seen this word called as divestment. So divestment should be approved by court or tribunal. Okay, if it is not a case of divestment, or if it is not a case where the approval has been given by court or tribunal or IBC, then in that case we'll have to pass a special resolution in the general meeting. Okay, so these are the responsibilities which have been vested on the listed entity. Okay, on the listed entity with respect to whom? With respect to the unlisted subsidiary company. Very clear with this? Yes, so this regulation 24, you can, yes, mark it as important. That can be tested somewhere in your examination. Going on to the next one, that is your corporate governance report. Now, whenever a company prepares its annual report, full-fledged report which is prepared, it contains certain disclosures relating to the corporate governance, this thing, and the contents. Okay, the contents have been given here. This is not really very important. Okay, we'll just see an overview of it. So basically there the company mentions about the companies. Now we are talking about the listed entity only. So now there it discusses about the company's philosophy about the code of governance. How does the company operates? Then what will be the composition of what is the composition of directors in the company? Like how many independent directors, how many non-independent directors, how many nominee directors, what were the, statistics, like how many meetings were held in that particular year, what was the attendance of the directors in those particular meetings, how many committees we have, then the board meetings were held on which date, that stats is going to be there. Then it is going to give the description about the audit committee in the company, NRC, nomination and remuneration committee. It is going to give the details about the stakeholders relationship committee, like who all are sitting in this particular committee, who is heading this particular committee, how many meetings were conducted. If we talk about stakeholders relationship committee, then how many complaints did we receive, how many did we solve. Then it is going to also mention about the risk management committee, which is mandatory for some kinds of listed entities. Then since we discussed about the board meetings, we are also going to state about the general meetings, how many meetings were held, where was it held, about the general meetings, AGM as well as the EGM, how many resolutions were passed in the year. Then all those things about the company's report of the last 1 year, that will be mentioned there. Okay, then another part in that is going to be about your performance evaluation of the board and its directors. Okay, means it is going to discuss about performance of the directors, performance of the board overall, how about performance evaluation of the independent directors, because they play a very crucial role in the decision making of the company. They are anyway independent, so their decision is actually very, very relevant. Okay, how did what factors did the NRC, nomination and remuneration committee, use to identify the persons who are eligible to be directors in our company, right? So all these things will be stated in the corporate governance. Okay, so that was just an overview, that much only. Okay, that much only you have to understand from. Now, going on to the next one, this is important, that is quarterly compliances which have to be followed by every listed entity. Please understand one important thing is, we do not have all the compliances in our syllabus. Okay, we do not have all the compliances in our syllabus. These are few compliances which are there in our syllabus. So we are just studying whatever is there for us. 5 quarterly compliances are given for us. First one is grievance redressal mechanism, where a listed company is supposed to report it to the recognized stock exchange on quarterly basis, because we are studying about the quarterly compliances. So it is filing that statement with the recognized stock exchange on quarterly basis, a statement which states how many complaints were there at the start of the quarter, how many new complaints were received, how many complaints we solved, and how many complaints were left at the end of the quarter. So that's data you have to submit. Listed entity will submit it to the stock exchange within 21 days from the end of the quarter. Okay, then next one is your compliance report, quarterly compliance report on corporate governance. Again, that will be submitted in a prescribed format within 21 days from the end of each quarter. Okay, then after that, the next one, that is the shareholding pattern. Okay, what is the shareholding pattern on some particular dates? Now they are telling that one specific reporting has to be done 1 day before listing. Whenever the securities in a particular company are going to get listed, can I say from that day the shareholding pattern is going to be changed? freehold shareholding will be more, promoter shareholding will be less, or whatever it is. So one day before listing, you have to just go and intimate it to the recognized stock exchange that this is our shareholding pattern as on today. Okay, then after that, on quarterly basis, anyway within 21 days from the end of the quarter, you have to give your shareholding pattern to the recognized stock exchanges. And whenever there is a capital restructuring happening in a listed entity where the change in the paid up share capital is more than 2% of the total paid up share capital, where the change is more than 2% of the total paid up share capital within 10 days of such capital restructuring. Okay, within 10 days of such capital restructuring, you have to intimate the recognized stock exchange about your shareholding pattern. Okay, so first point and third point are specific. First one will come whenever there is a listing of security. Third point will come whenever there is a capital restructuring leading to a change of more than 2%. But this one is going to be done on regular quarterly basis. Right? Then about the financial results. You are listed entity is required to submit the quarterly results within 45 days. For the first 3 quarters, within 45 days from the end of each quarter. Okay, then last one is talking about the statement of deviation and variation. Whenever we have raised money, okay, by way of public issue, by way of rights issue, by way of preferential allotment, whatever money you have raised from the public or from those particular set of investors, its reporting is to be done to the recognized stock exchange on quarterly basis. That first of all, how much amount you had raised and for what purpose it was supposed to be used and for what purpose it is actually used. Okay, first you have to give that deviation. Suppose if I had told that we are going to incur some capital expenditure for this, out of this money, but you incurred some working capital expenditure out of it. So mention that deviation. Okay, even category wise, like I told you, capital expenditure ka use ho gaya for working capital. So whatever is the category wise deviation, you have to tell that. Okay, or if suppose you had told that you are going to use it for XYZ business, but you used it for ABC business, mention that also. Okay, so whatever is the deviation in the money used, that has to be reported. Okay, then after that, going to the next part, that is prior intimation of board meeting to the recognized stock exchange. Okay, now this is first of all, try to understand what we are going to study in this particular category. Okay, first understand that. Now here, what are they telling you? See, there are some important situations which come in a company, which happen, or some events which happen in a company, before which we are supposed to conduct, general meeting, and before which we are supposed to conduct the board meetings. Many a times it happens. Example, before AGM, like in AGM, you are going to present your financial statements before the shareholders. But before that, financial statement should be approved in the board meeting. So for that purpose, you have to conduct a board meeting. So whenever you are going to conduct that board meeting, before that, intimate the RSC that you are going to conduct the board meeting for XYZ matters. So you are intimating about the board meeting to the recognized stock exchange. Very clear with this? Okay. So now see, first one is for financial results. So tell the RSC 5 days in advance. Advance means what? Before the board meeting. Whenever your board meeting will be conducted, and whenever you are going to intimate it to the RSC, between that there should be a gap of at least 5 days. Means you just have to intimate to the RSC that we are going to conduct a meeting for discussing the financial results after a period of 5 days. RSC should know that your company is conducting a board meeting for this particular matter. Okay, then for these other matters, like for delisting, for bonus securities, for buyback, for dividend, for fundraising, etc., for that also you have to conduct a board meeting. Intimate the RSC at least 2 working days in advance that you're conducting a meeting for this purpose. Okay, then whenever there is any change in the rights of the security holders, whenever there is any change in the interest payment, this is important. Whenever there is any change in the interest date payment, intimate the RSC at least 11 days before the board meeting. If for changing this, you have to first conduct a board meeting. And whenever your board meeting is there, before that also give clear 11 days notice to the RSC that we are conducting a board meeting for discussing so and so matters. Okay. Then after that, the next one, whatever record date, okay, whatever record date you are fixing, okay, whatever record date you are fixing in your company, it can be for dividends, it can be for bonus, etc., whatever date, then at least 7 days before that record date, intimate the RSE. Okay, at least 7 days before. Listed entity shall give notice to the RSE about, means now it is going to just tell to the RSE that this is going to be my record date, and we have to intimate the RSE at least 7 days before the record date. Okay, similarly, next one, listed company shall recommend or declare all dividend or cash bonuses at least 5 working days before the record date fixed for the purpose. Means what are they telling us? What are they telling us? This is nothing. Here there is, just understand one thing. In 42.3 in this regulation, there is no intimation that is happening. They are just telling you that this much gap is to be maintained. Till the last regulation, they were talking about the intimation that we have to do to the RSE. In 42.3, they are telling us about the gap that we have to keep between the date of intimation and between the record. Very clear with this? And the last one is whenever there is any change which is done on the website, okay, then it shall, whenever there is any change in the content of website, please put it on the website within 2 working days of such change. Means if there is any change or on the website also, please do it within a time period of 2 days so that your website is updated. Very clear with this? Yes. Okay. Then the next part about compliances which is coming up here is annual or the yearly compliances. Okay. What is this talking about? Just like we studied about the quarterly compliances and all those. So here now we have got this annual or the yearly compliances. So first one is about the financial results. The financials for the entire year. Okay, listed company shall submit audited standalone financial results for the entire year within 60 days of the year end. Okay. For the first 3 quarters, it was within 45 days of the quarter end. Okay, and for the last one, they are telling you can submit for the entire year within 60 days of the year. Similarly, that was about the financial results. Now, this is about the annual report. Okay, annual report, basically we give it along with the notice of the AGM. If we give the notice of the AGM at least 21 clear days before the AGM date, along with that only you circulate your annual report. You also put it on the website of the company, right? You also put it on the website of the company. Then after that, listed company will send the annual report to the security holder at least 21 days. That is same along with the notice of AGM, you send this annual report also. Very clear with this? Okay. Then after that, next one, come to the types of committee. Okay, types of committee is more of some numbers, etc., which you have to remember here, for which I have prepared a summary table also at the end of the chapter. Let's directly study from there itself. It is going to become very simple. Everyone here with me. Okay, now this is your amended table here. Now they are telling you about the different forms of committee which every listed entity should be having. Now listen, just try to understand. Some of these requirements are there under your Companies Act also, and this requirement is there under your SEBI LODR also. But if you are studying it from the SEBI LODR point of view, means this has to be compulsorily complied by every listed entity. Okay, now just try to understand, when we talk about a listed entity, can I say Companies Act will also be applicable to the listed entity, and even SEBI LODR regulations will be applicable to the listed entity, right? So every listed entity has to make sure that it fulfills the requirement of both laws. Means it fulfills the requirement of the Companies Act also, and it fulfills the requirement of the SEBI LODR regulations as well. Okay, so now for audit committee, it says that minimum 3 of them should be there as members, out of which at least 2/3 of the members shall be independent directors. Okay, 2/3 of them should be independent directors. Chairperson of this particular committee will be an independent director. Audit committee should be meeting at least 4 times in a year with a maximum gap of 120 days between 2 meetings, right? With a gap of at least 120 days between 2 meetings. And what will be the quorum of these meetings? It will be 2 or 1/3, 2 members from this audit committee, either 2 members or 1/3 of the total members, whichever is higher, and at least 2 of them should be independent directors. Okay, that's the purpose of your audit committee, because see, audit committee is going to take up important decisions like considering your financial statements, approving the related party transactions, etc. So that's the reason the proportion of independent directors will be good in the committee also, as well as in the meetings also. Okay, and on the same lines, we are supposed to read this for other committees also. Okay, on the same lines. And yes, this is one such table. Okay, this is one such table which you have to remember. Okay, and in your book it is already written in green. Whatever amendments are there, I have already marked those in green, and yes, all these amendments have been notified for your examination. Okay, please pay attention to the risk management committee, specifically to the amendments, to the amendments of the risk management committee. Please make sure that you do it thoroughly. For the other three committees, that is audit committee, nomination and remuneration committee, and your stakeholders relationship committee, those three committees are there under Companies Act also, and the same three committees are there under your SEBI LODR regulations also. But risk management committee was not mandatory by the Companies Act. So SEBI LODR says that risk management committee provisions will be applicable to the top 1000 listed entity on the basis of market cap. Means on the basis of market cap, whichever are your 1000 listed entities, RMC has to be formed only by those. Means RMC provisions are not applicable to every listed entity, whereas the first three committees were applicable to every listed entity. I hope I am very clear till here, everyone. Yes. Okay. Now going on to the last part of the chapter, which is talking about like where we are going to study some things from different regulations which are coming up there. Yes. Okay, so now let's go to the last part, that is some key features which your ICAI has included in its module out of the SEBI LODR regulations. It has taken some composition, some figures, some provisions from different part of the SEBI LODR regulations. So the most important thing is this only, that is composition of the board, which is regulation 17 is going to come up here, and then the next regulation, that is regulation number 17A. Both of these are important. Now here what they say, I'll highlight the important pointers for you. So here they are talking about the composition of the board as per SEBI LODR regulations. They say that every company's board should be having an optimum combination of the executive directors and non-executive directors. Executive directors are those who are taking part in the day-to-day activities, day-to-day management of the company, and non-executive directors, example can be independent directors. Okay, so these listed entities should be compulsorily having one woman director, and at least 50% of the total directors should be non-executive directors. So in your total this thing, one woman director should be there, and of your total at least 50% should be non-executive directors, so that independence is maintained. Okay, minimum age for becoming a director is 21. Very clear with this? Yes. Acha, and then they are telling that top 1000 listed entities on the basis of market cap, okay, they should be having at least one independent woman director by so and so date. So that date has already lapsed. So as on today, whoever are there in that top 1000 listed entities, they should be having at least one independent woman director on its board. Right? Acha, another composition that they say is, this is again very important. Now suppose you have 50% of the directors are your non-executive directors. Now in your board of directors there is going to be a chairperson. If that chairperson is a non-executive director, means it is very good, because independence is very good. Then in that case at least 1/3. Okay, then at least 1/3 of the board should be independent directors. Okay, if chairperson of your board is a non-executive director, then 1/3, 33.33% of the total board should comprise of independent director. But if he is not a non-executive chairperson, means if he is an executive chairperson, means independence will be a little less. So then in that case, in your board, at least half of the board should be independent director. Did you see? If chairperson is independent, then you can have lesser number of independent directors in your board. But if your chairperson is an executive director, then in that case, half of the board should be independent directors. Very clear with this? Acha, now listen, just try to understand. Suppose if your chairperson is a non-executive director, then we are happy about the independence. But if he is a promoter of this particular entity, or if he is related to the promoter or the person who is occupying a very important position in the company, then in that case, he will be deemed to be a, executive chairperson. And if he is deemed to be an executive chairperson, then what should be the composition of the independent directors in the board? Then it will be half. That is written here. At least 50% of the board will be independent director if that non-executive chairperson is a related person. Very clear with this? Yes. Acha, another thing. Whenever a listed entity, this was the amendment which was there, whenever there is a listed entity, in case of a listed entity, whenever it is appointing any person in its board of directors, or if it is appointing any manager in the company, then in that case, it is mandatory for the listed entity to take the approval of the shareholders at the next general meeting. Now the appointment is done. At the next general meeting, take the approval from the shareholders, or within 3 months from the date of appointment of these persons, whichever is earlier. Means 3 months from the date of appointment or the next general meeting, whichever is earlier, please take the approval of the shareholders for appointment of that particular person. And it is mandatory, that is the appointment and reappointment of these directors, MD, WTD can be done only with the prior approval of the shareholders. Very clear with this? Acha, another thing is suppose if we are appointing such a person who was earlier rejected by the shareholders. So earlier he was rejected, now we are again proposing his name. Then also for his appointment or reappointment, you have to take the prior approval of the shareholders. Plus you have to give a justification in the notice of that general meeting that why are you bringing that same person again who was earlier rejected. You have to submit that justification. Clear with this? Going on to the next one, which is talking about the board meetings. So same as per the Companies Act also, every company should be conducting at least 4 meetings with a year with a gap of 120 days between the maximum gap of 120 days between the 2 meetings. Okay, that is this thing is very important. Another thing is quorum for every meeting of the top 2000 entities shall be 1/3 of the total directors or 3 directors, whichever is higher, with at least 1 independent director. Now listen, this point is applicable only to the top 2000 entities. Ma'am, what about the other entities? For other entities, you can simply go and refer the Companies Act. Very clear with this? In that section number 173, 174 talks about the board meeting only. So you can simply go and refer that. Okay. Then after that, directly coming on to regulation number 17A. In that, this third point, fourth point is not really very important. So whatever is very important from your exam point of view, we are covering that. Now, going on to the next one, that is maximum number of directorship. This is also important. Please mark it as important. Now here they are telling that a particular person can be a director in how many companies? Okay, a particular person can be a director in how many companies? He can be an independent director in how many companies? What restrictions SEBI LODR has to put, that we are going to study here. Now, the directors of listed entities, they have to comply with this provision of maximum number of directorship. See, what are they telling? If I am a person who is willing to become a director, I cannot be a director in more than 7 listed entities. A number of directorship, section number 165 of the Companies Act is still applicable. Okay, but this is the extra restrictions which have been put, which you have to make sure that you have to follow. I cannot be a director in more than 7 listed entities. Okay, and I cannot serve as an independent director in more than 7 listed entities. Very clear with this? Yes. Acha. Now, another thing is, if I am a managing director or if I am a whole-time director in a listed entity, okay, I can be an independent director in maximum 3 listed entities. The restriction has been more stricter now. From 7 I have been brought to 3. Why? Because I am already acting as a MD or a whole-time director in any listed entity. My responsibilities are anyway more. Right? Okay. Then after that, regulation number 26. Again important. Okay, this is the last important thing that we have to do. Restriction on committee membership means I can be a member of how many committees of the board. Okay, so now if I am a member, I have underlined this word already. If I am a member on any particular committees of the board, I can be a member in maximum 10 committees. Okay, I can be a member in maximum 10 committees and I can be a chairperson of maximum 5 companies. Okay, member of 10 committees, I can be a chairperson of maximum 5 committees. Okay, for this we are taking the listed companies only. For this we are taking the listed companies, means we are taking the committees in the listed company only. Because the restriction is applicable only for that, because we are studying from the SEBI LODR. Now see what they are telling. For the purpose of considering the limits on which a director can serve either as a member or a chairperson, all the public limited companies, whether listed or unlisted, will be included, but private companies, foreign companies, high value debt listed companies and section 8 companies will be excluded. Means what they are trying to tell us here, whenever we are trying to find out that I can be a member on in how many committees, I can be a chairperson in how many committees. Okay, then in that case, they have given us the numbers. Okay, membership 10 committees, chairperson 5 committees. Okay, there they are telling that we have to take all type of companies except for these companies, but this ceiling is applicable only for audit committee and the SRC only. Means this ceiling is applicable only for audit committee and SRC. Means ma'am, in addition, can I be a member of NRC? Can I be a member of risk management committee? And can I be a member of any other XYZ committee? Answer is yes. Okay, answer is yes. Okay, so just remember this point. This is another point which is very important. Okay, so these were the important things. That we have to remember in the entire chapter. If you want, I can just mark the important things again for you so that it becomes very simple for you to study and do the revision. Okay, so coming to the beginning of the chapter from our 9th edition book, regulation number 6, yes, you have to read. Regulation number 24, yes, you have to do compulsorily. Then after that, the quarterly compliances. Okay, quarterly compliances is to be done mandatorily. Yes, these quarterly compliances which we had done. Then prior intimation of board meeting to the RSE, yes, it has to be done. Then types of committees, mandatory, no compromise at all. Types of committees you have to do. Then from the key features, this first point, that is composition of the board, this you have to do. 1/3, half, etc. That you have to do. Then this board meeting, this much part, see here everyone, board meeting, this much part. First the quorum and then for the top 2000 entities what is applicable. So this board meeting, second point you have to do mandatorily. And then regulation number 17A. Regulation number 17A is to be done. Regulation number 26 is to be done. I know many parts, many things have been marked as important, but yes, I don't want to simply cut down the things for you. Okay, what is important, so we have to do that. Yes, so yes, the chapter involves many things that we have to remember because many figures are involved. So just make sure that you pay a little more attention. See, now the paper pattern is in such a way that they try to test from every nook and corner of the book of your syllabus. So let's not leave anything. Yes. Okay, done. Hey, hi guys. So let's start with a super quick revision of the next chapter, that is Foreign Exchange Management Act 1999. Yes, it is a simple chapter. Don't worry. Okay. So we are going to divide the chapter into a few parts. Okay, the first part is going to be the introduction and the definition part. Okay, because some definitions in this particular chapter is important. Okay, so first is going to be your definition part. Second one is going to be your current account transaction. Since we are doing super quick revision, so I expect you are at least aware about these terms. Okay, first one is introduction and definitions. Next one is going to be your current account transaction. Next one is going to be your capital account transactions. Then you are going to have certain export provisions and then the miscellaneous provisions. Okay, this way we are going to divide the entire chapter. Okay, and yes, let me tell you now itself, the other part, that is external commercial borrowings, import procedures, ODI, etc. For this, I have already put a full video of these topics on YouTube. So I'm not going to cover those three topics in this particular session. So you can just go and I'll be putting the link of those three topics separately. You can do it from there. Okay. So as of now, let's concentrate on these particular topics and we can just go through it. Now, first one is your, just like I told you, introduction part, that is this FEMA, okay, Foreign Exchange Management Act. This act is going to be applicable to whole of India, okay, it is applicable to whole of India, plus it is applicable to whatever offices, branches a particular person is owning outside India. Okay, if I am a person who is called as person resident in India, if I am a PRI for India, and if I am owning certain branches, certain offices outside India, then in that case, FEMA will be applicable to that also. And if they are doing any contravention outside India, then the FEMA is going to be applicable to them as well. Okay, this is all about the applicability. Now going on to the definitions part, see the reference of the question numbers that I have given, that is 2 months. So that indicates that questions are, the definitions here are important. Let's talk about the first thing, that is there will be two types of transactions which will be covered here in this FEMA. One is your current account transactions and other one is your capital account transactions. Okay, one more doubt that you might have got or you might get or you might not have got that doubt. Okay, remember we have FCRA in our syllabus, Foreign Contribution Regulation Act in our syllabus, and another one is your FEMA. So ma'am, what is the difference between these particular two laws? Foreign means, ma'am, what is the difference between these two laws? So whenever you would have studied FCRA, one thing was there in FCRA is that you are receiving, first of all, you are only receiving from the other country, you are receiving something for free. ठीक है, donation मिल रहा था, that was for free, means you were not paying anything. Okay, you were receiving some hospitality, you were receiving some service, that was for free, you did not pay anything for that. At that time, for that specific thing, FCRA was applicable. Okay, but when we talk about our import of goods transaction, export of goods transaction, export of services transaction, any payments done or received in course of foreign trade, etc., all these are going to be covered by the FEMA. Foreign loans, right? All these are going to be covered by the FEMA. So here basically those transactions mainly get covered which involve certain foreign currency inflow or outflow, right? So now there will be two types of transaction which will be covered here. One is your capital account transactions and another one is your current account transactions. Okay, we are going to study the definition of capital account transaction and then automatically current account transaction will be done. Okay, automatically current account transaction will be done. Now, ma'am, what do you mean by capital account transaction? Capital account transactions are those transactions which alters, okay, which changes either the assets or liabilities, including contingent liabilities of a PRI. Arpita is a PRI, of a PRI outside India. My assets or my liabilities which are situated outside India, those assets or liabilities are getting affected. Very clear with this? Alternatively, it is such a transaction which alters the assets or liabilities of a PROI. Ma'am, what do you mean by PROI? Person resident outside India. It alters the assets or liabilities of a PROI, but those assets or liabilities are altered here in India. The value of Indian assets or Indian liabilities gets affected. Then such Example. Arpita is purchasing some foreign assets. Okay, Arpita is a PR and she's purchasing a foreign asset. Is it a capital account transaction? Answer is yes, because my asset or liability outside India is getting altered. Similarly, a person who is situated out, or a person who is resident outside India, but his Indian assets or liabilities are getting changed, then such transactions will be called as your capital account transactions. Very clear with this? Acha, but just keep it in mind, contingent liability is only for PRI is included and not for PRO. Okay. Now all these transactions will be considered as your capital account transactions. Any transaction apart from these, okay, any transaction apart from these will be considered as what? Any transaction apart from these will be considered as your current account transaction. Okay, that's why I said if you do the capital account transaction definition, automatically current account transaction will be done. Right? Now, current account transaction, example of current account transaction can be, say for example, if you are remitting some money outside India for living expenses of your children, for living expenses of your parents, then that will be called as your current account transaction. If you are doing any payment in course of business, import ka payment, export ka payment received, etc. These transactions will be called as current account transaction. Okay, short-term banking facilities, only short-term banking facilities or short-term credit facilities in ordinary course of business, working capital loan kind of a thing. These will be called as your current account transaction. Okay, say for example, if I have borrowed money outside India, okay, then that is my capital account transaction, but any interest on it will be termed as your capital account transaction. Current account transaction. Okay, example, if you have invested outside India but you are receiving certain income on it, investment will be considered as capital account transaction, but receiving income on it will be considered as your current account transaction. Very clear with this? Acha, but just understand one difference. Arpita is purchasing a property in Dubai. Arpita is a PRI and she is purchasing a property in Dubai, means her foreign assets are getting affected. Then that is your capital account transaction. Acha, Arpita is purchasing a property from Dubai, but she is going to bring that property here in India. My assets are getting affected, but which assets are getting affected? I am going to use that asset here in India, so my Indian assets are getting affected. So now that won't be considered as a capital account transaction, rather it would be considered as a current account transaction. Arpita purchased a house property in Dubai, her foreign assets are getting affected, that is a capital account transaction. But Arpita has purchased a machinery from Dubai because she wants to use that asset in her Indian factory, India's factory. Then her foreign assets are not getting affected, then her Indian assets are getting affected. Very clear with this? Okay, so only for Arpita, that is for a PRI, if foreign assets or foreign liabilities are getting affected, then those will be considered as a capital account transaction. Otherwise, it will be considered as a current account transaction. Very clear with this? Okay, so similarly, I have put up certain examples here. You can just refer these examples and your concept of capital and current will be absolutely clear. Yes, so these two types of transactions are included in your FEMA chapter, that is the capital account transaction and current account. Now, there are two types of persons as you would have noticed here. Okay, who are those two types of persons? One is PRI. What does PRI stands for? PRI stands for person resident in India, and the other term, that is PROI. Okay, just remember one thing, if you complete PRI, then automatically PROI will be done. Okay, एक कर लो तो दूसरा वाला automatically हो जाएगा. Yes, now listen everyone here. What do you mean, or who all will be included in this term called as PRI? Okay, PRI stands for person resident in India. Okay, person resident in India. So it means they have first of all defined it in this way. If I am an individual person, okay, persons can be individual, HUF, company, etc. It can be anything. So if I am an individual person and if I am residing here in India for more than 182 days during the preceding financial year, for the last year, if I have stayed for more than 182 days, then in that case, primarily I will be called as a person resident in India. Okay, primarily, मैंने अब तक final conclusion नहीं दिया है. Basically I will be called as a person resident here in India. Okay, but now there are certain exceptions included there. What are those exceptions? Let's try to understand. Now imagine last year I stayed in India for more than 182 days. Yes ma'am, you told that I will be considered as a PR. ठीक है, agree. But say for example, if I leave India for the purpose of employment outside India, for the purpose of business or vocation outside India, or for any other purpose, and my stay period is going to be uncertain. I am not sure when am I going to return back. Okay, means either I have left India for the purpose of employment, or I have left India for the purpose of business or vocation, or if I have left India for any other purpose, but my stay period outside India is uncertain. Then they say that you will not be included in the definition of the term called as PRI. Why ma'am? Why this way? Because they assume that if you are leaving India, this is an inherent assumption. If you are leaving India for the purpose of employment, if you are leaving India for business vocation or going for an uncertain period, means you are going to stay outside India for a very long time. If you are going to stay outside India for a very long time, then in that case, we are not going to give you the definition of the term called as, or we are not going to treat you as a PRI. We are not going to treat you as a PRI, and you will be considered as a PROI. Anyway, you are going to be outside India for a very long time. So why get the tag of PRI? And hence you will be considered as a PROI. And hence they see here, they have given you, but does not include ANV, means these people are excluded from the definition of the term PRI. Okay. Acha, alternatively, suppose if there is some person who is coming to India, okay, who is coming to India for business, who is coming to India for employment, or who is coming to India for an uncertain period, then give them the tag of PRI because they are going to stay here for a longer time. Very clear with this? Acha, any person who is coming to India as a tourist, say some other national is coming to India as a tourist, should we give them the tag of a PRI or should they be considered as a PROI? They will be considered as a PROI because if a tourist is coming to India, then it is assumed that he is going to come for a certain period. If you are coming to India for a certain period, for a small period, then obviously you are not a PRI and you will be considered as a PROI. Very clear with this? So this 182 days wala thing, this can just be considered as what? This can just be considered as a basic condition. But your ICI assumes that whatever exceptions are given here, your exceptions are going to override the basic condition. Very clear with this? ठीक है, एकदम सिंपल था, इंडिविजुअल लास्ट ईयर में मोर देन 182 डेज अगर इंडिया में रहा तो हम उसको PRI का टैग दे देंगे, ठीक है, लेकिन इतना काफी नहीं है. मानो अगर कोई बंदा है जो इंडिया जा रहा है, लास्ट ईयर तो वो रह गया मोर देन 182 डेज, लेकिन मानो अभी करंट ईयर में 1 अप्रैल को ही वो बंदा इंडिया से बाहर चला गया एम्प्लॉयमेंट के लिए, बिजनेस वोकेशन के लिए, कोई XYZ रीजन के लिए चला गया, लेकिन अनसर्टेन पीरियड के लिए चला गया. इसका ये मतलब हो गया कि वो बहुत लंबे टाइम के लिए बाहर रहने वाला है, ठीक है. और अगर वो बहुत लंबे टाइम के लिए बाहर रहने वाला है तो भाई उसको PRI का टैग देने का जरूरत ही क्या है, उसको PROI का टैग दे दो. उसको बेनिफिट्स ही क्यों देना है फिर PRI के? आई बात समझ में? अच्छा, ठीक है. सो दिस वाज द डेफिनेशन ऑफ PRI फ्रॉम द पॉइंट ऑफ व्यू ऑफ इंडिविजुअल्स. ओके, नाउ सी व्हाट आर दे टेलिंग यू. नाउ सपोज इफ व्हाट विल वी डू इन केस ऑफ अ कंपनी. सपोज इफ इट इज एन इंडियन कंपनी विल ऑलवेज बी कंसिडर्ड एज व्हाट? इंडियन कंपनी विल ऑलवेज बी कंसिडर्ड एज अ PRI. Wherever it is operating doesn't matter, since it is registered and incorporated in India, it will always be considered as a PRI. Okay, similarly, if suppose there is any office here in India but which is controlled by a PROI, बाहर वाला बैठ के इंडिया में कंट्रोल कर रहा है, अरे किधर कंट्रोल कर रहा है? इंडिया में कर रहा है ना, so you will be considered as a PRI. Okay, similarly, say for example, if there is some office which is situated outside India situated but controlled by a PRI. Okay, if it is controlled by a PRI, then in that case it will be considered, that particular office which is located outside India will be considered as a PRI. Very clear with this? So either, suppose if the location here is in India, give it the tag of PRI. If the location is outside India but it is controlled by a PRI, give it the tag of PRI. I hope I am very clear with this. Yes, so this marks the end of your definition of the term called as PRI. The first point was very, very important. That was from the point of view of individual. And now whatever we did now, that is for any other person apart from individual. Because in case of individual, we are going to see the number of days stay. Right? In case of companies, you cannot say company stayed here. Company cannot stay. Right? So for other persons, this is the thing. And for individual, whatever we studied, that was there in the first point. Yes. Acha, ma'am, then how do you define the term called as PROI? So it is very, very simple. Now you should be knowing the answer. If it is if you are a PRI, then well and good. If you are not a PRI, if you do not fulfill the conditions of a PRI, then in that case you will be automatically considered as a PROI. Very, very clear with this, everyone. Yes. Okay. So these definitions, 4 definitions we did. We did capital account transaction ka definition. Automatically we could answer current account transaction definition. Then we did the definition of the term called as PRI. Automatically we got the definition of the term called as PROI. Yes. Okay. So this is all about your first part, that is introduction and the definitions part. And yes, after these definitions, some examples of PROI and PRI are given. You can just try these examples. These are important. Please try it from exam point of view also. Just see the question, try to give the conclusion, go to the conclusion, check the conclusion. So basically you will get a fair idea of your application. Chalo. Then after that, we have got 2 sections coming up here. One is section number 3, another one is section number 4. Section number 3 is yes important, and in section number 3, I have given considerable examples there so that it will help you to understand the provisions very nicely. First one is section number 3, which is talking about regulation and management of foreign exchange. Okay, regulation and management of foreign exchange means they are first of all putting a restriction. Okay, they are putting some kind of restrictions for dealing in forex. Okay, now they are telling that if you want to deal in forex, you have to deal only with an authorized person. Okay, if you want to deal in forex, you have to deal only with an authorized person. Example, I want to travel to Dubai. I want certain, say, dirhams, or I want certain dollars. Okay, my friend has some dirhams kept with him or some dollars kept with him. Can I take from him? Answer is no. If you want to deal, you can deal only through an authorized person. That is your money changers. Example is your money changers. Next one, another one. Say for example, my sister is staying outside India. Okay, my sister is staying outside India. She is having an insurance policy. Here, she was staying here till now. Now she has gone abroad. She has an insurance policy here in India. I want to pay the premium of that particular policy. Okay, I am a PRI. She is a PROI because she has left India for the purpose of employment outside India. She has become a PROI. Can I do the payment on her behalf? Answer is no. You cannot do the payment on her behalf. Ma'am, why? Because the law prohibits it. Right? Otherwise, it will become very difficult to trace which transaction is done on behalf of the PROI. Okay? Similarly, say for example, now I am giving you lectures. Okay? I am providing you certain lectures. Imagine I am charging certain fees for it. If I am charging certain fees for it, and I have a student from Dubai, for example, and I tell him, do one thing, instead of transferring some fees online through banking channels, etc. Whenever you visit India, you bring dirhams for me. You pay the fees in dirhams. You directly give me the dirhams. Can I accept this? Answer is no. I would want. Can I enter into any Hawala transaction? Answer is no. You cannot enter into any kind of Hawala. For example, these things are prohibited. Dealing in forex is prohibited. If at all you want to deal into forex, please be authorized person, or please be in line with the Act rules regulations. Deal as per law only, otherwise you cannot deal into. Very, very clear with this. going on to the next section, that is section number 4. Section number 4 is also very, very simple. They are simply talking about holding of forex. Okay, section number 3 was talking about dealing of forex. Section number 4 is talking about holding of forex. Holding of forex, they say that this restriction is applicable on a PRI. A PRI should not acquire, hold, own, possess any foreign currency or foreign security except as per the law. Matlab, I cannot have any forex with me. Okay, this is the blanket restriction that they are putting. But then they are telling, if you want to hold some amount, you can hold, but that has to be as per law. Okay, so these words are very, very important. Except as provided. Okay, except as provided. Very, very clear with it? Okay. So this was all about the section number 3 and section number 4. Now going on to the next part, second part of the chapter, that is the current account transaction. These transactions are super duper important. Okay, and this is going to be the lengthiest part of our chapter. Okay, current account transactions are super duper important and the lengthiest part of our chapter. Yes, everyone, please mark it as important. Okay, now listen. We start. Now listen. We had already seen the definition of capital account transactions. Assets outside India, PRI, etc. Okay? And whoever does not get fit in that capital account transaction, or whichever transaction does not get fit, those transactions will be considered as our current account transactions. Right? We already know that. Now, let's try to understand. Current account transactions, if we are doing with some other country, or we are obviously since forex is involved, then other country is definitely involved, right? So they are telling that if we receive any forex or if we have to pay any forex, okay, then for that particular purpose, the transaction can be done only through an authorized person, right? So if we want to sell forex or if we want to draw forex, then such a transaction will be considered as a current account transaction. That is the current account transaction. Now, all these transactions are allowed. Okay, all these transactions are allowed unless specifically prohibited. Okay, unless specifically prohibited. So now, which transactions? There is a list of transactions which is prohibited. First of all the transactions given in Schedule 1. Okay, all the transactions given in Schedule 1, that will be prohibited. That is one thing. Okay, another thing, any transaction done with Nepal or Bhutan, or any travel expenses for Nepal or Bhutan. For this, if you are drawing any forex, then that is totally prohibited. Did you understand that? So first of all, Nepal, Bhutan is prohibited. Okay, why Nepal or Bhutan is prohibited? Because Indian currency works well. Certain denominations work there. So they say that for, suppose if I want to travel to Nepal, Bhutan, and if I say that I want Nepali Rupaya or whatever currency works there, then in such cases they say that forex withdrawal for that purpose is not. Okay, and another thing is some transactions which are mentioned in Schedule 1. Okay, certain transactions which are mentioned in Schedule 1, these transactions are totally prohibited. Okay, these transactions are totally prohibited. Now let's try to understand. Okay, this is one of the biggest challenges in this chapter, to remember these transactions. Okay, so there are going to be 8 transactions coming up here. See, okay, there are going to be 8 transactions which are coming up here. So we can remember it in this way: Nepal, Bhutan is prohibited, plus 8 transactions are prohibited. Now, if I have earned some lottery winnings here in India, and if I want to remit any lottery winnings outside India, if I want to remit some money out of this lottery winnings, they say it is not prohibited. You have earned this free money in India, please don't send it out. Okay, another thing, suppose if I have earned other casual income, like income from racing, income from riding, etc., or income from any other hobby for that matter, I cannot remit that amount outside. Okay, similarly, if I want to purchase some lottery tickets from the other country, okay, I want to purchase some lottery tickets, some band magazine, some football pools, etc. And for that, if I want to remit some money outside India, that is not allowed. Okay, that is altogether not allowed. Similarly, suppose say for example, if I want to remit some amount outside India as commission on export. Say for example, I want some clients outside India because I want to enter into an export business. So I need some clients outside India. For that purpose, I have taken help of an agent, and that agent is going to charge me some commission. Some foreign agent is there, going to charge me some commission. So I will have to pay him some commission in foreign currency. So they say that the payment of commission is an ordinary expense. Okay, but if I have entered into an export transaction, which is a barter transaction of equity investment. Ma'am, means what? Means I am going to export you the goods. You don't pay me money, but you give stake in your company. You give me stake in your company. Then can I say this is a specific business transaction which is not done through an agent? Which is not done through an agent. But for this transaction, if you say that you want to pay some export commission, then that export commission is prohibited. If suppose it would have been a normal export transaction, I will export you the goods, you give me money, and this I got this client through an agent. To him, if I am paying commission, no problem, that is allowed. But if it is a barter export transaction, then in such cases, you cannot say that this transaction was done through an agent and you want to pay commission to him. That payment of export commission is altogether prohibited. Very, very clear with this? Okay, similarly, payment of export commission under rupee state credit route. Rupee state credit route was at India-Russia transaction where they said that India is going to export you the goods and you can just reduce our debt. India had taken huge debts from Russia. Now India will export you the goods and you can reduce it against the debt. In that case also payment of export commission is altogether prohibited except in case of export of tea and tobacco. If you have exported tea and tobacco, on that you can pay certain export commission, no problem. But that is also allowed maximum up to 10% of the invoice value. So export commission on certain specific transactions are totally prohibited. Dividend payment under dividend balancing system, that is totally prohibited. Payment for callback services of telephone, which used to be an old concept, that is totally prohibited. And suppose if some non-resident has opened an account here in India, non-resident special rupee scheme account, and if he has earned some interest here in India, remittance out of this interest income is altogether prohibited. Right? So 8 transactions, everyone here along with me, which 8 transactions are there? First of all, for 1 plus 8 transactions, Nepal, Bhutan is anyway prohibited, and which 8 other transactions are there? First one, remittance out of lottery winnings, remittance out of any other casual income, remittance for purchase of lottery tickets, band magazines, etc. Payment of export commission on that barter export transaction, prohibited. Payment of export commission under rupee state credit route, prohibited except in case of tea and tobacco, 10% is allowed. Dividend balancing system, payment of dividend is prohibited. Callback services of telephone is prohibited, and remittance of interest income out of rupee state credit route is prohibited. Very, very clear with this? Yes, and here don't worry, okay, they'll directly give you a question. You can see it in question bank also. They'll ask you, they'll give you so and so, say for example, $5,000 was remitted as for callback services of telephone. So is it an allowed transaction or is it a prohibited transaction? So that way you'll have to answer it. Very clear with this? Yes. So these 1 plus 8 transactions, these were mentioned in the first part of your current account transaction. So in schedule 1, we have got those list of transactions for which for these transactions you cannot withdraw any foreigns. Okay, that is altogether prohibited. Now going on to your schedule 2 transaction. Okay, schedule 2 transaction is very, very simple, but at the same time very, very important. They say that whatever transactions are mentioned here, Okay, whatever 9 transactions are mentioned here, these transactions are allowed. Okay, these transactions are allowed, but you will require prior approval of central government. Okay, you will require prior approval of central government before you enter into these transactions. Schedule 1 was totally prohibited, चलेगा ही नहीं. Schedule 2 में बोला CG का approval ले लो, चल जाएगा. ठीक है. For this purpose, I have made a story code. Okay, we have got a story code here. See the story code. The words written here, everyone here on the board, the words written here in red are important. Okay, now see the story. I wanted to go for cultural tour, for which I saw an advertisement. However, since the traveling was too costly, I decided to go by freight vessel, for which I contacted an ocean transport agent. Okay, while traveling, our container was detained. Because I wanted to get my container released, I tried to send signals through transponders. Then someone came for my help and asked for some prize money, and I paid it for my protection. I hope the story code is very, very simple. Yes, and the words written here in red. If you are paying for this, for hiring of transponders, or for paying any prize money, for paying any protection money, for paying for any cultural tours, etc. If you are paying for these, and in such cases you can pay, but you will have to take the prior approval of the central government. Ma'am, whose approval is to be taken in case of central government? In case of central government, they have given you the name of the respective ministries. Okay, I'll just show it to you, everyone here. Now, say for example, if I want to go for a cultural tour, for that I require money. Okay, for that I require forex. So I went to draw forex. So they say that first take the prior approval of Ministry of HRD, Department of Education and Culture. Did you understand this? Yes, did you understand this, everyone? Acha, similarly, advertisement in foreign print media made by these people, only if it is exceeding 10,000 USD, then take so and so ministry's approval. All these ministries come under central government only, but you require to take their approval. Very, very clear with this? Yes? Okay. So, what all 9 pointers are there? Which all 9 pointers are there? Cultural tours is there, advertisement is there, freight vessel is there. Okay, ocean transport, if I am paying for ocean transport, if I am paying for import which is done through ocean transport, that is there. If I am paying to the agents, then that is there. Then if I am paying for container detention, that is there. Hiring of transponders, if I am paying for hiring of transponders, that is there. Okay, then in that case, if I am remitting any amount for as a prize money outside India, then that is there. Only if it is exceeding 1 lakh USD. Okay, it's given here. Only if it exceeds 1 lakh USD. And last, if I am paying for protection, an indemnity club. Okay, just like insurance, not insurance, but just like insurance. So, if I am paying for that, for these purposes, you will require the approval of the respective ministries. Yes, all these ministries are going to come under central government, and yes, you have to remember the name of ministries. Okay, it is written on the right hand side, just remember the name of ministries. Very clear? And then the last one, that is your schedule 3. Okay, schedule 3 is also very, very simple. What is schedule 3 talking about? They say that in schedule 3 transactions, they say all the transactions which are mentioned in schedule 3, all these transactions will be allowed. And these transactions will be allowed only if you take RBI's prior approval. Okay, if you take prior approval of RBI, then in such case, it will be allowed. Okay. Acha, ma'am, which transactions are mentioned in schedule 3? The transactions which are not there in schedule 1 and 2. Schedule 1 was altogether prohibited. Usme to we are not going to get any concession. Right? In that we are not going to get any concession. Schedule 2 had specific 9 transactions for which you were required to take the approval of the central government. Rest all those transactions are going to come in schedule 3 for whom you are going to take the prior approval of the RBI. Okay, in that also see the first one. These are the facilities for individuals. They have given you the list of transactions. Now what they are telling here is, now say for example, they say that in case of individuals, there is a concept of liberalized remittance scheme. Means individuals, PRI individuals can remit any amount outside India for Schedule 3 purposes within the limit of 2,50,000 US dollars without the approval of RBI. 2,50,000 US dollars. Okay, 2,50,000 US dollars can be done. That much remittance can be done for Schedule 3 purposes, even without taking the prior approval of RBI, and only if it exceeds 2,50,000 USD, then you'll have to take the prior approval of RBI. Very clear with this? Now, which transactions? They have specifically listed certain transactions in Schedule 3. Suppose if you are visiting some country, except for Nepal, Bhutan, if you are visiting any country, if you want to make any gift or donation, if you are going outside India for employment purpose, if you are traveling outside India for official purpose, then the traveling expenses, any conference expenses, etc. If you are leaving the country permanently, emigration expenses you can call. Okay, if you are permanently settling in some other country, if you are sending some money outside India for maintenance of your relatives abroad, if you are meeting some travel expenditure for business conference, just like I mentioned, if you are meeting some medical expenses, then those expenses, if you are meeting some education expenses for studies abroad, then that is there, and any other current account transaction apart from this. Okay, any other current account transaction. But yes, that should not be mentioned in Schedule 1 because those are prohibited. That should not be mentioned in Schedule 2 because for Schedule 2 transaction, you will have to take the prior approval of central. I hope I am very, very clear with this. Yes, these are for your individuals. So individuals are given that benefit of LRS, liberalized remittance scheme, up to 2,50,000 USD for Schedule 3 transaction. No approval is required, and if it exceeds 2,50,000 USD, then only permission is required to be taken. Yes, acha. But for point number 4, 7 and 8, okay, 4, 7 and 8 means which points are they talking about? For emigration, for medical treatment abroad, and for studies abroad, even if it exceeds 2,50,000 USD, you can just show the proof of that expenditure to your bank, to your authorized person, and then you can even remit more than 2,50,000 USD without taking the approval from the RBI. Only for those three purposes. Okay, only for those three purposes. Very, very clear with this. And this 2,50,000 USD is obviously for 1 year for all these purposes taken together. Okay, for all these purposes taken together, the limit is going to be 2,50,000 USD. Right? And then you have got this. This is again we are there in Schedule 3 only. The second part, that is facilities for persons other than individuals. Okay, facilities for persons other than individuals. So, individuals had got that LRS benefit. For other than individuals, some specific 4 transactions are mentioned. And for these 4 transactions, they have given you certain limit. If you are remitting the amount within the limit, no approval of RBI is required. If you are remitting more than the limit, then definitely or obviously you will have to take the prior approval of the RBI. Okay. Now, first one is your donations, right? First one is your donation. Now, you are doing some donations to some specified persons here. Can you see? You are doing for these specific purposes, you are doing some donation. And any person other than an individual, if that person is donating, see, you are donating in Forex. Okay. You are donating more than 1% of the foreign exchange earnings. More than 1% of the foreign exchange earnings during the last 3 years. Whatever were your earnings in the last 3 years into 1% or 50 lakh USD, whichever is lower. Means you got the limit, last 3 year ka earnings into 1% or 50 lakh USD, whichever is lower. If you are doing within this limit, no problem, do without approval. If you are going beyond this, then take the prior approval of RBI. Okay. Similarly, if you are paying to some agents abroad for selling of some property here in India, and if you are paying more than 25,000 USD or 5% of the sale consideration, whichever is higher, If it is exceeding this limit, then approval is required. Okay, if you are remitting for some consultancy charges for infrastructure projects more than 1 crore USD, take the prior approval. If it exceeds this, similarly, if you are paying for other consultancy services apart from infrastructure projects, then if you are paying remittances, okay, if you are paying some remittances, if you are remitting any amount exceeding 10 lakh USD, then approval will be required. Acha. Similarly, say for example, when you had incorporated an Indian entity, someone from outside India had met your pre-incorporation expenses, and now you are reimbursing that pre-incorporation expenses outside India, means you are paying something from India to outside India. If you are paying 5% of investment which was brought into India, that person would have brought some investment into India, then only he had met your pre-incorporation expenses. So 5% of the investment done in India or by that person, or 1 lakh USD, whichever is higher. This is the limit. If it is exceeding this particular limit, then in that case, take the prior approval of Arpita. Okay, these four pointers are applicable only for persons other than individuals. Okay, this is for me. It can be for a company, it can be for a body, etc. Very, very clear with this, everyone? Yes. So in case of individuals, we can conclude it this way. In case of individuals, they have got the benefit of LRS, 2,50,000 USD. For persons other than individual, these are the 4 specific transactions given. And if you are doing these transactions exceeding the prescribed limits, then in that case, prior approval of RBI will be required. Yes. Acha, whatever notes are given on the next page, just read these notes once. This can be important. Just read this once, nothing else. Are you clear with these current account transactions? Current account transactions broadly divided into 3 schedules. Schedule 1, Schedule 2, Schedule 3. Schedule 1 altogether prohibited transaction plus Nepal Bhutan transaction. Schedule 2, 9 transactions were given. Prior approval of central government is required. Right? Prior approval of central government is required. And then after that, you have got your Schedule 3 transactions, 2 parts, individuals other than individual. Individual got the benefit of LRS, other than individual, 4 specific transactions are there. Very, very clear with this? Okay, so then let's go to the next part of the chapter. Next one is your capital account transactions. First one was your current account transaction. Next one is your capital account transactions here. So now in capital account transactions, you just have got an overview. You do not have the regulations here. Now, let me tell you one thing. First of all, capital account transactions were those transactions which alters the assets or liabilities of a PRI outside India or of a PROI in India. Right? Those were your capital account transaction. So first they say that whenever you want to do any capital account transactions, okay, whenever you want to do any capital account transactions, either those transactions will be specified by the RBI. Okay, those transactions will be specified by the RBI after consultation with the central government, whether those transactions are allowed or not allowed. If allowed, then allowed up to what amount, or what conditions will be placed on it, etc. So RBI plus central government will tell you whether those transactions are allowed or not allowed. Okay. Now say for example, one more thing that they tell us here in section number 6 is, say for example, if there was a PROI, okay, if there is a PROI who has some property outside India. PROI would be having some property outside India. We are not at all concerned with that. I am a PRI. I got that property from PROI by way of inheritance. Can I hold that property outside India? Someone was already having it outside India. I got from that person by way of inheritance. Can I hold it? Answer is yes. Means a PRI can hold a property outside India if it was acquired from a PROI by way of inheritance. Very clear with this? Similarly, vice versa can happen. Some property was there here in India which was owned by a PRI. Now this goes to a PROI by way of inheritance. This goes to a PROI by way of inheritance. Can a PROI own a property here in India? Answer is yes. Very, very clear with this? Yes. Acha, can a PROI open a place of business here in India? Yes, a PROI can open a place of business here in India after taking RBI's permission and after fulfilling other necessary terms and conditions. Right? So capital account transactions can also be in those categories only. It can be prohibited, it can be allowed. In allowed, there can be certain conditions, etc. Right? Now, see here, everyone here. The first one is your permissible transaction. Okay, first one is your permissible transaction subject to regulations. Now, this is a list of transactions which can be entered into by the PRI. People like us can enter into these transactions, but subject to some regulations. Okay, for every transaction, RBI has made regulation. Suppose if I want to invest into foreign securities, for that RBI has made a regulation. Arpita, you can just go and refer that regulation and you can check whether it is allowed, it is not allowed. Or if it is allowed, then it is allowed up to what amount. Very clear with this? Yes. So, first of all, check the permissible transaction regulations. Similarly, in Schedule 2, you have been given the permissible transaction. You have been given the permissible transaction list, which can be entered into by the PROI. Please do not buy at the list. Okay, these are, we just have to see the bifurcation. Acha, Schedule 1 is permissible transaction by PRI. Schedule 2, permissible transaction by the PROI. Right? Acha, next one is transaction with no restrictions. Means these can be freely done. Two transactions they have given which can be freely done. First one is loan repayment. Okay, first one is loan repayment. When you borrow loan, when you borrow money, that is a transaction which is subjected to regulation. Go and check the regulation. But when you are repaying the loan, then that can be done without any restriction. And next one, for maintaining a particular amount of investments. You can just read the example. Suppose if the value of your investments have gone down and as per law, you have to maintain a particular amount. Then for maintaining, if you have done certain investment, that is freely allowed without any restriction. Very, very clear with this? Very, very clear with this? Yes, so two transactions can be freely done. You have to remember these two transactions. And then the last one, that is your prohibited transaction. 5 transactions are totally prohibited if it is done by a PROI. We are putting a restriction on PROI. Obviously, the other country will put a restriction on people like us. Right? So, if a PROI is doing some investments in India, in chit fund business, Nidhi company, agriculture or plantation activities, real estate business, or if they are trading in TDRs, transferable development rights, then they say that it is totally prohibited and a PROI cannot do the same. Okay, a PROI cannot do the same. Okay, now your real estate does not include, your real estate restriction is applicable only for farmhouses. Okay, but it is not applicable for commercial property, it is not applicable for townships, means that is allowed. Okay, example, if they want to do investment in, any REITs, then that is allowed, no problem in that. Okay, just farmhouses, okay, you can mark this work, just farmhouses are specifically excluded, that is prohibited. Okay, so chit fund, Nidhi, agriculture or plantation activities, farmhouses and TDRs, these 5 are totally prohibited. Okay, and yes, in red there is one exception given for chit fund company also. Some chit fund companies can still accept money from NRIs through ordinary banking channels. Okay, from NRIs, they have not told PROI. PROI comes under FEMA definition. Imagine if that person is a NRI, non-resident Indian, then such person can do the investment in chit fund companies also through normal banking channel subject to RBI conditions. Very clear with this? So this restriction, this prohibition is applicable for PROI. Don't forget this. Very, very clear with this, everyone? Yes? Okay. Now listen, one more thing. Do you recollect that LRS of 2,50,000 USD? Yes, where did we study about that LRS? LRS was available to an individual person. This is what we had studied. Yes, individual person doing a current account transaction under Schedule 3 was allowed that 2,50,000 USD ka limit. Now that same limit of 2,50,000 can also be used by a PRI individual for capital account transaction also. Okay, it's not 2,50,000 plus 2,50,000, it's total 2,50,000 USD which can be totally used for current account plus capital account transaction by a PRI individual. Very clear with this? Yes, so that is one important thing. That is one important thing to be remembered there. Okay, now going on to the next part of the chapter, that is export transactions. Okay, this is also important. Export transactions, as you can see here, the reference of the question numbers given, this is important. Okay, for export transaction, what do they say? First of all, export transaction, yes, it is a current account transaction, right? It is a current account transaction. Now they say that whenever you want to export any goods or services, then there is a particular procedure that is to be followed. You have to follow a particular procedure. Ma'am, what is that procedure? So every exporter will furnish to RBI a declaration which contains true and correct details of what value of goods have you exported. Okay, go and submit it to the respective authority. What is the value of goods that you have exported? How much amount are you going to get from the other country? Either the exact amount or the estimated amount. Okay, submit it to the RBI. Very clear with this? Okay. Now listen, in that particular declaration form, you have to write the full export value. What amount are you expected to, either the exact amount that you're going to receive or the expected amount that you're going to receive. And by what date that money will be repatriated to India, by what date that amount must be received here in India. Okay, this will be contained in a declaration form. Okay, for certain transaction, you need not file that declaration with the RBI. For certain transaction, generally in this list, those transactions are included which does not have any consideration involved. Okay, example, if you are exporting trade samples, free samples, you're not going to receive any money. You need not file the declaration. If you're sending your luggage, when we are taking our luggage, we don't have to submit a declaration. This one, D point is important. If you are sending anything as gift, then no declaration is required if the value does not exceed rupees 5 lakhs. If the value exceed rupees 5 lakhs, then a declaration will be required. But if the value of goods, gift does not exceed rupees 5 lakhs, then in such a case, just give a self-declaration. Okay, just give a self-declaration. I hope I am very, very clear with this. Yes, you just have to give a self-declaration that yes, my value of goods is within rupees 5 lakhs. So this main declaration is not required. Okay, so this gift thing is specifically important. And there are some other transactions also which are mentioned here. Generally, these are those transactions. Like if we are sending the defective goods for repairs, or if we have repaired the defective goods and we are re-exporting it, means where there is no consideration involved, then you will not be required to submit any declaration. Okay, what will be written in the declaration? The details of goods that are to be exported. Acha, this declaration will be in what form? So if it pertains to goods, then it will be in form EDF, export declaration form. Okay, it will be in EDF. It will be submitted in 2 copies duplicate to the Commissioner of Customs. Right? If you are exporting software, then it will be in form Softex. Okay, then it will be in form Softex and it will be submitted in triplicate. It will be submitted in triplicate to the official of Ministry of IT. Okay, so this is just the name of the form. Normally it is form EDF. Okay, in case of software, it is going to be form Softex. Okay, what is it going to be, what will it include? The declaration will basically include the value of goods that is exported. Along with this declaration, attach the evidences. Example, the invoice, etc. will be attached. Okay, also attach a proof that you are a PRI. Then only these export provisions will be applicable to you. Okay, prove that you are a NRI. Okay. Now, whenever you are exporting goods, we have to make sure that the money comes to India within a limited time. Then only export will be favorable for our country. Right? So, they say that full export value should be repatriated to India within 9 months from the date of export. Within 9 months, you should get that money. Very clear with this? Or whatever is the extended time as provided by the RBI from time to time. Whatever extension RBI gives you from time to time. Acha, but if you are exporting the goods to the warehouse outside India, okay, if you are exporting the goods to the warehouse outside India, means you are going to store the goods there, then it is going to be sold, then in that case, it is 15 months plus if any extra time is given by the RBI from time to time. Very clear with this, everyone? Yes. Acha. Normally, just remember it is 9 months. Suppose if you are a unit, suppose if you are situated in SEZ, then your main purpose is export only. Then also the time period will be 9 months only. Only when it is only when it is exported to warehouse, then you get 6 months extra time. Very, very clear with this? Yes. Acha. Whatever payment was promised has to be received. And that has to be received through an authorized dealer only. It should not be received in any other manner. Barter system, etc. should not happen. Delay should not go beyond the period specified, means you should receive the money on time and you should receive the entire value. If at all there is any delay in receipt, then RBI will take the necessary steps. RBI will ask you, have they sold the goods? If no, if they still have your goods kept, please call back those goods. If they have already sold the goods, then please try to please try to realize the consideration. So RBI will help you in realization. It can provide you directions how to realize that money. Very clear with this? Acha, similarly, what if we get an order for export and we get the money in advance? Okay, ours is a very nice product. What if we get the money in advance? If we get the money in advance, okay, then it is our moral responsibility to export the goods. Right? Correct, na? It is our moral responsibility to get the goods. Now listen. Suppose if I am receiving any advance money, then it will be my obligation to export the goods within 1 year of such receipt. If you have agreed specifically beyond 1 year, then that is different. But maximum within 1 year, you should export the goods, ship the goods from from India. If there is a delay beyond 1 year or beyond the agreed period, then in such case, you'll be liable to pay interest at the rate of LIBOR rate plus 100 basis points. That is LIBOR plus 1%. Okay. And similarly, whatever documents, see here in advance case, what would have happened first? First, you have sold the goods or first you have got the money? First, we have got the money. Money you would have received through an authorized dealer. So whenever you are exporting the goods, inform that authorized dealer that whatever money I had received against this advance, I have now exported the goods, so that the transaction gets nullified. Very clear with this? So three obligations, three very, very important obligations. If you have received money in advance, make sure you ship the goods within a time period of 1 year. Okay. If not, then rate of interest will be applicable at LIBOR plus 100 basis points. And please route the document through the same authorized dealer through whom you had received the advance payment. He should know, okay, I had received so much advance payment for this client and now this client has exported the goods, game over. So he should be well aware about it. Right? And if we are not able to ship the goods within 1 year and if we are not even able to export the goods, then you can refund back the money after taking the RBI's approval. Very clear with this? Okay. Now, going to the last part of the chapter. That is your miscellaneous provisions, starting from section number 9, we can say. Section number 9 is a specific part here is little important. It talks about realization and repatriation of forex, holding of forex and all those things. Now here they say that we had already studied in section number 4. Section number 4 said that you cannot hold forex except as per the law. You cannot keep forex with you except as per the law. Okay, now section 9 specifically says that in such cases you can hold forex. Okay, now when we talk about coins, okay, if we talk about forex coins, you can hold whatever amount you want to hold. No problem, you can hold whatever amount you want to hold. Okay, that is one thing. Another thing, if you want to hold, if suppose banks want to hold, okay, banks want to hold any currencies with them, authorized persons want to hold anything with them, they can hold as approved by the RBI. Okay. Achha. Now say for example, if we have got something by way of employment, by way of trade, by way of service, as honorarium, as gift, etc., I can hold up to RBI's limit, no problem. So ma'am, how much? Broad classification I'll give you. Coins you can hold whatever amount you want to hold, no problem. And in case of currency, banknotes, traveler's checks together, not exceeding 2000 USD. Don't forget this. Okay, not exceeding 2000 USD, this much amount you can hold. Yes. Okay. Chalo. Now going on to the procedural part, starting from section number 10. Section number 10 talks about a person called as authorized person. Authorized person is a person who can be a money changer, who can be an authorized dealer. It can be an offshore banking unit or any person who is authorized who can deal into foreign currency, foreign securities, etc. Such a person is called as what? Such a person is called as an authorized person. Okay, such a person will be called as an authorized person. Now, how does he become an authorized person? RBI, we can go, if I want to become an authorized person, I will go and make an application to the RBI. RBI will check that can it provide me an authorization. If yes, then RBI will provide me an authorization. I will be called as an authorized person and I can deal into foreign currency, foreign securities. RBI can even revoke my authorization. If it thinks that I have contravened something or if it is required in public interest, then it can even revoke my authorization. Very, very clear with this? Yes. So RBI is going to regulate this person called as authorized person. RBI can issue directions. RBI will tell it to comply with certain conditions, rules, regulation, notification, directions, etc. Very clear with this? Yes. RBI can even conduct inspection in case of this person. Okay. It can, suppose if it has a doubt, whatever information is submitted by authorized person is correct or not. Okay. Suppose if authorized person wants to check whether, suppose if RBI wants to check, is that authorized person complying with all the terms and conditions or not? Then in such cases, RBI can appoint a person and can conduct inspection in case of that authorized person. Very, very clear with this? Yes. Okay. Acha. Now, what if authorized person does not listen to RBI? Then there is a penalty applicable, penalty up to rupees 10,000. Okay, penalty is up to rupees 10,000 and in case of continuing offense, then additional penalty up to 2,000 rupees per day. Up to rupees, penalty up to rupees 10,000 and in case of continuing offense, then additional penalty will be there up to rupees 2,000 per day. Acha, if suppose we have contravened any other provision of this law, okay, if we have contravened any other provision, then this is important. If suppose the amount of default is quantifiable, then up to 3 times the amount involved there. If not quantifiable, then penalty can be up to rupees 2 lakh. And in either cases, if it is a continuing one, means after warning also if you are continuing it, then up to rupees 5,000 per day. Above it was up to 2,000 per day, here it is up to 5,000 rupees per day. Very, very clear with this? Yes, so this section 11, just see, section 11 on the previous page in your textbook, 9th edition book it is given. Section 11 was talking about your authorized person. So if authorized person does not listen to RBI, then this is the penalty that is applicable. If we contravene any other provision of the law, then this is the punishment that is applicable. Right? Acha, what if we fail to pay the penalty? Then if the penalty is more than rupees 1 crore, okay, if the penalty is more than rupees 1 crore, then we can have an imprisonment up to 3 years. If the penalty, maybe if the demand does not exceed rupees 1 crore, then imprisonment will be there up to 6 months. Very, very clear with this? Yes? Okay. Now listen. Another thing given here is whatever penalty is imposed under section number 11, under section number 13 or whatever it is, are we required to pay that penalty? Obviously, ma'am, we have to pay that penalty. Penalty is to be paid within 90 days. What if penalty is not paid? Then we will be liable for imprisonment, as we have just checked, up to 3 years or up to 6 months, whatever it is, okay, depending upon the amount. Suppose if he pays the amount of penalty, then we can release that particular person. But yes, we can arrest. Now here, if you want to imprison him, we'll have to arrest him. Imprisonment can be done only after show cause notice was issued on him. Okay, means why we should not arrest you. Such a kind of notice will go to that particular person. If we do not get a satisfactory reply, then only go and arrest that particular person. Very, very clear with this? Yes. First try should be, we should try to recover the money from that particular person. Before imprisonment, the authority should try to recover the money from him. Okay. And money will be recovered as if it is recovery of income tax. Very, very clear with this? Money will be recovered as if it is recovery of income tax. Now see everyone here. There is a table. There is a summary table kind of a thing given up here. Full penalty is to be paid within 90 days. We already know that. Okay. Now listen. Suppose if there is some contravention done. Okay. Suppose if there is any contravention done of law and we wish to go and apply for compounding. Please reduce my punishment now, please. That is called as compounding. Kam karna is called as compound. So, we will have to go and make an application to the ED, Enforcement Directorate, and compounding will be done by that particular authority within 180 days of receipt of that application. Means first we will go and make an application. See, we know that we have done the default and penalty is leviable under section 13. Ideally, we have to pay it within 90 days. Either you accept and pay it or you go for compounding. You go and make an application for compounding to the ED. And once you give the application, ED will decide whether compounding is to be done or not within a time period of 180 days. Very, very clear with this? Yes. Acha. Now, suppose if before this penalty is levied, can I say, first of all, we will have to decide that whether contravention has actually happened or not. If contravention has happened, then only penalty is leviable. Who will determine whether contravention is done or not? Adjudicating authority. Adjudicating authority will determine that contravention has been done. Okay. So, the authorities, example, if ED or if any particular director is doing the groundwork and he identifies that so and so person has done the default of FEMA, that person will go and submit the complaint to adjudicating authority. Adjudicating authority will deal with the complaint within 1 year. And then it will decide whether penalty is to be levied or penalty is not to be levied. Right? Achha, so who is going to pass an order? Who is going to pass an order that yes, default has been done? Order is going to be passed by adjudicating authority. Can we be aggrieved by the order of adjudicating authority? Yes, ma'am, definitely we can be aggrieved by the order of adjudicating authority. So we can go and file an appeal to the Special Director of Appeals within a time period of 45 days. Condonation can be allowed. If we are again not satisfied with the order of Special Director, we can go and file an appeal to the Appellate Tribunal. Right? If we go and file an appeal to the Appellate Tribunal will deal with, first of all, we'll go and file an appeal within 45 days and AT should try to dispose of the appeal within 180 days. And last level, if we are still not satisfied with the order of 80, then we can go and file an appeal to the High Court, but only on question of law. Okay, only here in this chapter, only on question of law within a time period of 60 days plus condonation of 60 days. So first, some director or ED will come up with a complaint against some defaulting person. That director will go and file the complaint with AA. AA will try to determine that complaint within 1 year. It will pass an order. It can pass a penalty order. That penalty order, if it is levied, then we will have to pay it within 90 days or go for compounding. Right? That is one thing. If we are not satisfied with the AA's order, then in that case we can go for appeal. First level of appeal, special director of appeal. Second level of appeal, appellate tribunal. And last level of appeal is your High Court. I hope I am very, very clear with this. Yes, and yes, here they have given you the different type of authorities who are there in the chapter. Just like I mentioned, ED is the primary authority, just like PMLA. ED is your primary authority in case of FEMA also. So you have got ED is there, additional director of enforcement is there, special director of enforcement is there, deputy director of, and so on and so forth. And we can even take the help of other law officers. Like we can take the help of central excise officer, we can take the help of customs officer, and etc. etc. Yes. Now, whatever things are found in your premises during search and seizure by the FEMA authorities, those are deemed to be yours unless proved to the contrary. If we are able to prove that, okay, this does not belong to us, then that is okay. Otherwise, it belongs to us. If a paper is found in my premises, then it is deemed that the handwriting present on that particular paper belongs to you unless otherwise agreed, unless otherwise proved. Okay, so that is the presumption. If something is found in your custody, then that belongs to you. Right? Next section, contravention by companies. We have done this point in many chapters before also, that in case of individual, an individual will be liable, but in case of companies, the person in charge will be liable if he is not able to prove that he had exercised due diligence or it was done without his knowledge, etc. Okay, whatever cases are going under FEMA, it will still continue even in case of death or insolvency. In case of death, it will continue against the legal representative, yes, and in case of insolvency, it will continue against the official receiver. I hope I am very, very clear with this. And yes, as mentioned earlier, these topics, import, ECB, etc., these topics I have specifically covered in a different video on YouTube only. So I have provided the link in the description below. You can just go on that link and you can cover these topics in short. Yes. So this was all about your FEMA chapter, where we divided the chapter. First part was definition, 4 definitions, super duper important. Next part was your current account transaction, 3 schedules, very, very important. Next part was your capital account transaction. In that, what is important is 2 transactions which were freely allowed and 5 transactions which were prohibited. Those are very, very important. Okay. Then we did the export provisions. The time limit is important in export, 9 months, 15 months. Then advance money against export, that thing is important. And last thing that we did were these miscellaneous provisions. Their penalty is important. Appeal procedures are important. Yes. Okay. Okay, so let's start with a super quick revision of IBC. Now, before getting into the revision of this, we have divided the chapter into 2 parts. First thing that you're going to see is the revision of IBC, except for PPIRP concept. Okay, so first, just like in 1.5 hours, we'll try to complete the IBC revision. Yes, and then for PPIRP, again, I have put a separate video covering the entire concept of PPIRP. So, in the first part of this video, you won't find anything relating to PPIRP because that has to be taken up separately. So, in your book also, you can ignore everything of PPIRP for the time being. Complete the basic IBC, and then in the description, I have provided the link of PPIRP. Refer that. Okay, so let's start with a super quick revision of Insolvency and Bankruptcy Code 2016. The code was introduced in the year 2016. Before that, Lok Sabha approval was obtained in December 2015. We got the approval in Rajya Sabha in May 2016, and finally the President's assent, President's approval was received on 28th May 2016, from when this code became applicable. Okay, so basically the IBC came into picture from 28th of May 2016. The code is applicable to whole of India now, including the state of Jammu and Kashmir. When we talk about three terms, that is insolvency, bankruptcy and liquidation, let's identify the major differences between all the three. Insolvency is the place, or insolvency is just state when we know that we are unable to pay our debts, or when our liabilities or when our outside liabilities exceed the assets. Okay, our outside liabilities exceed the value of the assets. Only we know that we have become insolvent. If we go and make an application to the authority, okay, this is the dictionary definition, distinguishment between all the three terms. When we go and make an application about our insolvency to the necessary authority, then in that case, that leads to bankruptcy, and the authority declares us as bankrupt. And if there is a winding up of a company, or if there is a close down of a company, then in that case, it leads to liquidation, or that is called as liquidation, where we sell off our assets and pay off our liabilities. Okay, now listen, just try to understand. In case of individuals and other persons, okay, basically in case of non-corporates, insolvency is known as bankruptcy. Okay, for the purpose of IBC, in case of individual and other persons, insolvency is known as bankruptcy, and in case of corporates, it will be called as corporate insolvency. Okay, in case of corporates, it will be called as corporate insolvency. Now, if insolvency is untreated, if you do not treat it, if you do not try to resolve it, then in case of individuals, it is again going to lead to bankruptcy. Just remember, in case of individuals, we just have one important term, that is bankruptcy. In case of individuals, it leads to bankruptcy, and in case of corporates, if it is not resolved, then it is going to lead to liquidation. In our syllabus, we are just going to study, we just have the provisions relating to corporates. So in corporates, there are two options. In case of corporates, there are two options in case of insolvency. Either it can be resolved, either there can be a recovery and resolution, or it can lead to, if it is untreated or if there is no possible option available, then in that case, it will lead to liquidation. That happens in case of corporates. Okay, so in case of corporates, first of all, the insolvency is called as corporate insolvency, and there can be two options to that insolvency. One is recovery and resolution, and the other one is going to be liquidation. Okay, then what was the motive, or what was the purpose of making or coming out with this particular code? So we had many laws which was talking about this insolvency. So we consolidated the laws, we amended that particular law, and we made a new code out of it. Okay, after that, the most important thing was the time thing. That is the time period within which we had to resolve any particular person, or we had to liquidate a particular person. So they fixed a time period under this particular code. They established a very important body, or they established a very important board here who is going to regulate the entire process, that is called as the IBBI, which stands for Insolvency and Bankruptcy Board of India. They wanted to resolve that particular corporate. They wanted to recover that particular corporate, so that there is no loss ultimately to the shareholders of the company, so that their value increases, so that if IBC is able to help people recover from these insolvency thing, it will promote entrepreneurship. More and more people would like to come into this. If the defaults of the banks, etc., are getting recovered on time because of insolvency, then that will lead to lower interest rates and more funds being available in the market because of no default, or because if we are able to recover the money from the corporate debtors. And ultimately, it is going to be favorable to all the stakeholders. With this particular intention, they started with this particular code, or they enacted this particular code. This was called as a code. Because it was consolidation of many laws together, or it was consolidation of many insolvency provisions taken from different laws together. And that's why it was called as a code and not as an act. Now, what makes it different? From the earlier laws? The most important thing is, here you are going to have, first of all, a most important body, that is your Insolvency and Bankruptcy Board of India, which is going to regulate the entire insolvency process. Then after that, you just have one authority to whom you're supposed to go, that is the adjudicating authority. Then after that, even once you go to the adjudicating authority, after that, if you want to go for appeals, the chain of authority is going to be a single chain only. That is, you'll go to the adjudicating authority. Example, in case of corporates, you go to the NCLT. For filing the appeal, you'll go to the NCLAT, and then you go to the Supreme Court. So first of all, there is going to be a one window clearance. If you want to go for IBC, you have to go to the NCLT. And after that, there is just going to be one chain of authority which is already well defined in this particular law. Then after that, for maintaining the details or for maintaining the data bank of all the defaulters, so that if any person wants to do any transaction with the defaulters, they can first check whether his name is mentioned in the data bank called as information utility. So in IBBI, we are going to maintain a centralized database called as information utility, in which we are going to maintain all the details about the defaulter, so that if any person wants to do transaction with them, we can first check their past records or credibility from the information utility. Then all insolvency relating provisions have now been consolidated into one, and because of that, what has happened is, those provisions, since we have taken all the provisions into IBC, the respective insolvency provisions from other laws have been totally deleted. So many other laws have been withered away, means we have totally got rid of the other provisions, other laws which we're talking about insolvency, multiple laws which we're talking about insolvency, and now everything has been covered into a single law. When we study later on section number 53, when we are going to reach to section number 53 in this particular section, at that time we'll come to know, in this IBC, priority has been given at the time of repayment. Priority has been given to employees and workmen of the company, as compared to the traditional method where we used to give priority to the government taxes, preferential creditors, and all those people. The law is very clear in respect to the procedures that has been given, and the best part of the law is section number 12. The best part of the law is section number 12, which gives a time period, within which you have to resolve the case. And if the case is not resolved, in those many number of days, then in that case, we are ultimately going to take ourselves towards liquidation. Okay, so time is one thing, authorities is one thing, clarity is one thing, single law for every problem is one thing. These are the major distinguishing features of IBC when you compare with any other laws. Structure of the code is very simple. The code is it will talk about the basic things, that is preliminary things. It is going to talk about the CIRP, that is Corporate Insolvency Resolution Process, which talks about the insolvency process for corporate person. Ma'am, what do you mean by corporate? Corporate is nothing but, for the purpose of this chapter, corporate is nothing but company as well as LLP. The third part is going to talk about other people, that is individual partnership firms and even other persons. The fourth part is going to talk about some procedural aspects, like fourth part talks about your insolvency professionals, the people who are going to work under this act. It is going to talk about their institute, that is insolvency professional agencies. It is going to talk about information utility, that is the data bank, how it is to be maintained, and all the details about it. And the last part is going to be your miscellaneous part, which is going to contain talk about all the penalties. Now, let's try to understand the authorities and the people who are involved in this particular law. At the top, you have got the IBBI sitting. IBBI was nothing but the Insolvency and Bankruptcy Board of India, who is the most important body, in your IBC. Within IBBI, first of all, you have got the insolvency professionals. These are the professional persons who have cleared the examination and who are going to do the most important work in this particular chapter, who are actually going to do the groundwork. These people are registered as a member. Okay, these people are registered as a member of insolvency professional agencies, which is nothing but just like your institute. Okay, just like we register ourselves as a member of the insolvency professional agencies, similarly, even IPs get themselves registered as a member of insolvency professional agencies. Insolvency professional agencies work under the purview of IBBI. It does not interfere in the entire process. No, it is not going to come anywhere in the entire process, but it is going to regulate the IPs. Just like ICAI regulates its members, similarly, IPAs are going to regulate the IPs. The third person who is going to be regulated by the IBBI is the information utility. Information utility is nothing but the data bank. Just like I mentioned, it is nothing but the data bank in which we are going to maintain all the details about the defaulters. Defaulters means the corporate debtors, so that if at any point of time we require any information, we can just approach the information utility and we can seek information from there. Next person who is going to be the most important person in the entire chapter is going to be the adjudicating authority, who is going to supervise the process. Like the IP was working, the insolvency professional was working, he is going to work under the supervision of the adjudicating authority. Ma'am, who is this adjudicating authority? He is the person who is going to determine the default. He is the person who is going to give the final approvals and all those things. But for corporates, the adjudicating authority is different. For non-corporates, the adjudicating authority is different. For corporates, it is NCLT, NCLAT and the Supreme Court, which we had mentioned in that chain of authority. For non-corporates, it is going to be the DRT, DRAT and the Supreme Court. These are the authorities. So the first person to whom we are going to approach in case of corporates is going to be NCLT, and in case of non-corporates, the first person to whom we are going to go and approach is the DRT. Rest, both the levels of authorities are going to come in case of appeals. Okay, a few important things about IBBI, IPA, IPs and the information utility. Let's try to recollect those. The most important one is IBBI. IBBI was the most important board which was formed under the law. It is going to have its head office at New Delhi. It was formed in October 2000, on 1st October 2016. It is in the nature of company. So it is a body corporate having common seal, having perpetual succession. It can hold assets in its own name, normal features of a company. And the board is going to tell the IPA, it is going to tell the IP, it is going to tell the information utility to discharge its functions. Okay, who all are going to come and sit in the IBBI? So I had told you this as 1315. If you remember, 1315 persons are going to come and sit there. Ma'am, what is this 1315? So one chairperson, 3 members from the Office of Central Government to represent 3 different ministries, if you recollect, Ministry of Finance, Ministry of Corporate Affairs and Ministry of Law. One person who will be nominated by the RBI, and then we are going to have 5 other members from 5 other members who will be nominated by the central government, and one condition there was, out of these 5, out of the last 5, at least 3 of them should be whole time. Okay, and there is a by default assumption that the chairperson of the IBBI, the first person, even that person is a whole time person. Then after that, when we talk about the insolvency professional agencies, whenever I use the word IPA, okay, IPA means you have to just remember it as the institute. Okay, the main purpose of establishing this IPA is just to enroll IPs as its members and to regulate them. Okay, it is going to make sure that it provides for the code of conduct, it provides for the code of ethics for its members, it is going to promote its own growth, it is also going to make sure that the growth of its members are promoted, it is going to promote professional development of itself, of itself plus its members. It is going to make the bylaws for its IPs, which the IPs have to fulfill. Suppose if any person has any complaint against the IP, if suppose any person has any complaint against the IP, then that person can go and file that complaint before the IPA. IPA is going to monitor its own members, just like ICI monitors its members. Similarly, IPA is going to monitor its members. It is going to gather information about their performance. If there is any malfeasance happening, if there is any wrong thing that is happening, then it will take action against its members. So IPA is not going to basically interfere in the process. Okay, it is just going to have a look, or it is just going to control its members, because its members are the most important people because of whom this IBC is happening. Because like if the IPs are not there into picture, then it is not possible to do any particular CIRP, it is not possible to do any particular case under insolvency and bankruptcy code. Then after that, let's understand about these members. These insolvency professionals are the professional people who have cleared the examination conducted by the IBBI. After clearing those exams, they enroll themselves as a member of insolvency professional agencies. They are the most important people who will be working in this particular process. They are going to verify the claims of the creditors, they are going to sell the assets of the corporate debtors, they are going to run the business whenever it is required, they are going to act in various capacities. Like initially, these people act as interim resolution professional, temporary person. Then later on they act as a resolution professional. Then later on they even act as a liquidator. Sometimes they even act as authorized person. So the person is single, or we can say the degree is single. It is a single degree, but the people are acting in various capacities. Okay, and the last one, that is your information utility. Again, I'm telling you the same thing. Information utility is nothing but the data bank which is going to contain all the information about the defaulting person, so that if any person wants to do any transaction with these people, we can just go and check their track records from the information utility as per the procedure. About adjudicating authority, so we have already discussed about the adjudicating authority. Since we are doing only for the corporates, so the first window is going to be NCLT, then you are going to have the NCLAT, and then you are going to have your Supreme Court. Okay, now getting into the process of the chapter. First of all, you are going to have two types of creditors here who are aggrieved under the code. One is your operational creditor and the other one is your financial creditor. Operational creditor pertaining to the operational debt, day-to-day business activities, and financial creditors pertaining to the financial debt, including real estate allottees, and these are the people who have funded the corporate debtor. Okay, these are the people who have funded the corporate debt. Now, as already told, the code is going to be applicable to whole of India, including the state of Jammu and Kashmir. Another section, that is section number 2, which is going to talk about applicability of the code, that is against who all can we initiate the CIRP, like who can be the corporate debtor. Corporate debtor is the person who is the defaulter. Okay, just remember that much. Corporate debtor is the person who is the defaulter. So who all can be the corporate debtor as per this particular code? So it can be a company, it can be a partnership firm, it can be a specific company which is regulated by any special act, it can be individuals, it can be personal guarantors also. It can be any particular associations, it can be LLPs, it can be any other body which has been incorporated under any particular law, it can be partnership firms, proprietorship concerns, etc. It can be any such thing. But a few exceptions here is, first of all, the people who are regulated service providers. Okay, the people who are regulated service providers, example, banks, insurance companies, ARCs, mutual funds, these are regulated service provider. First of all, they are service provider and they are regulated by some or the other law. So the code is not applicable to them. Ma'am, what do you mean that the code is not applicable? Means we cannot initiate insolvency against them. We cannot initiate. They can still initiate. Bank can initiate CRP against me, but I cannot initiate CRP against bank. And similarly, when we talk specifically about NBFC, in case of NBFC, IBC will be applicable against them. Like we can proceed against a NBFC only if it is a large NBFC. Ma'am, how do you define a large NBFC? Whose asset size is more than or equal to rupees 500 crore. Against them, now we can initiate CIRP process. Now, in the entire chapter, we are just going to study about the corporate insolvency resolution process. Okay, only about the corporates. Ma'am, what do you mean by corporates? So, corporates is equal to company plus LLP. Okay, now listen, if you want to initiate CIRP against any particular person, okay, I want to declare a particular person as insolvent, I want to resolve that particular person, or maybe I want to liquidate that particular person. For that, you can come under IBC only if that person has done a default with you. Only if the corporate debtor has done a default with me. If the corporate debtor has done a default with me of at least rupees 1 lakh, at least minimum rupees 1 lakh, then in that case, yes, you can initiate CIRP against that particular person. At any point of time, central government has got the power that it can increase this limit of rupees 1 lakh to any amount up to rupees 1 crore. To any amount up to rupees 1 crore. Okay, then after that, there should be a default. That is very, very important. Without default, you cannot initiate CIRP. Means the amount is due to be received from the corporate debtor. It is already outstanding. It has already become due, but then too you haven't received it. Okay. Then after that, who can start CIRP? Who can start this process under IBC? So 3 of them can start. Financial creditor can start, operational creditor can start, and corporate debtor himself can go against himself if he thinks that no, it is not possible. No, it is not possible to continue the business in this way. Before someone goes against me, let me only go and initiate the CIRP against myself. So even that is absolutely possible. Okay, so now whoever wants to go and initiate the application, that is operational creditor, financial creditor, corporate debtor, etc. When whoever wants to go and initiate this, these people will have to go and make an application to the first person in the authority, that is the NCLT. That is to the NCLT. And the day when your application is accepted, okay, the day when the application is accepted by the NCLT, that date is called as the date of ICD. ICD, that is insolvency commencement date. Okay, the day when you go and make an application, that is your initiation date. But the day when it is accepted by the NCLT, that date is called as the insolvency commencement date. Now getting into the procedure. First of all, section number 7, which is very, very important. Section number 7 talks about filing of CIRP or initiation of CIRP by the financial creditor. If there is a financial creditor in the company, then that financial creditor either by itself alone, or in some cases where joint application is mandatory, which we'll study after section number 21, then in that case, these people can go and file an application to the adjudicating authority along with the necessary documents, that is the proof of default, that is the claims proof or the proof of claims in form number C, suggesting the name of the insolvency professional who is going to act as interim resolution professional, and any other information which is required by the IBBI. We'll take all these things to the adjudicating authority. Adjudicating authority will ascertain the default within a period of 14 days. We had studied one of the case laws here, that this 14 days can be treated as directory in nature. Then the adjudicating authority will ascertain whether there is a default or no. If it says that yes, there is a default, then in that case it will admit the application. If it says no, there is no default, or if there is any mistake in the application, then initially it will reject it. If it gets admitted, then in that case the adjudicating authority will inform two of them. One is the financial creditor and other one is the corporate debtor, that yes, the application has been admitted. If it gets rejected, then it will just intimate it to the applicant and give a time period of 7 days to the applicant to rectify it. If he rectifies, then well and good, and on that basis the final order will be passed by the adjudicating authority. And for rectifying the application which got rejected, for that period we are supposed to give a time period of at least we have to give a time period of 7 days to that particular applicant. But again, as per that particular case law, the 7 days can be treated as directory in nature. The day when my application got accepted by the adjudicating authority, that date was called as what? That date was called as the insolvency commencement date. Similarly, when we have to go and file an application, by the operational creditor, then two sections will be applicable there. First of all, section number 8 and then section number 9. In section number 8, there is going to be an extra step there. What is that extra step? Operational creditor, as soon as he thinks that yes, a default has occurred and his money is due to be received from the corporate debtor, he will first send, last possibility or last chance, he will send a demand notice to the corporate debtor that sir, your money is due and I am giving you last 10 days time to repay it. If you fail to do the repayment within a period of 10 days, then in that case I am going to proceed for the insolvency, for the CIRP. Now, after this, suppose within this period of 10 days, there can be multiple possibilities. Suppose if the corporate debtor decides to pay the entire amount, then the case is already over. Now we cannot go for IBC. Suppose he says that no, there is already a case pending. There is a case pending in any court, there is any case pending in arbitration, or there is any appeal going on, then we cannot proceed under IBC. Or if he does not reply at all within a period of 10 days, then in that case, yes, we have got all the rights. Operational creditor has got all the rights to proceed to the adjudicating authority for this CIRP. Now, when we go to the adjudicating authority for CIRP, then starts your section number 9, which is similar to your section number 7. Once you go to the adjudicating authority for CIRP, you have to take the necessary documents. Example, you will take the copy of invoice, the supporting document. Maybe that person is a sundry creditor, so the purchase sale bill would be there with you. You will take the proof of claims, which will be in form number B. You will submit an affidavit that no case is pending anywhere in any court, arbitration, etc. If possible, you will take a certification from the financial institution that no payment has been received from the corporate debtor, if available. Similarly, if any data is available in the information utility, if possible, you will take and you will submit it to the adjudicating authority. If possible, then you will suggest the name of the interim resolution professional. Here it is not mandatory to suggest the name of the interim resolution professional. You will take all these things. You'll take the copy of the demand notice that you had issued to the corporate debtor earlier. All these things you will take to the adjudicating authority, and then again the same thing. AA will take a time period of 14 days. It can say yes or no, and it will also check, yes, in both the section, in 7 also and in section number 9 also, it will check whether if we have suggested the name of the interim resolution professional, then we'll also check whether any disciplinary proceedings are pending against that person or no. If everything is good, then in that case AA will accept the application. If something is not good, then AA will reject the application, but before rejecting, again that 7 days time period etc. will be given, just like section number 7. Then the next one, the last process coming up here, that is section number 10, which is talking about CIRP by the corporate person, by the corporate applicant, means where the CD himself goes and files an application. If CD is of the opinion that yes, some default has happened, he has done some default with his creditors, then CD can go and make an application to the adjudicating authority with his financial statement, with his books of accounts, with the proof of claims, which will be in form number D. If it is a case of company, then SR has to be passed. If it is a case of LLP, then it should be approved by 3/4 of the partners, that yes, everyone is okay, like majority of them are okay with going with this CIRP. We'll also suggest the name of the interim resolution professional. All these things will take it up to the adjudicating authority, and then again the process remains the same, that is, it will take 14 days time. It will check whether any disciplinary proceedings are pending against the interim resolution professional or not. If all good, then we will accept the application. If nothing is good, or if something is not good, then we will give 7 days time period to the corporate person to rectify the application, and depending upon that, we will either admit it or we will reject. So till here, till section number 10, basically your process gets over. Now a few simple sections coming up here. First of all, section number 11. Section number 11 says that there are 4 people. Okay, now listen, there is going to be a overriding explanation which is going to come up here. Section number 10 says that if there is it specifies 4 people who cannot initiate CIRP, okay, who cannot start with this CIRP. First of all, any person, any corporate debtor whose CIRP is going on, then you cannot start CIRP against any other corporate debtor. This is what they were trying to tell. If I am myself, I am undergoing CIRP, then I cannot start insolvency process against any other person. Or if my insolvency has just got completed in the last 12 months before I am making an application for CIRP, or in the last 12 months I have violated the terms and conditions of the plan which was approved in the last 12 months, or if any liquidation order has been passed against me, then they are telling that, boss, either you yourself are a defaulter or you have just revived, then you cannot go and initiate CIRP against any other person. This was the major provision of section number 11, but then they said that in one of the explanation number 2 was inserted there, and they said that nothing can prevent, nothing will stop the corporate debtor from doing application in all the 4 cases. Means the corporate debtor can still proceed. The corporate debtor can still proceed, and it can to recover the money from its own debtors, it can initiate CIRP against them. Okay, this was the conclusion of your section number 11. Now, going on to the next section, that is section number 12. Section number 12 is very, very important, which is talking about the time limit for completion of the process. Now, CIRP should be completed. By default, CIRP should be completed within 180 days from the insolvency commencement date, from the date of admission, means when your insolvency got commenced. In this case, suppose if at a later stage the COCs of the resolution professional is of the opinion that we require more time to complete the process, then first it will go to the committee of creditors which we will form in the due course. We will take their approval by a voting of 66%, and then we'll go and make an application to the adjudicating authority that, sir, we need more time to complete this entire process, and then in that case we can get a one-time extension of a maximum period of 90 days. Okay, now in some cases when the legal proceedings are going on, against any particular corporate debtor, then during the CIRP all those will have to be taken care of, all those will have to be paused, etc. In that case, it takes certain time. It becomes difficult to complete the entire CIRP within 180 plus 90 days. So they say that in cases where legal cases are pending, then instead of 180 plus 90 days, just forget that 180 plus 90, instead of that we have to complete the entire process within a time period of 330 days. This was your section number. This was a section number 12. Now, similarly, one more important section, that is section number 12A, which talks about withdrawal of application. Now, whichever application was admitted, maybe which was done by the FC, which was done by the OC, which was done by the corporate debtor, if it has been admitted by the adjudicating authority, it can be withdrawn. If they think that, okay, now there's no point of going into IBC because of whatsoever reasons, then in that case, they can withdraw this particular application by a voting of at least 90% of the COC. Okay, so this is the major, biggest approval that we require. 90% of the approval of COC would be required. Right, then after that, going on to the next section, that is 13, 14, 15, 16. Okay, these sections to be done together, 13, 14, 15, 16, which is going to take us ahead into the code. In section number 13, what happens once your application is admitted? After that, first of all, moratorium is declared, a calm period is declared. Okay, which is going to happen in section number 14. After that, you appoint the IRP. Okay, after that, you appoint the IRP whose name was suggested in the application, or by different modes, the IRP is going to be appointed. He will be appointed in section number 16. Okay, and once he comes into the picture, after that, he is supposed to give a public announcement to everyone that CIRP is going to go on. That is going to happen in section number 15, 1-5. Okay, now let's take one section at a time. First of all, the one of the big sections here, that is your moratorium, section number 14. They say that as soon as the process starts, the adjudicating authority itself declares a moratorium. Means now all the legal cases, suits, proceedings, etc., everything is going to cease. Everything is going to stop during this particular period, because we are going to give time to the corporate debtor to resolve its status. If cases are going on against that particular person, then it becomes difficult to revive that. Right, so there will be few activities which will be prohibited during this moratorium. That is, legal cases will stop. Okay, we cannot deal in our property, we cannot sell off our properties, because now we are people have doubt on us that we might become insolvent. Then none of the banks or none of the creditors can enforce the security interest. Means if they are having any of our asset as mortgage, then they cannot sell it during this moratorium. And last, suppose if I have occupied any particular premises as a lessee, means I have taken any particular premises on rent, then just because insolvency has commenced against me, then that person cannot ask me to vacate the premises. If I am not paying the rentals, etc., that's a different thing. But just because of insolvency, that person cannot ask me to vacate the premises. But one very important thing is, during moratorium, the business can go on. Okay, if you are entering, if you are into the business of any goods or services, etc., that thing is going to continue during the moratorium. Plus, at the same time, suppose if you already had some licenses, you already had some concessions, you already had some permits with you, maybe FSSAI or maybe your shop and establishment license, etc. The validity means the license is going to be normally valid even during the moratorium, until unless you fail to make the payment for renewal of these registrations, renewal of these licenses. Otherwise, these licenses won't be affected due to IBC. Okay. Similarly, the supply of essential services to your corporate, that is supply of electricity, supply of power, government cannot stop anything just because CIRP is going on, because they say that if you have been doing the payment of that, then that does not get affected during your moratorium. Okay, moratorium is applicable only on the person against whom CIRP is going on. Okay, means if against me the CIRP is going on, then the moratorium will be applicable on me and not by default on my guarantor. Okay, moratorium will be applicable on the guarantor only if CIRP is initiated against that person. So just remember one thing: moratorium is applicable only on the person against whom CIRP is going on. Then after that, moratorium is by default applicable for 180 days. Plus can be extended by 90 days or can go up to those 330 days. Basically, till the CIRP ends, the moratorium is going to be there. And once the CIRP ends, even the moratorium is going to come to an end. So this way, your moratorium period has started now. Okay, after that, the IRP is going to be appointed. Ma'am, how the IRP is going to be appointed? In case of financial creditor, okay, just try to recollect. In case of financial creditor and in case of corporate debtor, we had suggested a name. Okay, if the name suggested by us is proper, means there is no disciplinary proceedings going on against that particular person, then we can appoint that particular person as the IRP. It will be deemed to be appointed on the insolvency commencement date itself. If suppose we suggested a name but that name was not a proper name, or suppose if the OC did not suggest a name at all, then in that case AA, adjudicating authority, will go and make a reference to the IBBI. IBBI will suggest a name within a period of 10 days, and such a person against whom there are no disciplinary proceedings which are going on. In all the cases, it will be deemed that the insolvency process, that the IRP is appointed on the insolvency commencement date. Okay, now once the IRP comes into picture, okay, after that, once the IRP comes into picture, within a period of 3 days of his appointment, he'll have to give a public announcement. Ma'am, what all things will be written in this public announcement? So, the details of the corporate debtors will be written. His own detail will be written. The day on which the process started, that date will be written. The day on which the process is going to end, that date will be written. It is going to invite claims from the people. Whoever's money is pending, please come and intimate us. Plus, it is going to give a warning in that if you're giving any false claim, then we are going to put a penalty on you, and the date on which the CRP is going to get over. All these things will be written in the public announcement. The cost of the public announcement will be initially borne by the person who has done the application, and later on it can be reimbursed. Later on it can be reimbursed from the COC to the extent it ratifies them. Like to whatever extent they feel it good, till that amount we will get the reimbursement of that. This IRP is going to continue. This IRP is going to continue till the time the RP comes into picture. Till that particular time, he is going to continue. After coming into picture, he'll exercise his powers. He'll take everything into his custody. He'll take everything into his control. He will exercise all the powers of the suspended management. He will tell everyone to assist him. He will tell everyone to report to him. He will go and seek information from the financial institutions, and all those things will happen. Then after that, the most important thing or the most important duty of the IRP which he has to do is, he has, by way of public announcement, he has already collected the claims from the creditors. So now he'll start doing the cross-checking of claims with his own books of accounts, with the information that he is having available with him. He'll collect all the information about the assets of the corporate debtor, assets as well as liabilities. He'll do everything relating to that. If required, he will assist in running the business of the corporate debtor during this moratorium period. He will take the help of the statutory auditors. He might take the professional expertise help. He can take the help of accountants, statutory auditors, and all those people during the process. And the most important thing that this person has to do is, this IRP is mainly appointed to constitute a COC. His main work is going to constitute a committee of creditors in the company. Okay, and it is the responsibility of everyone in the company. Okay, it is the responsibility of everyone in the company to provide the necessary assistance, to the IRP. Now, one important thing here is, till the time IRP is not constituting the COC, there's only IRP into the picture who is controlling the entire affairs, of this particular corporate debtor. So there have been some powers which has been given to him. Okay, first of all, we tell him that you have to continue the business as a going concern. Okay, as if this is never going to close, as if there's not going to be any liquidation which is going to happen. So he is going to continue the business as a going concern. He's going to, just like I told you, it is going to appoint the accountants. It will take the professional expertise. It can raise funds whenever required for doing the business. It can enter into contracts on behalf of the corporate debtors. All these powers are there because he has to run the business. As a going concern. And now he is going to do the main thing for which he was appointed. He is going to form a committee of creditors. Ma'am, what is this committee of creditors? Committee of creditors are the important persons who at a later stage are going to approve everything, because there will be a shift of control. Like from management, it will go to the IRP. From IRP, it is going to go to the RP. Then from RP, it is going to go to the committee of creditors. So COC are the people who are going to have the ultimate control of the business of the corporate debtor at a later point of time. Now, how do we constitute this committee of creditors? So in committee of creditors, by default, all the financial creditors come and sit. Okay, but if there is any financial creditor who is a related party of the corporate debtor, then that person has to be excluded. Suppose if all of them are related parties, or if suppose there are no financial creditors in the picture, then there will be a special method. Okay, then there will be a special method of constitution of this COC. Ma'am, what is that special method? So in that particular special method, 18 largest operational creditors will be coming into the picture, plus one person representing the employees and one person representing the workmen. These many people are going to come and sit. In the committee of creditors. Okay, now say for example, now by default related party is not included in the committee of creditors, but if any particular financial sector regulator, example bank etc., has become a related party of the corporator because it is holding some shares in it, but since it is a bank, since it is a financial sector regulator, it won't be treated as a related party. That was an exception. Okay, that was an exception. Then after that, say for example, in case of consortium financing where multiple banks have funded a single person, then all those multiple banks will be treated as separate persons for the purpose of committee of creditors. Okay, say for example, if there is a particular person, who is a FC also plus who is an OC also, then in that case, I'll be allowed to sit in the committee of creditors, but only to the extent of my financial debt. Okay, suppose if some OC has assigned his debt to a FC. I am a FC and I have taken over a debt of the OC. Then in that case, I do not become a FC for the entire amount. No, there will be a bifurcation. My debt will be called as for my debt, I'll be called as a financial creditor, and the debt which I have legally taken it from some other person, for that amount, I'll be still called as an operational creditor only. So the nature of debt does not change because of the assignment. Then after that, what they say is a few special points here. Example, in case of consortium financing, like say for example, 3 banks are there, they have funded a single person, then for the purpose of committee of creditors, they can appoint an authorized person who can represent all the 3 banks. Either you can appoint one single authorized person, or the 3 of them differently, they can appoint different authorized person to represent themselves in the committee of creditors. That is allowed, and this authorized person can be an insolvency professional by qualification. He can be an insolvency professional by qualification. Now, section 21, subsection 6A, which was very important, where they say that there are 3 clauses there. The first clause, which talks about debenture trustee, or in case of debenture holders, there has to be compulsorily an authorized person. And who is going to be the authorized person here? The debenture trustee, or who is going to act on behalf of all the debenture holders, will be the authorized person. Second, the B clause, that is where similar type of creditors have been grouped together, and in a particular class we have got more than 100 creditors. Then in that case, the law mandatorily says that you have to appoint an authorized person on behalf of so many people. For that, an insolvency professional is appointed. An insolvency professional is appointed by the IRP. Means the IRP goes and makes an application to the AA that, sir, let's appoint a particular person as an authorized person, and the amount which will be payable to the authorized person here as a remuneration will be forming part of the insolvency process cost. And then the C clause was talking about the case where the debt is represented by any representative or any guardian etc. Then in that case, that guardian or that legal representative will be considered as an authorized person. Okay, they are going to vote on behalf of the persons to whom they are representing. Now, the cost of the authorized person only in case of class of creditors will be treated as an insolvency process cost. Rest will be borne by the creditors themselves. Example, the cost of the debenture trustee will be borne by the debenture holders themselves. The cost of the legal guardian will be borne by the estate of the deceased person, that way. So, in other cases, law is not going to interfere in between. Now, in majority of the places, the voting required to approve any particular decision is generally written in that particular section. If there is any particular section where there is no percentage specified, then in that case, we'll take the decision by a voting of at least 51% of the COC, but that is going to be applicable only in those cases where the section does not provide for a specific percentage. Okay, now while doing all these things, IRP has got so many information from different places. IRP has gathered so much of information about the corporate debtor. If any creditor goes and seeks that information from the IRP, then the IRP will have to provide it within a period of 7 days. If IRP has that information, he has to provide it within a period of 7 days to any of the creditors. Then going back to the amendment of section number 7, where we had already studied that in some cases financial creditors are supposed to do a joint application. Okay, in which all cases are we supposed to do a joint application? First one, in case the debenture holders plan to initiate a CIRP, or when the class of creditors plan to initiate a CIRP, then in that case it has to be a joint application mandatorily by at least 100 of them or 10% of the people in that particular class, whichever is lower. At least these many of them have to go and make an application. Similarly, in case of real estate allottees, also the same number, at least these many of them should go and make an application. It has to be a joint application mandatorily. Rest in all the cases, yes, single application would also do. Now, so now by this time IRP was there into picture. He constituted the COC. Once the COC is constituted, after that we conduct the first meeting of the COC. Okay, as soon as the COC is constituted, from that day, within a period of 7 days, the COC is constituted. Within the period of 7 days, first meeting of the COC is conducted. In the first meeting of COC, there is a personal interest of the IRP that is involved. He would like to get himself converted into a resolution professional generally. So if the COC approves by a voting of 66%, and if we are able to take a written consent from this IRP, then in that case the same person can be appointed as a resolution professional also. Suppose if he does not give his written consent, or if suppose the COC does not approve it by way of a voting of 66%, then in that case we'll bring a new face into the company as a resolution professional. For that purpose, a new name will be taken. A new name recommendation will be again taken from the IBBI. IBBI will suggest a new name within a period of 10 days, and it will be such a person against whom there are no disciplinary proceedings which are going on. Okay, and suppose if there is any delay on behalf of IBBI, that it is not able to suggest a good name within a period of 10 days, then no problem. Till the time the RP is appointed, or till the time the new person is appointed, till that time the IRP is going to continue into the picture. Means there has to be someone sitting either in the position of IRP or someone sitting in the position of RP. Okay, the position cannot be blank for any period of days. Then the RP comes into picture. Now RP is going to come into picture. He is going to manage the operations. He'll take all the information from the IRP. He'll seek help from the IRP wherever it was. If he is a different person, he will try to manage the operations. He will try to identify whether resolution is possible, whether liquidation has to be done. He will exercise whatever powers were there on the IRP also. He'll exercise all those powers also, because he is just continuing the case ahead. Okay, and IRP is supposed to share all the information. IRP is supposed to share everything with the resolution professional, because he was the person who was continuing the process till now. Then after that, what are the qualifications? Like, who can act as a resolution professional? See, first of all, that person has to clear the examination conducted by the IBBI. By that, he is just treated as an insolvency professional. But how to become a resolution professional, or who is eligible to become a resolution professional? For that, they had given certain qualifications. Suppose if the corporate debtor is a company, then in that case, I become eligible to be appointed as a resolution professional in that company if I am eligible to be appointed as an independent director. Okay, independent director given under section 149. If I am eligible to become an independent director, means I have fulfilled so many criteria that I am even now eligible to become a resolution professional for that particular corporate debtor. Then this person should not be a related person. This RP should not be a related party of the corporate debtor. Otherwise, what's the point in appointing this person as a resolution professional? Plus, this person should not be an employee, proprietor or partner. We had seen the examples also. This resolution professional should not be an employee, proprietor or partner of any CA firm, company secretary firm, or any cost auditors of the corporate debtors in any of the last 3 years. Plus, he should not be an employee, proprietor or partner of any legal or consulting firm of the corporate debtor between whom the transactions are of more than or equal to 5% of the gross turnover of that legal firm. Means the transaction between whom? Transaction between the corporate debtor and between the legal firm. The value of that should not be more than or equal to 5% of the turnover in any of the 3 years. Then in that case, if you fulfill all these criteria, then you will be eligible to be appointed as a resolution professional. Fine. So now resolution professional has come into picture. The COC is there in place now for conducting the activities, for understanding the process, to take the process ahead. From now the actual work starts. Okay, from time to time we can conduct the meetings of the COC. First of all, the first meeting was conducted within. It was conducted within 7 days of formation of the COC. As soon as the COC was formed, from that day, within a period of 7 days, the first meeting was conducted. In the first meeting, we got the IRP converted into RP, or we appointed a new person as the RP. Later on, as and when required, we can conduct whatever number of meetings we want to conduct. It can be in physical mode, it can be in electronic mode. Notice, okay, important point, notice of this has to be given to, first of all, it will have to be given to all the members of the committee of creditors. It will have to be given to the suspended management. It will have to be given to some large operational creditors whose debt value is more than or equal to 10% of the total. Right? Generally, a notice of 5 days is given, that is 5 days notice in advance is sufficient. In emergency cases, we can reduce it down to 24 hours also. But if the meeting is going to be attended by the authorized person, then in that case, 48 hours notice has to be given at least. Okay, now these authorized representatives, etc., these people, authorized representatives or authorized persons, can vote in the meeting, but COC can also vote in the meeting. Okay, but the suspended management cannot vote in the meeting, the operational creditors cannot vote in the meeting. That is very, very important. And creditors can attend this particular meeting even through an authorized representative or even through an authorized person, but their cost will be borne by the creditors themselves. Okay, their cost will be borne by the creditors themselves. That is not an insolvency process cost. And whatever decisions we are going to take in this particular meeting, that will be approved by a majority of at least 66% of the voting power of the financial creditors, or 66% of the people who are there in the committee of creditors. Okay, this was talking about the meeting of the committee of creditors. How is the meeting conducted? To whom are we supposed to give the notice? How many days notice is to be given, etc. Now, a meeting will be treated as a valid meeting only if there is a proper quorum. Only if there is a proper quorum, then only the meeting will be valid. Ma'am, what is proper quorum? Quorum means a voting of at least, attendance of at least 33% of the COC. Okay, only attendance of at least 33% of the COC. Suppose if we are not getting that much, then the meeting gets adjourned to the next day. Same time, same place, etc. And in the adjourned meeting, if there is no quorum, then okay, fine, no problem. The persons who are present there will form part of the quorum, and it will be treated at least as a valid meeting. Okay, it will be treated as a valid meeting. Now, RP comes into picture. He exercises all his powers, he exercises all his duties, he takes the help of the just like as of your IRP, he takes the help of the experts, he'll appoint auditors, he'll appoint experts in whatever field it is required. He will again maintain a list of the updated creditors if required, because suppose if both IRP and RP were different people, then it also becomes the responsibility of the RP to check the list of the creditors with whom we are going to do the settlement. Now, very important 3 points here is, the most important work of the resolution professional now is he is going to invite resolution applicants. Okay, resolution applicants are nothing but the masterminds who are going to come into the picture, that yes, they have the ideas to revive a particular person or to resolve a particular person, and they are going to suggest a resolution plan. So he is going to invite people that please come and share your ideas. For that purpose, we will require a document called as information memorandum. Okay, a document which contains all the information about the corporate debtor. We are going to maintain such a document. It is nothing but the summary of all the financial information about the corporate debtor, which is going to be used to prepare the plan. And then once the plan, etc., is prepared, he is going to present the plan. RP is going to present the plan first before the COC, and if the COC approves, then the plan will be presented even before the adjudicating authority. Right? Now a few points about the authorized representative. Now a few things are very, very common here. Authorized representative is the person who is going to represent the creditors in the meeting. So he has to act on behalf of the instructions given by that particular creditor only. He cannot go against the instructions which have been given by the creditor. If creditor has given certain instructions, he will have to vote accordingly in the meeting. If creditor has not given any instruction to the authorized person regarding voting on a particular matter, then he cannot vote at all. Okay, he cannot vote at all. Then authorized person has got the right to vote. Okay, he is acting just like a proxy, but he has got the right to vote. one important thing here is whenever he is voting for the purpose of section 21(6)(a), whenever he is voting for the purpose of 21(6)(a), then in that case section 21(6)(a), if you recollect that class of creditors, debenture holders, etc., then he will vote. First he will do an internal voting, he'll take a percentage that what more than 50% people say, and same thing is going to come in the meeting and is going to vote accordingly. Like example, if there are 1,000 debenture holders in the company, we will not consider the individual voting of 1,000 debenture holders. We will see what more than 50% of the people are telling, and accordingly we are going to come and vote in the meeting of the committee of creditors. But this is an exception. This is an exception in case of voting done under section 12A. Voting done for the purpose of section number 12A. 12A was talking about withdrawal of the application. That is, whenever we are voting for withdrawal of application, then in that case 90% voting was required, and first for that we are not supposed to do an internal voting. Here we are going to take individual voting of the committee of creditors or individual voting of the creditors, and by that we are going to find out whether at least 90% of the people are agreeing to this particular fact or no. Okay, while exercising all these things, while doing all these things, while inviting resolution applicants, etc., or at any point of time, if the COC is of the opinion that no, this RP is not working properly, we should change this particular RP, then yes, the RP can be replaced by a voting of at least 66% of the COC. Will forward the proposed name to the adjudicating authority. AA will forward the name to the IBBI. It will take the confirmation from the IBBI within a period of 10 days, and then will take a return consent from that particular person, and then this new person will be appointed. This new person will be appointed as a new RP in this particular picture. Till the time the new RP comes into picture, till that time the old RP is going to continue. This is how the new RP comes into the picture. Now there are a certain list of transactions for which we require the approval of the COC. You need not by heart this particular list, but they have listed a few transactions for which the approval of COC is required by a voting of 66%. If you do not take the approval of the COC, then in that case the actions that you have taken or the decisions that you have taken will be totally treated as void. Okay, now let's move towards the resolution plan. Like, how is it actually prepared? For that purpose, first of all, the resolution professional prepares an information memorandum, which was nothing but the summary of all the financial information about the corporate debtor. Okay, then there will be a few people who cannot become this resolution applicant. Okay, there are 10 people who cannot become a resolution applicant. I'll just give you the keywords for that. Any person who is an undischarged insolvent, he cannot be a resolution applicant. He himself is a defaulter. Any person who has been designated as a willful defaulter as per the RBI guidelines. Any person whose account was classified as NPA. Any person whose account was classified as NPA for a period of at least 1 year. Then in that case, that person cannot be appointed as a resolution applicant. But if suppose this person is a financial entity only, if this person is a financial entity and his account has been classified as NPA, then he is not covered up here. Example, SBI is having an account with RBI, or it is having a loan with RBI, and it is a NPA, it is having that account as NPA there, but they are exempted here because for them it is an ordinary course of business. Then after that, if any particular person has been convicted of any offense under the 12th schedule and has been imprisoned for 2 years or more, or if any person has been convicted under any particular offenses and has been sentenced to imprisonment for 7 years or more, then in that case, you cannot be appointed as a resolution applicant. You can be appointed, you can again come back into the picture, but only after a cooling period of 2 years after your release. Okay, then after that, any person who is disqualified to be a director of the company, any person who has been prohibited by SEBI from accessing the securities market, any person during his tenure, suppose if the company was involved in any preferential transaction, undervalue transaction, and if you were sitting in the management of the corporate debtor and all these negative things happened during your tenure, then you cannot be a resolution applicant. If suppose you as a guarantor, if you did not fulfill your promise about about paying the money as a guarantor, if you did any default as a guarantor, you cannot be appointed as a resolution applicant. If you did any of such disqualification in any corresponding law outside the country, if then you are not treated as a resolution applicant, or you cannot be appointed as a resolution applicant. Or if, say for example, you are a very clean person, but your connected persons falls under any of these categories, then you will be disqualified to become a resolution applicant. Okay, these are the major 10 pointers. Or these are the major 10 persons who are not eligible to become a resolution applicant. Okay, now listen. Once you have prepared the information memorandum, that document is prepared. After that, you will invite people to be resolution applicant. Resolution applicant can be any person except for a person who was ineligible under section 29A. So any person who is certifying himself as a resolution applicant, he'll have to give an affidavit. That I don't fall under the disqualifications of section number 29A. Okay, then likewise, we are going to have many resolution applicants coming into the picture. Everyone is going to submit their plans. Everyone will come and submit their plan to the resolution professional. They will submit it to the RP. RP will do some 5 to 6 basic checks. Ma'am, what all basic checks? First of all, whether the insolvency process cost has been considered or not, whether the debts of OC has been considered or not, whether it provides for management of affairs in the future. How is the business of the CD going to be managed in the near future? How are we planning to implement and supervise the plan? Whether the plan contravenes any existing law, or are we fulfilling all the requirements of IBBI or not? All these basic checks, these 6 basic checks will be done by the resolution professional. If resolution professional things fit, yes, all the 6 points are met, there is no issues in that, then the RP will go and submit that plan. Before the committee of creditors. Committee of creditors will approve the plan by a voting of 66%. They will even check the viability of the plan. Okay, if the plan is approved by the committee of creditors, then in that case we will go and submit this plan. The RP is going to submit this plan before the adjudicating authority. The plan can be anything. It can even contain internal reconstruction. It can even contain external reconstruction. Anything. Okay, anything can happen there. Once you go and submit the plan before the adjudicating authority, now the adjudicating authority will again satisfy itself with the similar things, whether the legal requirements have been fulfilled or not, whether there is any contravention or not, whether the process cost have been provided for or not, whether the debts of OC has been considered or not, whether the RP has done everything properly or not. All these things will be checked by the adjudicating authority. Then the adjudicating authority, if it thinks fit, then it will approve the plan. Once it approves the plan, then the moratorium comes to an end, and all the records etc. are put up in the information utility, and the case is closed there itself. Okay, one strange thing which happens here is one extra responsibility which has been put up on the resolution applicant. One extra responsibility that is put up on him is that he has to go and take the required approvals from necessary laws within 1 year from the date when the plan was approved by the adjudicating authority. And in case it is also affecting the Competition Act, that is in case of mergers amalgamation, then we also have to take the approval of the Competition Commission of India, but that has to be taken in advance before the plan is presented or before the plan is approved by the COC. Okay, even this is the responsibility of the resolution applicant only. So here we considered the case where the plan was approved. Okay, if the plan was approved, then well and good, no problem. Suppose if the plan gets rejected, then we are going to move towards the liquidation. Okay, are there any basis? Suppose if the AA rejects the plan, or say for example if AA approves the plan, can we go and file an appeal? Answer is yes. There are certain restricted grounds on which you can go and file an appeal, not on the basis of business viability, but on the basis of legal requirements. Example, if the plan has contravened any law, if the plan does not satisfy any of the requirements of IBBI, if there was any big mistake done by the RP during the process, if the debts of OC was not considered, if the insolvency process cost was not considered, then only on such grounds the appeal can be filed. Okay, we are filing the appeal against the order of adjudicating authority, that is NCLT. So we will go and file an appeal before the NCLAT. Okay, now another thing, another standalone section, another altogether different section was section number 32A, where they say that imagine a circumstance where the plan is approved. Okay, adjudicating authority has approved the plan. So now we are going to start with resolution. Okay, all these things happened, like insolvency, etc. happened because there was some default which was done by the corporate debtor in the past, which led to such a position. But now they are telling that if you want to resolve this corporate debtor now, and if you have done a total change in the management of the corporate debtor, or if good people are involved in the new management now, non-defaulting people are involved in the new management now, then please don't hold the corporate debtor liable now. Please don't initiate any prosecution against the corporate debtor now. Now it's resolved. Now we are moving ahead. So please don't punish them. This is what they are trying to say. So we cannot take any action. Okay, we cannot impose any fine, etc. on the corporate debtor, that is on the company or the LLP. But the old people who were there in the old management, that is the person in charge, directors, employees, designated partners in case of LLP, etc., we can still proceed against them. Okay, they can be imprisoned, they can be fined, they can be punished, everything can happen, because this is nothing but lifting of corporate will. These were the people who were involved in such fraudulent activities, because of which the CIRP of CD is happening. So don't punish the CD, don't punish the entity, but you can punish the people who were behind it. Okay, and at the same time, when we are talking about the corporate debtor, you cannot take action against them. Like you cannot impose fine, you cannot even seize their property, you cannot do their provisional attachment, confiscation. No, of entity cannot be done, but of the people who were involved in the management, yes, you can proceed against them, because they are the most important people, because of whom the CD is now undergoing this CIRP. Okay, so don't punish the entity. Conclusion is, don't punish the entity, but you can punish the persons who were responsible for doing all these things. Okay, completed with the resolution part. Now let's go to the liquidation part. Say for example, suppose if the adjudicating cases where liquidation can happen. Say for example, if the adjudicating authority does not approve the plan, or if the COC by a voting of 66% themselves says that let's go for liquidation, or if we could not complete the process within 180 plus 90 days or 330 days as the case may be, or suppose if the corporate debtor still contravenes the plan. Once it was approved, now they contravene the plan, then all the other persons who are aggrieved, now they can go and make an application to the adjudicating authority, sir, please liquidate. These are the cases which can lead to liquidation. Right now, when liquidation happens, after that, the COC is totally dissolved now. Okay, the COC totally goes out of the picture. Now there is a person who will be appointed called as liquidator. By default, who is going to be the liquidator? The person who was the RP, that same person can be a liquidator if he gives his return consent. But we may decide to change this liquidator as well. Suppose if the plan which was submitted by the RP got rejected, or if, say for example, the resolution professional did not give his return consent, or say for example, when IBBI says that let's change this liquidator, then in that case we can appoint a new person as a liquidator. Again, the name recommendation will be taken from the IBBI within a period of 10 days, and a new person is going to be appointed. He comes into the picture. Now he takes all the control from the resolution professional. He is going to take the process ahead. Okay, for this he is going to charge remuneration, which will be paid at different stages. Okay, he'll exercise all his powers, he'll run the business, he'll again prepare that asset memorandum, statement of affairs. If you recollect, he will again collate the claims, he will verify the claims, he will run the business. If he thinks that it is in the favor of the corporate debtor to fight a legal case, then he will fight a legal case on behalf of the corporate debtor. He will try to sell the movable, immovable property. Like basically for that, he'll first prepare the liquidation estate, and then he'll try to sell the properties at the best possible value. He will pay off the liabilities. These are the powers and duties of the liquidator. And while exercising all these things, liquidator is gathering all the information about the corporate debtor. He is trying to understand the corporate debtor. So if any creditor comes and asks the information from the liquidator, then the liquidator will be obliged to provide that information within a period of 7 days from the date of request. Then after that, once the liquidator is doing all these things, now he'll actually start working on it. How will he work on that? How will he work on that? First of all, thinking from the assets point of view, he'll prepare a liquidation estate. Liquidation estate means which all assets can be sold, which all assets cannot be sold. Which assets can be sold? Any asset over which we have ownership right. Any asset over which we have ownership right but which is not in our possession. Any assets which belong to our branches, that can be sold. Any asset which was given as collateral security, that can be sold if that person has relinquished the rights. Any encumbered assets can be sold. Example, I had given you the example of debenture redemption investments. Debenture redemption investments which we had kept separately for the debenture holders. All these assets, cash balance, bank balance, amount realized from the debtors, etc. can be used for the purpose of liquidation estate. What cannot be used for liquidation estate is any asset over which we do not have any ownership rights, bailment contracts, personal assets of the shareholders, personal assets of the management, or any other assets which has been specifically specified by the IBBI, or say for example any assets which is belonging to any other entity, that is subsidiary or a group company of the corporator. Those assets do not form part of the liquidation estate, so those cannot be sold. Okay, once your liquidation estate is ready, after that liquidator will go to the liabilities thing. Okay, for going to the liabilities thing, it will require different information. It will require various information which it can get either under IBC or it can even get from the data bank of the other authorities. So IBC has given full power to the liquidator that whichever information you want to go and access under whichever possible law, you have got full rights to go and access that information, and please try to collect whatever possible information is there about the defaulter. And again repeating that point, suppose if any creditor wants that information from the liquidator. Now the liquidator has got so many information. So now if any creditor wants any information from the liquidator, he can make a request and the liquidator will be obliged to provide that information within a period of 7 days from the date of request. Now going on to claims. Okay, now going on to the claims. We did the asset part, we collected all the information. Now the liquidator is going to collate the claims, verify the claims, and will start paying them off. First of all, whenever this liquidation got started, means whenever the liquidator was appointed, from that day within a period of 30 days, he will collect all the claims. Okay, he'll verify the claims with the information that he is having available with him. If any creditor wants to do any changes in that, if anyone wants to withdraw it, etc., we give them 14 days from the date when they submitted it. Okay, once all these days are completed, after that the liquidator will take a time period of 7 days and it can either accept it or it can reject it. For rejection, it will have to give reasons, and against rejection, appeal is possible before the adjudicating authority. Now we are going against the liquidator, so appeal against the adjudicating authority is possible. Now ma'am, how to do the payment? Two sections will be important here, that is section number 52 and section number 53. When we go to section number 52, when we talk about the secured creditors who are having some of our assets with them, so what two options do we give to them? First option we give to them is you keep the asset. If there is and you sell it. If there is any surplus, pay back that surplus to us. If there is any deficit, we will pay it to you. Means you realize the security interest. Okay, another option is we'll tell them please relinquish the security interest. Means they will relinquish it. Means they will give the asset back to us and we will pay them normally as per the sequence of section number 53. Okay, while say for example realizing the security interest. Okay, while realizing the security interest, suppose if the secured creditor faces any resistance, means he is facing some restrictions at the time of selling the asset, he can go and file a complaint or he can go and make an application to the AA that sir, I am not able to sell this particular asset, please pass an order. And then the AA will help the secured creditor to realize this particular asset by passing an order on the corporate debtor. Corporate debtor would say that please don't sell my asset. Secured creditor is very keen on selling the asset. So now if we are facing any problem in this, then in that case we can go and make an application to the adjudicating authority and we can sell it off. Now the most important thing, that is the sequence of the payment. What is the sequence of the payment in case of liquidation under IBC? So the sequence is, first of all the process cost will be met. Okay, insolvency as well as liquidation, process cost, not the liquidator's remuneration. Okay, next two things will be paid equally, or we can say proportionately. That is, first thing, workmen's dues for the last 24 months before the insolvency commencement date, and the secured creditors in case they have fully relinquished their particular security. These will be paid in the ratio of their debts equally. Okay, then after that, third one was when we are paying any amount to the employees for the last 12 months before the insolvency commencement date. Then fourth one, we were paying to the unsecured financial creditors. In the fifth point, again to two of them we are going to pay it together. First one, government taxes for the last 2 years, and not the insolvency commencement date, I should have mentioned it as liquidation commencement date, just before the liquidation commencement date. And in the fifth point, first one will be government taxes for the last 2 years before the liquidation commencement date, and in the second point we are going to pay to the secured creditors in case of any deficit where they had realized the security and there was any deficit. This was there in the fifth point. Sixth one will be all the other debts, seventh one will be preference shareholders, and eighth one is going to be the equity shareholders. This order cannot be changed, it has to be as it is. And what about the liquidators remuneration? Liquidators remuneration will be paid. Liquidators remuneration will be paid as in when, on whatever stage it is payable as per the agreement between the liquidator and the adjudicating authority. Okay, before he finally pays the amount to the creditors, he has to make sure that he submits that information memorandum to the adjudicating authority. That is very, very important. Once they start realizing the assets, once all the assets have been fully realized, from that day within 90 days, all the disbursement should get completed. Why to delay in making the payment to the creditors, right? And after that, once the liquidation has totally got over, means once the balance sheet has become zero, after that the liquidator will go and make an application to the adjudicating authority for dissolution. Then the day when the adjudicating authority passes that particular order, that date is called as the DOD, that is the date of dissolution. This dissolution order will be forwarded to the authority with whom we are registered, example ROC, within a period of 7 days, so that the entire process gets completed. Now, by default, the liquidation should get over within a period of 1 year. Okay, by default, everything should get over within a period of 1 year. If not over, then also okay, you can just make an application to the AA that why it did not get completed within a period of 1 year. With this, your liquidation process gets over. Next thing which comes up into picture is fast track CIRP. Fast track CIRP is applicable basically for some small corporate debtors. Ma'am, how do you define a small corporate debtor? So, small corporate debtor can be a small company as per the Companies Act. It can be a startup entity but not a partnership firm, or it can be any unlisted company whose total assets does not exceed rupees 1 crore as per the immediate preceding financial year. For these people, if we want to go against these people, then we can initiate a fast track CIRP. The procedure more or less remains the same. What is different here is, if you have planned to go for fast track CIRP, then the process should get over within a period of 90 days plus a maximum one-time extension can be provided to you similarly, but by a voting of 75% of the COC. Okay, this is mainly the provisions about your fast track CIRP. Going to the next concept, which is talking about the voluntary liquidation. Voluntary liquidation is altogether different. First of all, this is applicable only to the corporate persons. Okay, only to the companies. Now, if suppose you have not done any default, okay, you have not done any default, you are not insolvent, you should not be insolvent. If you are insolvent, then you cannot come under this particular section. If you are not insolvent, if you have not done any particular default, but you simply want to close down your business, then in that case, you fall under section number 59 of the IBC 2016. For this particular purpose, first the majority of the directors will sign a declaration. This declaration is going to contain the wordings that we have done. Majority of the directors have done full inquiry into the state of the affairs, and that we do not have any debt payable, or if at all there is any debt payable, then in that case we have sufficient assets to pay it off. This is one thing that you will certify, and the second thing that you will certify is we are not doing this for defrauding any particular creditors. Right, then after that, this declaration will also be attached with, like, a few documents that we are going to attach along with this declaration is audited financial statements of the last 2 years if possible, and the report from a registered valuer who is going to value the assets of our company. This declaration will go and submit it to the IBBI. Okay, once you go and submit it to the IBBI, forget about it. Then within 4 weeks, just pass a special resolution, appoint a liquidator who is going to be an IP. Either you simply pass a special resolution that we just want to close it down, or suppose if the period which was written in the AOA, that period has expired, or if the purpose for which the company was incorporated, that event has been occurred, means that everything has been done. So now you want to close down your business, so you simply pass a resolution. Along with the resolution, make sure that within a period of 7 days, you also take the approval of the creditors by a voting of at least 2/3 if at all, you have some outstanding creditors in the company. Once the resolution is passed, go and inform this to the IBBI, go and inform this to the ROC that we have passed the resolution also, and if required, we have taken the approval also. The day when the resolution was passed, the day when the special resolution was passed, that date will be treated as the date of commencement of the liquidation proceedings, means of the voluntary liquidation commencement proceedings. Once this is done, after that, the liquidator who had come into the picture, he'll nullify your balance sheet, he'll bring your balance sheet to zero. After that, he'll go and make an application to the adjudicating authority. Adjudicating authority will pass the order. The day when he passes the order, that date is called as the date of dissolution. Then within a period of 14 days, we go and file this dissolution order with the authority with whom we are registered, and with this, your voluntary liquidation proceedings totally come to an end. Then going on to the special type of transactions, mainly 4 type of transactions. First one was preferential transaction, next one was undervalue transaction, next one was transaction defrauding the creditors, and the last one was your extortionate credit transactions. In case of preferential transaction, suppose if liquidator or the RP is of the opinion that a fraudulent preference has been given by the corporate debtor to its related parties or to persons other than related parties, because of which we have put that creditor in a better position as compared to the other creditors, then this can be treated. This is a subjective thing which will be decided by the liquidator or the RP, that whether it is a preferential transaction or no. If the liquidator or the RP is of the opinion that yes, it is a preferential transaction, then they will go and make an application to the adjudicating authority for avoidance of such transactions and to declare such transactions as void. But if these transactions are done in ordinary course of business, then that is okay. Everything has to be proved to the satisfaction of the liquidator or the resolution professional. If this transaction was done with the related party in the last 2 years before the insolvency commencement date, or if it was done with other persons in the last 1 year before the insolvency commencement date, then only this section is going to be applicable. If we are declaring this particular transaction as void, means we are going to nullify the effect, means the preference that we have given to that particular creditor will be restored back, the property will be restored back. If that person has sold that property, then we will recover the value of the property. If that person has earned any benefits out of that particular money, then we'll recover the benefits also. And suppose if the property has been now sold to any third party, then we cannot go and recover it from the third party if the third party had purchased it in good faith. Okay, if he had purchased it for some value and in good faith, or if, say for example, the person to whom the preference was given, if that person has got attachment with that particular property and he wants to, he is ready to compensate the liquidator, then also they say if liquidator is able to get the value of that particular property, then no problem, you can just leave the asset with that creditor. This was your preferential transaction. These transactions can be declared as void by the adjudicating authority. Now going on to the undervalue transactions. Undervalue transactions was such a case where the corporate debtor, or obviously the person in charge of the corporate debtor, they have tried that they want to get rid of the assets so that the assets are not available for sale, or the value of the assets are not available for payment to the creditors. So they try to sell off their assets. They try to either give it as gift for zero consideration, or they try to sell it at a very nominal value. Okay, they try to sell it at a very nominal value, again to the related party or to other than related party, same within 2 years or 1 year before the insolvency commencement date. If the liquidator or the RP comes to know about this, they can make an application to the adjudicating authority to declare such transactions as void. Void is going to have the same effect like we had studied it in preferential transactions. But here one extra thing which had come into picture is, if the liquidator or the RP does not realize about this transaction, but the creditors or any other person in the company, they come to know about this transaction, they can go and make an application to the adjudicating authority that, sir, see, this is an undervalue transaction. So the first they'll go and make an application to the liquidator or the RP. If liquidator or the RP takes the step, then well and good. If liquidator or the RP are not able to take the necessary steps, then the creditor can directly go to the adjudicating authority and tell to the adjudicating authority, sir, please declare this transaction as void. That is one thing. And sir, please take necessary action. Please take necessary action against the liquidator or the RP. That is the disciplinary proceedings against them. These transactions, preferential transactions plus undervalue transactions, are cumulatively called as transactions which are defrauding the creditors. In the first case, it was defrauding a particular group of creditors. In the second case, it was defrauding all the creditors because we are not leaving any assets in the company. So the transactions can be declared void by following the required procedures. And the last one is your extortionate credit transactions. In case of extortionate credit transactions, we have availed any kind of debt. It can be operational debt or it can be financial debt, for which we are doing extortionate payments, to any particular person, which is too much higher than the existing market prices. So in that case, and these transactions have been done within the last 2 years before the insolvency commencement date. Now there is no bifurcation of 2 year and 1 year here. So these transactions have been done during the last 2 years before the insolvency commencement date. So again, the liquidator or the RP can go and make an application to the adjudicating authority to declare this transaction as void and to reverse it, either to reverse the transaction totally or to bring it back to normals. That is, if the interest rate of 24% was charged against a normal interest rate of 10%, then we can even modify. AA can pass an order for modification of the terms of the contract. This was all about your extortionate credit transactions. Now a few different points in the chapter. Suppose if a particular financial creditor has already proceeded for CIRP, then ideally other financial creditors should not go and make multiple applications if the earlier application has been accepted by the CIRP, because even if one person goes and makes an application, that would be sufficient, because now everyone will form part of that CIRP. Real estate allottees are deemed as financial creditors. This we have already understood. And after that, two important case laws there. One is the time which is taken by the adjudicating authority for determining the default, that is 14 days, and the time given by the adjudicating authority for rectification of that rejected application, that is 7 days. For that particular purpose, they are telling that you can treat these time limits as directory in nature. And in case of OC, we have to remember one thing: if suppose there is any existence of dispute, suppose if the case is going on in any court or in arbitration, or arbitral award is into appeal, then in that case we cannot proceed for IBC till the time the cases under the other laws have been closed down or withdrawn, or as the case may be. These were the two important case laws out of all the case laws that you have to remember. And with this we are done. With the super quick revision of IBC in 1.5 hours. I hope you are very, very clear till here.